30% pre-buyback. Post-buyback, it will rise to 31.37%. This may be seen as a sentimental positive. Hero MotoCorp and Ather together is what we should look at. Hero MotoCorp has approved the purchase of additional equity shares of Ather in a board meeting held on 27th August. The investment is part of a larger funding round of Ather. Hero will invest about 1758 crores, and Ather is meanwhile looking at a new platform and new capacity expansion. So just the doubling and trebling down on its investment in Ather is what makes this story exciting and might be a bigger pop for Ather than for Hero. But Hero has seen 7x returns on its investment in Ather, and post this latest move, Hero's stake will now rise to 32.58%. Hero first invested in Ather back in 2016 between 180 to 200 crores. The market value right now is 14,000 to 15,000 crore rupees. Talk about picking them right.
Yeah,
absolutely. This is definitely an example of that.
No, absolutely. And it's an old strategy for Hero MotoCorp. I think a lot of investors in Hero MotoCorp, even back then, have accounted for the fact that they have electric orientation towards Ather.
But you could have gone so wrong when you went and picked out which horse to back, right? Yeah. You're talking about when the initial investment in Ather had happened, and that it was not clear that it's going to be such a winner. So it's always a risk you take.
It is a risk. But I would argue, though, on the other side, to say that these are generally picked early, and if they flip, they flip. Yeah. So from Hero's perspective, you compare the market capitalization and then the investment size at that time, it was okay, fine. If it works, it works.
No, for them, of course, no gain. For us to watch and learn whether you can pick such winners whenever you get the chance.
Absolutely.
No, but to be fair, a large investment in a space that they understand really well, and a bet that they consciously didn't take from their own books and went through this. So therefore, it was
strong strategy.
I mean, it was a strategic bet and not necessarily how do I say?
A small little thing.
Yeah. So in a sense, it's not dissimilar. Okay, you can argue that they play in the same space, but Bajaj Auto's acquisition of minority stake initially of KTM, which eventually went to practically half the ownership, right? So, and at that time,
Bajaj is choosing to do EV themselves.
Yes. But I'm saying the investment that was made in an entity that was outside, that was not necessarily doing incredibly well, and then it turned around and picked up dramatically.
Yeah.
So, of course, this is completely different in that ICE versus electric, which Hero didn't have. Anyway, let's talk about New India Assurance. Generally, you talk about companies getting tax notices, and we've learned to take it with a pinch of salt, because invariably those numbers scrunch up quite dramatically. In this case, well, it's not exactly monopoly money, but they've gotten income tax refund of 781 crore rupees for the assessment year 2023, and that certainly is good news for shareholders of New India Assurance. RPP infrastructure projects, thumbs down here, because a significant order, 206 crore, and that includes 18% GST, but it's a Tamil Nadu work order that has gotten terminated. The company had in fact said that it commenced activities pursuant to receiving that work order, and in their words, incurred substantial expenditure towards the project. Now that it is cancelled, they would likely have to write that expenditure off. So it's going to be important to take a look at how this one reacts in trade today. Finally, it's an interesting one, and we spoke about this earlier. Federal Mogul Gyotze, that's a German name, and I'm pretty sure that I'm getting the pronunciation right. But we were talking about it in the run-up to the board meeting, where there was a conversation about the dividend payout. And the debate in the newsroom was whether they'd be able to pay out such a substantial dividend. They hadn't paid a dividend since 2005. And then suddenly out of the blue, you're talking about a 16-17% dividend yield, and 7.5 rupees per share special dividend has been announced. And wait for it, 86.5 rupees, or rather, that is a special dividend. The earlier one is interim dividend. So total dividend of over 90 rupees per share for 10 rupee face value. The record date for that payment has been set at 4th of September, and the stock is up as much as 15% since the start of August. The last dividend, as I said, was paid in 2005. The current reserves sit at 1,381 crore rupees and cash in books at 829 crore rupees. That dividend payout would entail a distribution contribution of over 500 crore rupees. So this is an auto ancillary company manufacturing pistons. It is owned by an entity that wanted to pull it off, delist it.
Yeah.
That was opposed, and so essentially it's taking money off the table.
Yeah. Well,
75% promoter ownership, close to.
yeah. Well, multiple reasons, but multiple sales. I think that's what we're seeing these days. Okay, I'll start off with a positive. Actually, all three are positive on my list, to be very honest. The first one is Wipro, and it's expanded partnership with Google Cloud to accelerate enterprise adoption of Gemini and agentic AI. Wipro will create a workforce of 10,000 AI certified specialists to develop new Google Gemini based enterprise solutions. So this is really putting a body count or head count to work in this sphere as opposed to outsourcing it, if you will. Now, how would the street possibly take it? Well, the ADRs had moved about 5 to 7% in US pre-market. The stock is trading near 52-week lows, so it's not that it has had a great rally, and therefore there will be sell the news, if you will. Just that it's not a disclosed mega deal TCV or a guaranteed incremental revenue. It is an investment in the right space and a collaboration with presumably the right partner. So the street may reward this, so keep an eye out for this one. You don't normally see Wipro at the top of the charts. Could today be different? Indoco Remedies has executed a deal to sell a Mumbai land parcel for 64 crores. Not dramatically large. The market cap is about 2,200 crores. So from that perspective, 3% of the market cap, but 64% is about 6% of the gross debt of the company. And it's been a company that's consistently been selling non-core in order to pare down the debt. It's not alarmingly high. Debt equity is 1.1 or thereabouts. So maybe a bit of a reaction to this stock. And then the third thing, something that we spoke about yesterday, it broke yesterday, if you will, and Macquarie's come out with a note, so I thought it was important to highlight this. They've come out with a note on Power Capital Goods. They say the US order is a tailwind for India grid companies because India is not subject to the US arms embargo or sanctions. It is a strategic partner of the US with Indian grid companies already supplying equipment to the US. Macquarie believes that this order is generally more an opportunity than a threat for Indian grid companies, and therefore companies like GE Vernova T&D, Hitachi Energy, Siemens Energy and CG Power stand to benefit. It can potentially, Macquarie says, companies can potentially ramp up exports to the US as each of these companies is in the midst of a major expansion. GE Vernova already exports 33% from India and not just US but also other markets. Exports for Hitachi Energy is about 26%, Siemens is about 29%, CG Power is just below 5%, so maybe there's a potential, but Macquarie sees a potential with China Plus One playing out in the bulk power systems and continue to like the India grid companies. These are expensive names, but Macquarie believes this is a shot in the arm. So clarity out here, India is not subject to the same rules as China is, and therefore it is indeed an opportunity for the Indian grid companies. So watch out for them. They had a rally yesterday. Let's see if that continues today.
And a few other notes that we'll talk about. CLSA has a take on Bajaj Auto, which is interesting. Watch out for that. But I thought this one was cool because IPO season, why should we just restrict it to domestic markets? Anthropic's IPO is coming. And I think enough of our viewers will be interested in that as well.
Yeah, for sure.
Prospectus may be unveiled right after US Labor Day, and it's proposed to allow existing shareholders to sell shares in the IPO. Lockup period may exceed 180 days. And the listing is expected to launch as early as end of September to early October. Final timeline remains subject to adjustment. Market bets on a valuation exceeding, hold your breath, $1 trillion. So another mammoth scale IPO coming in the US that you should keep an eye out for. But stay tuned. We'll take a very short break. We focus sharply on all domestic plays when we return. All the top ideas for you this Friday and of course extending into next week. Stay tuned.
When outcomes matter, you trust accuracy. and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
लॉर्ड्स मार्क इंडस्ट्रीज हमेशा आपके साथ। इस शेयर मार्केट में हाथ में हो कोई भी फोन, यहाँ है सबका इक्वल हक, क्योंकि आप जो भी हो,
जहाँ से भी हो, जैसे भी हो,
ये मान सबका है बॉस। तो SIP करो, इन्वेस्ट करो या IPO, डाउनलोड ग्रो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Arunesh Chawla, the DPUM secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has a good futuristic investment plan. And if you see the market analysts and the feedback, this is a stock which is forecast to go upwards.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores. In FY27, do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
One day, a cooling towel है. ये positioned as a heat protective gear. I can feel the cooling. We have a couple of lakh workmen working at different sites in very harsh conditions, and I'm more than happy to get your product to all of them.
This is such a moment for him.
हमने ये
Welcome back. You're watching India Market Open. Let's pull up the implied very quickly for you before we move ahead. It's really saying nothing here nor there. The real action, frankly, is in our studios because they got the memo and they showed up. We decided we'll do a little bit of, at least color festive celebration here in our studios, and the award for best dressed is going to Parag Thakkar. Parag bhai, very good morning. Fantastic to see you like this.
I hope it happens in market like this. Because market, everybody is actually bored and there's a lot of fatigue in the market, which I am seeing across.
No, market पे बाद में आएंगे. Market पे बाद में आएंगे. देखो आप सब बहुत अच्छे लग रहे हो, everyone. ठीक है, बट द ग्लो अप ऑफ द डे हैज टू बी दिस. और डायरेक्टर साहब आपको ना मेरी तरफ से फुल फ्रीडम है. इवन व्हेन आई एम स्पीकिंग यू कैन गेट हिम इन क्लोजर. ही इज लुकिंग दैट गुड टुडे. द कॉम्बिनेशन इज सो आई कैचिंग. वी हैव गिवन हिम इनफ एंड मोर कॉम्प्लीमेंट्स टू ब्लश. वी विल कीप डूइंग दैट थ्रू द शो.
Parag, great attire, but Kush, not bad yourself.
Thank you so much.
Can we say that about the markets?
हाँ, एक्चुअली ना इन्होंने वो थंडर स्टील कर दिया वहां भी. He summed it up very well कि कुछ हो ही नहीं रहा है मार्केट में, especially if you're trading indices. Now yesterday I said कि हम निफ्टी पे व्यू नहीं देंगे. आज भी things aren't as different, but there is a, if you can call it small, but there is a technical event that has happened that just bears pointing out. If you look at the April lows and you draw a rising trend line support, yesterday Nifty's broken that. Now yes, we've been speaking about 24,000 as that big support, and we've seen a rebound once or twice from those levels, right? But from a technical standpoint, this rising trend line support breaking is not a good sign. So if we don't, in all likelihood, we might test 24,000 yet again thereabouts. If that's not held, there is a gap at 23,800. That might come into play. Uske beyond, like I say, we'll take each day as it comes. But for now, the trend does not look good for the Nifty. And Bank Nifty also. Remember, we spoke of 57,500. Straddle at play. Yesterday, there was short build-up as well. HDFC Bank not performing. PCR already at 1.16, 1.2 thereabouts. So this is at best right now a range play. You have to keep booking profits at higher levels. Perhaps closer to 50,000, you can consider a long position or a re-entry. Not right now.
I want to ask you about what happened yesterday during close, and I think before we get your stock picks, etc., we need to address the elephant in the room, which is what does it actually do to an investor on an expiry day when you have these kind of swings because of the closing auction session? What is the effect? Because we can keep saying till kingdom come, ye kharab hai, volatility hai, log nahi aa rahe. But what happens to the person who's actually sitting there trying to make a trade?
Okay, so I've said this before that if you're an option buyer, for the first time there is a systemic way of you making money out of this. For the longest time I've said avoid karo, right? Let me just play the devil's advocate here. This is not a recommendation. This is for sure not a recommendation. ठीक है? लेकिन अगर आपको option strategies समझ में आती हैं, so there are strategies called long straddles and long strangles. Basically, you buy a call and a put, of lower strike prices and hope that the index moves out of that range. If you are an option buyer, correct, this is turning out to be actually a brilliant way for you to make money. This is for the first time where the confidence of
brilliant but risky, is it?
देखो जो कर रहा था ना no risky for sure because option का word आ गया तो risky.
For a buyer the risk is always limited, right?
Correct. अब जो कर रहे थे ना, so there's in the market there's something called the hero zero trade. People were already doing it, but पता है कैसे? ठीक है, चांस ले लेते हैं. अब आपको direction नहीं पता, but magnitude है. And when you do straddles and strangles on the long side, you're playing on the magnitude, right? So again, it's not a recommendation, but it's working in the favor of buyers. It's not working in the favor of sellers.
So give me an example of yesterday and the kind of move that you saw. What would this trade have yielded?
So again, yesterday's move in particular, I did not try. But if you see the, in the sense, by the option premium, I did not. But if you go about 2 sessions back, which is Thursday, right? I think there was one call option which was trading at about 7 or 8 rupees and ended up at 35. Now, like I said, agar aap option buyer ho, kudos to you, make money out of it. But if you're a seller, you're taken to the cleaners, right? One more point I have on this. देखो अब तक हम बात कर रहे हैं पार्टिसिपेशन इंक्रीज होगा, ऑब्वियसली नया सिस्टम है, धीरे धीरे पार्टिसिपेशन इंक्रीज होगा, राइट? Isn't this akin to the pre-market open session? And if I take a dipstick survey, hand on heart, even for your viewers, let me ask you, how many of you are going out and placing trades in the pre-market open session? अगर आप वो नहीं कर रहे हो, what is the possibility that you are going to participate? Of course, it will increase. Will it increase?
So you're saying मत participate करो.
The safest way is मत participate करो.
नहीं तो 15 मिनट आपने काट दिए ना फिर से.
Exactly.
So just as you're saying that it's favoring option buyers, it's not favoring option sellers.
Massively.
So therefore, why should anybody participate in right options?
And that is why you will see volumes going down. You will see prop volumes going down. You will see institutional volumes going down because market में volume तो sellers ही बनाते हैं ना, because they are the ones taking the bigger risk.
Yeah. The devil's advocate argument in this is that when a system is new and it's not fully discovered, doesn't have the right volumes, never mind the fact that in the earlier system you used to write options by the dozens and at times make money and at times lose money. Right now the risk reward is not in your favor if you are writing options, simply because on the expiry day the prices can get skewed on the index side, index option side largely, and therefore you are rather safe if you do not understand the whole risk and ecosystem to stay out of it until the system stabilizes. Now, going by what the SEBI chair has said, that they are not going to roll this back in a hurry, they are going to wait for more participation. The system is here to stay. Wait for it. If it means 3 months, it means 3 months. If it means 6 months, it means 6 months. Don't trade in options. Don't keep the options which you have sold open after 3:15 on expiry day. That's the simplest rule.
What if you're an option buyer? What do you do?
See, if you're a buyer, right, then you know the extent of your loss, Kush. Simple.
I'm on the same side.
Yeah.
मैं भी exactly यही चीज बोल रहा हूँ. अब अगर आप option buyer हो, then just perhaps it might turn out to be in your favor. It's just that because ये risky space है और हम इतने risky trades ऐसे ही openly blanket recommend नहीं कर सकते हैं.
Yeah.
But from a strategy perspective, that is paying off much better. That's the point.
Just the last point here though, that if you're an option buyer, you should go in with the knowledge of the risk that option can very quickly go to zero. if indeed the price, underlying price moves very swiftly as it does this time around, so you may not get a chance to cut. So वो उतना risk है, but आपको पता है कि आपका कितना risk है.
Parag bhai, in your view, इसका purpose क्या है and इसका impact क्या होगा?
No idea. I'll refrain from commenting on it.
But sorry, but I can comment on this. But yeah, Parag bhai, please do.
You please tell me.
So as a market participant, you have no view on cash?
No. Basically, see, we also have a different trading desk which trades in options and all, and they are masters of it. So I stay out of it. I focus only on fundamentals and meeting companies and having my view on fundamentals of the market.
But Neeraj, what is the point that you were making?
No, they are trying to bring the system which is in line with what's happening at every other global exchange. They have had it for a while, and therefore now the system is adapted and the volumes are okay. यहाँ पे we have teething problems. The problem is that our markets doesn't have the liquidity that those markets have, and therefore the teething problems could last for a really long time.
Yeah.
Okay, all right. Should we get to stock calls this morning, Kush?
Yes, indeed. All three of them on the long side. Tata Capital, Shyam Metallics and Happy Forgings is something that I'm carrying forward from yesterday. So Tata Capital has seen a decent up move. Volumes overall in the market aren't anything to write home about, but still fairly decent coupled with that price action to give you the buy call on the momentum side. 387, 400 are your targets. 364 is where you keep that stop loss. Shyam Metallics, I know the structure. If you're tracking technicals very closely and my calls in particular, then this might look very different to you. But this one's got a good price action going for it. From a near-term perspective. So Shyam Metallics for targets of 1070, 1110, stop loss at 1010. Happy Forgings. Now yesterday this consolidated in this 2250 zone for practically all of day, and that's a good sign by the way in the markets, right? So if you have a position you can hold, if not you can still initiate for the second target of 2365 and bump up your stop loss to 2190. And how can I not mention Vintage Coffee? We discussed this yesterday for a second target of 175. 179 was the high, closed at the second target. By the way, yesterday, in a discussion, Somit did mention that he had reported this in the Khabar segment on August 19th, where perhaps a domestic brokerage firm could initiate a coverage on this. So my suggestion, if you have any positions on this, book out about 50 to 75%. You might want to leave in some quantity, if there is a further uptick on this.
Okay, let me go across to another interesting story. We're all about the news this morning. IHH aims to raise its stake in Fortis to 50% over 3 to 5 years through capital infusion or market purchases. Varsha joining in with more details. Varsha, good morning.
Well, good morning. This signals a long-term commitment to the company by IHH, which has planned to raise stake in Fortis to 51%, and this is expected to achieve in the next 3 to 5 years. And the stake currently, if you see, stands at around 31%. Now, how will this happen? Fresh capital infusion and into Fortis is one option, and the other option is creeping acquisition is also being considered. It simply means that stake increases over time gradually and not at one time large deal. Gradually market purchases can raise stake over time. Now why this is important? 51% of course means majority ownership gives IHH stronger control over Fortis, signals long-term commitment to the company. But there's a condition of course by management. Any stake increase must be ROE accretive. Investment should improve returns by year 3, and management basically does not want to value destruction happen. Now lastly, onto the background, just to give a context, IHH is Fortis Healthcare's promoter, of course, owns 31% stake and took control of Fortis in 2018 and is amongst key growth platforms in India. So overall a kind of positive news when it comes to Fortis Healthcare.
Okay. I just want to get a view from you, because this is something that you track so closely, Parag bhai. IHH and Fortis, Hero and Ether, this is something that we spoke about earlier today. So these kind of moves, does it give confidence that there is something that either the promoter or the largest shareholder knows?
Yes, absolutely. 100%. So I am always, Ether, I was very bullish since 750 when we have been talking about it, and I was very positive on this move towards EV also after this West Asia war conflict. Hospitals is a sector generally which I have not bought, but I would say that if I have to buy something, I will buy Fortis kind of a stock.
Really, in hospitals?
Yeah, because here you have a managed promoter comfort that they are going to increase their stake. At least their intent is to increase stake. And market cap is around 69,000 crores, and so on P multiple it looks expensive, but I would say that in hospitals generally EV/EBITDA is the right way to look at it. because it's a capex heavy business. So I would say that if in hospitals I want to buy something, Apollo I have missed, that I have already.
What about Manipal Health? There's an HSBC initiate buy on it today, and I don't know if you can pull that up very quickly. So HSBC, since we're talking about hospitals, HSBC has initiated a buy on Manipal Health with a target price of 1,000 rupees. They're saying economies of scale at play. India's biggest private hospital operator set to sharpen its focus on profitability after doubling bed capacity since FY23. Expect PAT to grow 3x over FY26 to 29 estimate, and net debt to EBITDA to improve to 0.7 times in FY27 estimate versus 3.7 times in FY26. Improving EBITDA margins for the acquired Sahyadri hospitals is a key catalyst, and there was an acquisition recently which wasn't seen as too positive by the street on that day. But this is an interesting one. It's a recent listing as well.
Yeah. No, so basically, see, Manipal
have you looked at Manipal?
Largest private sector hospital, and I know, so it is good. There is no doubt about it. But in Fortis, you have this extraordinary comfort of promoter wanting to increase stake. So that, and that too, they are, I think the intent is they can buy from open market also, which will always give support to the stock price.
Okay, a lot of debate about developments in the Subhash Chandra case, and this is now gotten inputs from both around the country and also overseas. The creditors remain sharply divided, with banks opposing the plan over steep haircuts, while promoter-linked entities backed its approval. Let's talk about who the lenders here are first, and then we'll get into more details on how you should read the case, because it's not as simple as it might seem on the surface. Sharad first. Sharad?
Well, yes, there's going to be a lot of to and fro here when it comes to the creditors, and there are two types of creditors. I'll get you to that. But let's look at the key numbers. The largest exposure is LIC Housing Finance, and they have just received in the order 38 lakhs. The amount is 1,322 crore rupees. Also, IDBI trusteeship, which is there on behalf of Franklin Templeton, HDFC Bank is there, Axis Bank, and Canara Bank, all ranging between 300 to 729 crore rupees. But the list continues. Smaller exposure for IndusInd Bank, Union Bank of India, RBL, multiple claims coming in, and Catalyst trusteeship on behalf of HDFC AMC. These are the numbers, but what's the actual impact and what conversations are coming, especially from LIC Housing Finance and HDFC Bank? Let's talk on that as well. Apart from this money owing, we talk about the total individuals. Look at that, 1,260 creditors are there totally. Also, if you get into more layers, first of all, it started with Indiabulls Housing Finance. They started the personal insolvency petition against Subhash Chandra, and moving ahead, LIC Housing Finance admitted a claim at 1322 crores, which we discussed, but they just got 38 lakh rupees. This is below that 0.1% mark as well. NCLT, they have stated they ordered limited to the insolvency proceedings against his personal guarantor and not as the overall borrowing at entities. This was the clarification coming in from LIC Housing Finance last night, and right now they are retaining all the rights over the secured and the pledged assets. That means more action in the future might be there going ahead as well. For Z also, I mean to say for HDFC Bank also, they have stated they are exploring to approach NCLAT against the NCLT order. This is an appellate authority, by the way, on this as well. Also, let's move on to the other names also. These are the creditor entities which have approved the vote, but there is an allegation that these may be linked to the Z promoters as well. Almost 80% of that vote has come in. But on the other side, we have a lot of banks which we discussed where concerns are there, which we gave you the owing money amount as well, which is there on the screen.
Well, thanks for that, Sharad. And in fact, you know, there's just so much of chatter around the haircuts and system-wide, not necessarily the one that has happened or announced last night, but over the course of years. And somebody who's looked at the banking system very closely, we love talking to him, Abhizar Devanji, founder at NeoStrat Advisors LLP, joins us on the show this morning to talk about that. Abhizar, thank you so much, and thank you for, at such a short notice to talk to us this early in the morning. But it was important because there is a lot of chatter around how optically this might seem like a 99% haircut, but you know, to us on a conversation, the government has said as well that it is actually just optically 99%. In reality, it is not, because there are various factors to it. But there are people citing past instances as well of how haircuts have gone up to the tune of 90, 91, 92%, 70%, 75%, etc. How do you look at this?
Oh, first of all, Neeraj, I must say, first, I am not dressed for today's occasion. You guys are all talking about happy things in life, and we are talking about insolvency. Yeah, but I'm dressed for that. So let me just tell you this. First of all, this particular insolvency is against a personal insolvency case. Now you got to understand the chronology of how this happens. First, his companies were admitted into insolvency, Subhash Chandra's companies. And on the back of those companies, there is a provision to also start a personal insolvency against the guarantor. So what really happens is that companies normally would submit their claims to the core company that's in insolvency and then also file the same claims against the guarantor in a personal insolvency against the guarantor. So this is actually a duplication of claim filed between a corporate insolvency and a personal insolvency against the guarantor. Mind you, personal insolvencies cannot be or have not been notified for individuals whose companies are not in insolvency today. So that's important to understand. So now what happened is, this is actually a case against the claims that can be made against Mr. Chandra's guarantee. Now, Mr. Chandra has reflected that his net worth is around whatever 37 odd crores. And hence he's able to spare out 6.5 crores or 6.25 crores out of his estate to actually honor the guarantee requirement. Now, once the guarantee requirement is honored, the total claims are say around 22 odd thousand crores, out of which 6 crores is going to be met out of the guarantor, and the balance, the creditors will still have a claim against the corporate assets of the company. That's what they say, that we're still going to go after the pledged assets. The issue at stake here is that most of the dissenting lenders, which is the 20% dissenting lenders, are basically saying that this is a foul play because Subhash Chandra's assets a few years ago, 2020, were quite high. And those have sharply declined down to 31 crores. How did that happen? And what is the investigation around it? And is he kind of hiding wealth somewhere else? And secondly, we had this Z warrant issue recently where 600 odd crores were coming out of a promoter holding company overseas. So is there a wealth that has been disseminated out of the individual's net worth so as to not meet the guarantee requirement? Now that is really at question. To that, the courts have said that, listen, it's not our responsibility to comment on the commercial parts of a resolution plan. If 80% of the lenders have approved, there is no provision in law that a lender can stop that. We saw that in the case of Bhushan Power and Steel, where the courts wanted to reverse a insolvency auction and put a company into liquidation, and that had a lot of backfire. So the courts are coming back and saying, listen, that's not happening here. What we are going to do here is we're going to respect the commercial wisdom of the creditors and accept the plan because 80% have approved it. The issue at hand that needs to be addressed, and partly the courts have addressed it, is that the courts have said that merely because the net worth has slumped does not necessarily mean that there is something fraudulent. But the issue is that there is a provision in the IBC Act which talks about evaluating whether deliberately wealth has been moved out so as to not honor a guarantee. Now, what work has been done around that is, I think, what the dissenting creditors will want to go to court and say, because they do not want to lose recourse to the guarantees. While they have the first recourse to the company, they don't want to lose the recourse to the guarantee.
Okay.
By 6 crores, the recourse to the guarantee is lost.
Yeah.
Okay. So, Abhisar, therefore, in your opinion, and to take this thought a little forward, where does it go from here? It's clear that there are dissenting creditors. It's clear that they want to follow through on the point that you've just made. What is their recourse?
So their recourse is, of course, to appeal to the higher court, which is the NCLAT, which is the appellate tribunal of the NCLT courts. They can appeal, but very frankly, there is no provision in law which says that if more than 66% of the creditors have agreed to a resolution plan, the others are effectively dragged into a resolution. What they deserve is the minimum liquidation value, but that's not a concept in in the case of a personal insolvency. In a personal insolvency, I think the courts can say that as long as more than 66% of the lenders have approved, there may not be a need to question. But what can be questioned, and I think what they will do, is the fraudulent aspect, to say how did the wealth vanish, and is there enough investigation on that?
I want to dial back a bit, Abhizar. Hi, Tamanna here. One is that this business of personal guarantee, and which is why everyone's comparing to Vijay Mallya today, and you know how that case went, and he has sort of jumped onto the bandwagon and said that good for you, Subhash Chandra, if you got away with 6 crores, look what happened to me. He put out a post. Harsh Goenka has had some words to say about it as well. This business of personal guarantee, is this the right way for someone? Why should someone first of all take a personal guarantee? Because when the underlying assets on which the loan has been taken are available to pursue, should the banks then be moving to the personal guarantor at this stage?
No, so at this stage or at any stage, Tamanna, let me tell you, there's a basic question of why do banks need to take personal guarantees? If you are giving a loan to a corporate and there is a individual who is running that business, why are his personal assets even attached when you're giving money to a corporate, which is very frankly a separate entity by itself? Now the question is, in India, promoters have a commingled approach between the companies that they run, listed or unlisted, and their personal assets. So in a sense, banks gain a lot of comfort to say that if there is wealth pulled out by the promoter, then we have access to his personal guarantee. And that's why in India, conventionally, personal guarantees have been taken. So that's the reason why personal guarantees have been taken. Now that you have a personal guarantee, is there a recourse to an individual's personal wealth if he has not been able to, if his company has not been able to pay the debt? Yes, of course there is recourse. So I think that having given a personal guarantee, an individual's wealth, personal wealth, is exposed to the company's fortunes, for sure.
Yeah, not the second part of my question, and this is more about all of the chatter, right? There is this whole view that, oh, Subhash Chandra got away lightly, banks had to take this massive haircut, then a counter narrative that has come saying that, no, it's not actually on the entire amount, it's just on one smaller amount, so it's not 99%, etc. How relevant is all of that? Has this been a bad deal for the banks or not?
So in a sense, has it been a bad deal for the banks? Good question. So, frankly, the deal is not complete, because all they've done is settle the personal guarantee. But if you look at the facts of the case, if a lot of wealth has moved out of the companies, and if there is an establishment that that wealth has actually gone to the personal coffers or promoter holding companies or promoter trusts or whatever, promoter conglomerates, so to say, if it's gone there, then there has to be a right to access to that, and in which case the banks would have clearly lost out. But if it is not proven that any part of the personal wealth, company wealth was transferred to personal wealth, then frankly the banks have got what they've got. The whole issue around these is two aspects, which is circumstantial, which actually gets the banks a little upset. One is the fact that you had a net worth of 40,000 crores 5 years back or 6 years back. Second is you just put in 600 odd crores as warrants to a group company from an overseas entity into Z. So when you have 600 crores to put, then why is your net worth at 31 crores? Where is the answers to some of these things? And I think when those answers appear, that, well, that actually and indeed is a difference between the individual and the promoter holding company, and there is not enough, there is not reason to siphoning off of funds from the companies in default, then I guess it's a fair deal.
Yeah, okay. Thank you so much, Abhizar. Always a pleasure to speak with you, and we love the way you come and explain all of these complex topics in such a simple manner. Abhizar Diwanji there, and I think the social media chatter will continue.
Yeah, of course.
But at the end of the day, courts have 80% of the people who were supposed to get that money said, "Acha chalo yaar 6 crore de do, khatam karo," to make it simple. So then, what's fair is fair.
It is. We should talk about more stocks before we start trade, and we're just 3 minutes away from the pre-open session. There's an interesting brokerage note that's come through on Bajaj Auto. CLSA has weighed in, maintained outperformed, but they've hiked their target price to 13,466 from 12,068. They say that all stars are aligning, and there's at least one individual on this table that will be smiling even brighter than usual on account of that statement. We'll go to him immediately after this. Diversified portfolio drive growth even after GST cut led rebasing. Growth post GST cut led rebasing from October would be better against peers. EBITDA margin execution being best in class, beneficiary of the weaker rupee. Remember that practically half of the portfolio is export driven, and so therefore from their perspective they benefit from a weaker rupee. And the other aspect is after a slip, and here I'm talking about the last decade, Parag bhai, they slipped to a 16% EBITDA and then they've come back to that 20+%. 20.9. They've had peaks of 24, 25 as well, it must be said. But 20.9 is nothing to scoff at.
And when steel, aluminium, copper, all prices were going up.
So what's the call? What's the call?
Yeah, so I was very bullish at that time, below 10,000 by God's grace, and the call has played out beautifully. All credit goes to management. They delivered phenomenal numbers, 40% EBITDA growth, in spite of all this input cost pressure. And as CLSA report has also written, and we were discussing at that time also, right, that 40% of revenue is exports. Exports are booming, and rupee at about 95. So I think great going for them. Company has delivered phenomenally well, continues to do well. So right now I cannot recommend buying at this price because that time the price was different. It was 20% lower than this price. But so stock has given returns also in near term when markets has not done anything.
Time to take off profits?
Gradually one may, but I would say still I'll remind people that my basic thesis was that there was a buyback at 12,000 and promoters did not want to participate, which means promoters feel that intrinsic value is much higher. That thesis still doesn't change. It is yet at 11,800.
You're not very far from your 100 rupees from the 12,000.
So that was my entire thesis, that there's a 20% available on the table in a quality company like Bajaj Auto.
But that upside is come. Amit Goel is also with us this morning. Amit, thank you for waiting by. He is CMT SEBI RA, partner and co-founder at Blue Oak Wealth. And a very good morning to you. Before I ask you anything else, do you have a view on Bajaj Auto?
I have not pulled up the chart of late because it has not really figured in my recent. I mean, looking at the chart, cursory glance, it is in a strong uptrending move, and it seems to be taking support around 11,500 levels. So one could, possibly look at taking the entry here, keeping a stop at 11,400. For targets of about 11,900 to 12,000 rupees.
Kush, do you concur?
Bajaj Auto, I think you can very well hold 12,700, 800 thereabouts, is the breakout level, and with the kind of momentum.
12,000, 11,000?
12,700. Yeah, that's the breakout level, and it's already heading there. Right now, it's consolidating. I would definitely suggest a hold. I don't see a reason why you should book profits. You can keep your stop losses at about 10,700, 750, but yeah, you can continue to hold.
Okay, all right. Let's head across now to Soumit Sarkar, who's waiting by to tell you about all of the chatter from the dealing rooms, and these are all stocks that might start reacting even as we speak right now. Soumit, very quickly coming to you. What is on your list today?
First stock is an HCC. That stock has been buzzing for the last couple of trading sessions. Now there are strong buy flows on the larger Chennai desk. Dealers are expecting some kind of positive news flow, some M&A activity that could happen when it comes to HCC. For Cipla, there are buy flows on the institutional desk. Dealers are not expecting a negative outcome because of this recent US FDA inspection that was done in one of their plants. For Cyient, there's buzz of some positive news flow that could come in. Dealers are expecting some form of transaction that could lead to cash inflow into the company. So keep an eye out for Cyient in trade. For Data Patterns and GE Vernova, there's a buzz of a potential order win for both the names. For Karnataka Bank, the dealers are expecting that the name of the new CEO will be announced very soon. And lastly, when it comes to IGL, there are buy flows on the DI desk that we are seeing at lower levels. And couple of other stocks that we did indicate earlier. Firstly, it was Capacite Infra. There were buy flows on the PMS desk. Dealers were expecting a large order win, and yesterday the company announced an order win of nearly 740 odd crore rupees. And when it comes to Apollo Tyres, we did mention yesterday that Warburg Pincus was a likely seller. And if you look at the bulk and block deal data, Warburg Pincus was the seller in Apollo Tyres in trade yesterday.
Okay, well, and Apollo Tyres has had a fair degree of brokerage calls as well recently, so keep them at the back of your mind. Okay, now 903, some stocks that could be active today, and we've spoken about a bunch of them, but keep an eye out for Wipro, and I wonder if Wipro is showing some zing on open. or not, let's see. Well, for now, no, not really. Indoco Remedies, some of the capital good companies, some of the stocks that Alex and Tamanna highlighted as well. So a lot of
Federal
movers, Federal Mogul goods, and let's bring that one up as well and see what is
You
the
don't
news
see
there.
this. You don't see this very often. A 90+ rupee dividend being announced on a 10 rupee face value share.
17% yield on
16-17%
yeah,
thereabouts. You're talking about a payout of 500 crore rupees when you have cash and reserves of cumulative cash and reserves and plus everything else of over about 1,800 crore rupees.
Santa Claus plus Raksha Bandhan plus everything that you could imagine. I just want to also talk about Tejas Networks very quickly. They've got a 1,500 crore LOI from TCS. That stock could be popping today, and you're seeing that happen. I want to see Ather Energy, what that's doing after Hero MotoCorp is now increasing its stake once again, 1.5% up. Let's see Hero as well while we're at it and look at what's happening there. Nothing much there. I want to look at Dixon, Amber and Sirma. News report that the GST Council may consider cutting taxes on mobile phones because the demand is going down. So that was an interesting one to my mind. Although I don't know if there is a bit of a saturation in that space. People also keep changing their phones, etc. But Amber showing some signs of life. LIC Housing Finance. We've been talking about the Subhash Chandra story. LIC Housing Finance is the biggest that is owed out of that entire deal. Nothing much happening over there right now. Let's also look at iFinance. I don't know if you say iFinance, like I Captain. iFinance news there that a Madhukela backed entity has acquired 15 lakh shares. So some exciting stuff there. Amit, any stock calls this morning?
I'm liking Adani Power and Ather Energy for obvious reasons. Adani Power with the stake sale and money infusion coming in to the tune of 535 crores is also a positive, and plus technically also it has been moving up very sharply from 1200 levels. So keeping I would like to enter into the momentum here. So an entry is suggested above 1696, which is yesterday's high, keeping a stop of 1638, 1635 for targets of 1784 and trail from there. Then I also have Ather Energy for obvious reasons with the stake, with the acquisition of Hero, it is a positive momentum for it. So Ather Energy keeping a stop at 1638, 1630, I would enter at 1700 and keep a target of about 1800 for this stock.
Okay. Do you have any Nifty levels, or you'd want to wait for the pre-open session to end before you go there?
So Nifty, I am a little bearish on Nifty, considering that it has been on a downward trending trajectory. The immediate support for Nifty happens to be at 24,000 levels, which is also the concentration of put OI. Beyond that, 23,800, which has been a long-term support since a couple of months, is the place where one could look at picking up some positional longs, and the near-term resistance happens to be 24,300 and 24,400 levels. So the structure remains weak, and 23,800 levels could possibly be the positional long levels for me.
Okay. All right. It's time for the big brokerage call of the day, and Meesho is in focus. We spoke about this earlier on the show, and we tell you why the stock is in focus. CLSA has turned cautious on the company, initiating with an underperform. Let's head across to Sharad to find out what exactly is happening. Sharad, what's happening here?
Well, there's a slight bearish undertone coming in from CLSA on Meesho. They have initiated the ratings that underperform, and the target price given by them is 150 rupees per share. Some questions are being arised, especially on the monetization front. The key question they are asking is, they are solving for affordability and desirability for the masses, but can it make money? Also, Meesho's high order values which are there for the affordability is something being questioned, and also on the delivery efficiency front as well, as the numbers are expected to come. The promise is large monetization, especially for the low income cohort, but that's a big challenge in the industry. Payments, lending and content monetization is quite competitive in India, and Meesho might face more competitive pressure here, and they believe the current valuation is pricing unrealistic outcomes. So questions on valuation as well as competition coming in for Meesho.
For that, Sharad, that's an interesting one, and we marked it in the beginning of the show because we were looking at Mahesh Nandurkar's India strategy and Jeffrey's India strategy, and they've just added Meesho's to the portfolio. You have a view from CLSO saying that too much competition, and can they actually do it, since they're keen not to keep their AOV, their average order value, too high. They boast about it, right? That they're more a mass product than any other. What do you make of Meesho, Parag bhai?
So my view remains same. 95,000 crore market cap for a EBITDA loss, that I cannot buy.
Just on principle.
Just on principle, yeah. But if the market, see, for example, when I liked Ether, the market cap was 22,000 crores. For 22,000 crores, when you have a little bit of loss, it's okay. But 95,000, to pay 95,000 crores for loss, and that too, as this report also says, that it's a mass product. So when you want to increase prices, there is always a threat that you lose a customer.
Let me just, play devil's advocate here. The kind of penetration that Meesho has had has actually put very large global players on the back foot. Now, I'm not talking about valuations.
No, they might have done executive well.
That kind of TAM is crazy, and you see it all around you.
Yeah. So I completely agree. So my wife also tells me this. That why you are negative on Meesho.
Because of shopping on Meesho?
Because she's
I
also
love that she's got an opinion on your calls.
Because she's using Meesho.
I love it.
This was at the time when IPO came, and she proved right. Because after
IPO, there is a lesson there.
So there's always a lesson to learn every day from everyone.
नहीं कभी मैडम की बातें आपको सुननी चाहिए. No. Okay, so that was the thing, that when you see everyone around you, because I have seen it. You have someone coming up and even people who work with you, house help, etc., saying they made 300 रुपए के jeans मैंने Meesho से लिए, and feeling so happy about it.
Correct.
So that big change has
I think the management has done a phenomenal job. Execution was excellent. The target audience is of course very large, and as you rightly said, TAM opportunity is very big. But the only fact, I'm a conventional investor to that extent. I've tried to change myself a little bit by giving, but I am ready to buy loss-making businesses up to certain market cap. That is my problem.
Okay, well, but the other set of stocks which are doing really well off late is some of those pipe companies, right? And while we keep on talking about Welspun Corp because of the mammoth increase that it had, but Man Industries, for example, has also had a good run, etc., right, Parag bhai? So what's with this space? And then I would love from Khushbu a chart check on those.
So I think these companies are in right space, and they already had capacities, right? So there is a clear operating leverage at play. So I would say that these are all good beneficiaries, because everywhere, because after this West Asia war conflict, everywhere there will be drill baby drill. In India also it will happen, right? So I am expecting ONGC, Oil India to start giving big orders to these pipe companies also. In US already it is happening. We saw that in Welspun. So I think these companies are headed for good times.
Okay.
I saw, I think, Ratnamani Metal getting, which is another pipe company, getting 2,700 crore order.
Yeah.
With a JV partner.
Yeah. So well, some of these are done well. Khushbu, on the charts, is there a trade in any of these?
So the fact that they've run up quite a bit. So from a near-term perspective, it just does not justify, a fresh initiations. For example, Welspun Corp, right, closer to 2,000 levels. I know it's about 20%, from these levels, so a little less. So perhaps at those levels, even Man Industries around 695, 700 zones, it makes sense. The structure is positive, so you can hold on to whatever you have at trailing stop losses, not fresh initiation. Even Ratnamani was popping up on my radars, but like Parag bhai said, it had this massive spurt, but it's holding on to it. But because of that, the risk reward ratio not favorable. Perhaps Prince Pipe, if you want to really play this space with a stop loss at about 280, because it's not really caught on to that massive momentum that the rest of the pack has.
Okay, Amit, I want to ask you about a few frontline banks and therefore what bearing it will have on the Bank Nifty, because you've seen ICICI Bank move one way and HDFC Bank move the other. Kotak in the recent past and this week has been absolutely buzzing. So if you were to initiate a long on an individual bank, which would it be? And two, would you have a positive call in the Bank Nifty?
So Bank Nifty has been in a tight range since of 55,700 to 58,700, and it has been in this range for the last 3 months and has been around the center point of this range, which is an excellent non-directional straddle, strangle, iron condor sort of a setup for option traders. Apart from that, I don't really see the momentum. Yesterday also it was picking up a little, but the OI, if you look at the OI build-up, which is there has been some unwind in that. So I don't see a lot of momentum building up in Bank Nifty, and I continue to be it continues to be a lackluster index for me till it really breaks out of this level of 57,800 levels, 58,000 levels. So Bank Nifty, it's a non-directional sideways sort of a trajectory for me. If I had to pick a momentum from the Bank Nifty space, it would be ICICI Bank because of its stellar run, and it has been consolidating at a range. So I would look to pick up ICICI Bank at around 1400, 1350 levels for possible targets of 1500 levels in this counter.
Okay, all right. Keep an eye on ICICI Bank. Kush, I'm coming to you for one last call before the start of trade. You've got 20 seconds.
Yeah, Shyam Metallic, something that we discussed in the morning, opening with a mild gap up, so still healthy risk reward ratio, 1070 target. The first one, 1110 second target, 1010 is your stop loss.
1010 stop loss, a target of over 1100 as a second target. That is Kush Bora's stop call. I think we got Amit Goel's top call. Amit, maybe if we missed it, your top call, 5 seconds.
Adani Power.
Adani Power. Okay, and he's given the rationale. There's a fundamental reasoning to that as well because of the money coming in. Small number for Adani Power size, but still there is a positive. Okay, the market's set to start mildly in the green. Let's see what happens to banks per se, and then what's happening to Wipro and thereby the IT pack too. But here come the first rates. About 40, no, not even 40. Yeah, circa that, right? Between 30 and 40 points in the green for the large caps. Mid caps are flat. The small cap index will come up on your screen about 0.25% higher. The breadth is positive. Bank Nifty is lower, but Nifty IT should come up on your screen. And I wonder if the IT index is doing okay, 1.53%. Is Wipro to be credited for that? Let's get the heat map up on the screen. Infi 2 is up about 1%, but I wonder Wipro. No, really. Wipro is the third best performer. It's actually the top 5. All of them are IT names. Wonder if I missed something. 1.75 for TCS, 1.6 for Infi, Tech Mahindra, HCL Tech, Wipro. In fact, Wipro is lagging in terms of the list of the gainers despite it being the one with the announcement. Bajaj Auto on that CLSA note, I presume, up about 1%. Larsen, Reliance, Apollo Hospitals are amongst the others. So L&T and RIL from amongst the heavyweights in addition to IT are giving that bit of a support. What is dragging it lower though? Yes, ICICI Bank down. Bajaj Finserv not technically the heaviest of weightages, but down 1.2%. But ICICI Bank is down. ITC sulking a little bit. So FMCG seems to be doing bad because I see HUL in the list of the top 10 losers too. The Bajaj Twins, Ultratech are amongst the others. So FMCG certainly is a bit of a cloud today because even HUL and Nestle are trading in the red. But IT, strong start. Let's see if they pick up from here.
I wonder if this is the Nvidia and Nasdaq effect, because you've seen that for the last couple of trading sessions where Indian IT is also mirroring what's happening there. It's all about Nvidia. I mean, how can you keep growing at a massive rate and then say, I will grow some more? So that's what's happened with Nvidia. So maybe that's what you're seeing. Let's pull up the contributors very quickly on the Nifty before we move ahead and see what's what. ICICI Bank, Bajaj Fin, Access. Today it's that seesaw where the banks are weighing heavy on IT, but IT managing to hold it up. Reliance with its 10 points there, boosting on the winning side as well. Watch this space. I want to look at the sectoral heat map straight away because nothing much happening on the mid cap and the small cap indices per se. Is going to be more specific, and it's Nifty IT once again about 2% up. Nifty Media, I wonder if Z is playing a role. We'll look at Z also individually. Metals about 0.5% up. The Sensex also up there, as are the small cap. What's not working? India Defence, but a smaller cohort of stocks really, but that's about 0.5% down. Nifty Realty about 0.2% down right now. So this is an okay screen, I would say. Nothing too much to worry about, but this is an IT pushed market and it's a Nifty IT index which is now zooming. Let's pull up the intraday for how much ever data we have so far on the Nifty IT. I know it's early minutes yet, but be interesting to see that trend line looking quite exciting, maybe more coming in. This could be the dark horse after morning. Now, I want to look at some individual stocks, and I want to start with the pairing of Ather and Hero. Ather's biggest stakeholder is upping stake again and again, so that's about 4% up this morning. Let's see what Hero is doing. The buyer in this case, and we gave you that data point, didn't we, that Hero's investment in Ather has gone up at least 7x since they bought it. I wonder if you can show that stock. Federal Mughal is the other one I'm talking about. There you have it, about 1% up. Federal Mughal is the other one I'm talking about. Extremely generous with its first dividend outpay, which is for the stock is 4.5%. The dividend yield is about 17% odd. I want to look at the mobile phone companies. Dixon, Amber, Sirma. GST cuts could be coming is a news report that GST on mobile phones could be cut to 18% because the demand is kind of stagnating, and now you have this PLI scheme where you want India to make more mobile phones, but then you want people to buy them as well. 1% up on Dixon. Lenskart has this big block deal which has already taken place. Actually, that block has been executed, but the stock is holding up well, I must say. LIC Housing Finance, I want to look at that one, and then if we can in a bit pull up Z as well. So they've given a clarification on the Subhash Chandra NCLT order, saying, you know, this is not such a big haircut for us because we're going to take all of the other stuff as well. Obviously, it's a relief for Chandra and then a relief for Z Entertainment. That's why you have that media index up about 1.5%. GE Shipping is the other one. There's a 900 crore buyback that they have announced. Nearly 2% up on that stock. Tejas Networks, top gainer in the pre-open session. Is it keeping up momentum? Yes, it is. Maybe a stock of the morning. A 1,537 crore letter of intent from TCS. 9% up on that stock. We hope to speak with them later in the day. I want to look at DCB Bank very quickly. The Oman India Joint Investment Fund has sold 37 lakh shares in this. The stock has taken a bit of a hit, and iFinance, we identified that for you. Madhu Kela entity has bought in a stake on that, but nothing much happening there right now. But the mood overall seems pretty decent, Alex.
I mean, it's not terrible, Tamanna, and you have the benchmark that's more or less flat with a positive bias at this juncture. It's given up a little bit of ground, but IT as a pack is doing incredible things this morning, up over 2% or thereabouts. A few stocks from the broader market stand out in terms of gainers. Some of them, Tamanna has already pointed out to you. Tejas Networks, Redington India, both gaining handsomely. Nava Limited, Tata Teleservices, Ather Energy, all gaining over 3% each. But I have a very simple question for Parag Bhai, maybe Kush can weigh in as well, which is a lot of people who are monitoring this Federal Mogul news at 563. Right? So if you calculate 94 on 563, then you're effectively getting 16.5% yield on a dividend payout. The thinking that a lot of people will have is, should I buy today and then on the September 4th when the reserve the reserve date is there, you hold it till then and then sell it. But the danger here is that the crash can take place after that.
Yes.
So you could lose some of that.
Yes. And it is a one-time dividend. No?
It is a one-time.
They've used their cash resources.
So I'm saying, would you as a long-term fundamental investor do this, Parag Bhai? If yes, why? If no, why?
No, I will not do it. After, especially the stock has also rallied. Because
15-16% in a month.
Some people might be aware that this dividend is coming, right?
Okay.
And the other thing is that this is because company is not making so much of profits every year, right? So it is out of their cash reserves they are giving. So it is a one-time dividend.
Okay, and Kush?
Yeah, no. You don't play these, events per se. Not a big fan of playing events like this. Result pe hum call nahi dete to ye event to, and plus this is something that the market already knows, right? So I don't think this is going to really play out too well from here on.
Okay. So that's the call. Don't jump the gun just because you're getting 16% on the table and it's available right now. It's not necessarily that it'll hold out. By the way, an interesting piece that we've got for you, as siblings across India and not necessarily also blood siblings celebrate Raksha Bandhan today, we're putting your brother's Rakhi gift to the market test. If your brother had given you 1 lakh rupees last Rakhi, where would it have grown the most if you had invested it and not blown it up on something? Silver, gold, Bitcoin, maybe the markets, some other space? Sharad has a comparison. Sharad?
Well, I'll say that much, that sometimes sisters have given better returns than brothers' investments. And I'm going to give you that very interesting piece of information. So first of all, last Rakhi, if you have given your sister 1 lakh rupees, agar aapne 1 lakh rupees diya, had they invested across the asset classes, and look at that, brothers are actually losing out money. Had they invested in mid cap, small cap, gold, you would have seen a good increase, especially gold. That's one of the best investments that could have yielded you almost 1,55,000 rupees since last Rakhi. Even FD and retail sugar prices, interesting name from the commodity space, also given a very strong return. So that 1 lakh has converted really nicely if sister invested in mid cap, gold, or even the retail sugar segment. But let's see, if your sister is abroad, maybe you have given her $1,000. What happens next? If you could just show the global assets, how things have moved. See, the best performing Indian asset was silver, and the global assets, especially crude, had that ETF investment been there, 32% return would have come in. Even in Nasdaq investment and even Bitcoin, at least from the recent lows we saw, a healthy return has come. So of course, if your sisters are globally there, abroad, or in domestically also, they have made money, but in different asset classes. Also, let's point out how things pan out for the best performers here. The global assets, it's Brent. The worst performing is Bitcoin, but it is recovering right now for the last 1 month. So do keep in mind for the next Rakhi as well. So this is the overall setup, for the Rakhi segment, and I'm sure you must have given a lot of gifts to your sisters. Some may invest, some may be blowing up today. I think mine one is completely blowing off today.
You're giving 1 lakh rupees, no?
I don't know.
Now that you've set that benchmark so high, Sharad. But no, thank you. That was an amazing piece, and compliments to our graphic team to put together such a good-looking screen as well. Just something we wanted to highlight and in a way use this occasion to show what these asset classes have done. But if I were to look at a year from now, gold has consistently performed, I think, second or third year in a row. Parag bhai, would you be looking at gold?
So basically my view is very clear on gold right now, that if government removes this duty, which was rumored, right, last 2 days we are hearing that government might remove that 15%, cut that 15 to back to 6% gold duty, then Indian investors can buy gold, because whatever we are hearing from US, that US 10-year, whenever it touches 4.7, there is a talk of QE. So if QE starts again, mini QE or wholesome QE, I don't know, any QE starts, it is positive for gold, because then dollar will go down. So if this duty is removed from Indian buyers' perspective, gold can be a good investment. And of course, I would say Indian large caps are best investments right now.
Really?
Yes. Everybody gives this expression only.
This which one I
you
just gave?
Yeah.
Okay, in case the camera missed it, I said
really. Everybody said really. Okay, really. But so I'm saying not necessarily exact 1 year. I would say from 2-year perspective, Indian large caps like ICICI Banks of the world or Grasims of the world or various other things are the best investment opportunities for next 2 years.
No, the reason I ask is everyone that we have been speaking to comes on this channel, and ace investors, large investors, they come and say there is no juice in large caps, there's no story there. Someone on our show described large caps as senile yesterday.
That is the time to buy it. I don't know who it was. With due respect, I'm saying. I'm not saying that who. I'm not sure. I've not seen that thing.
There is one hashtag. If you know, you know. So
I don't know. My view. I'm just sharing my personal view. From next 2 years perspective, Indian large caps are the space to be in.
This whole, what befuddles me is this whole bifurcation consistently around large caps, mid caps, small caps, because you rather buy a company that is growing earnings, right? And if the earnings growth is more in the 51 to 100, more percentage of companies in the 51 to 100 or 100 to 250, fish in that pond. Right, per se.
So
markets will eventually give returns to earnings growth.
In my view, if I take 2 years perspective, ICICI Access will grow at 15 to 20%.
And RBL will not?
RBL will also do. No? So I'm saying, see, when mid caps and small caps, I don't want to paint them with the same brush. There are so many stocks. Right?
Exactly.
So there are so many stocks.
Which is
but
why
I would say that But I would say that because large caps are so hated and so much sold by FIIs, they from valuation. If you are a hardcore value investor, there is value in large caps for sure. And that too select. I'm not saying
select large caps. Which is the distinction I want to make.
Yeah.
You will find value in the Nifty 50, you will find value in 51 to 100, you will find value in 101 to 250.
Yeah, mid-caps and small caps
and
can
beyond
be good.
250
Yeah,
as
yeah,
well.
yeah.
Exactly.
Yeah.
So
for a bottom-up stock picker, of course you'll find it. But you can't make the argument that simply because the valuation is low, you should go and buy, because growth needs to be there.
Earnings
Going
are
to grow.
in
na,
select
Parag.
Yesterday I spoke to a paint company. There's a high single-digit volume growth in paints happening in this quarter also. Double-digit sales growth is happening. Yesterday I met my favorite Marico, and they said that there is no effect of El Nino or rural India slowdown is also not there. They are growing their VAHO portfolio at about 20%. There is a growth. People have just got bored of looking at things in large caps. And I think when everybody throws in the towel, that is the time to look at that asset class. And so I was saying, one is gold, if the duty is really cut for Indian buyer, and second is Indian large caps, where earning growth is 15-20%.
Why would they cut the duty though on gold?
No, I think whatever.
At a time when the currency is just about stabilizing,
I know. No, I'm just saying, if it is rumored in last 2 days, that's why you saw yesterday Muthoot and Manappuram were down, right?
Sure.
Yeah, so that's why I'm making that point.
Okay, we always love these discussions, and the reason that we have debate on this table is because it sort of gives everyone who's watching and joining us also a chance to think. Tell us what you think about this one. Parag Bhai is sticking his neck out. He's saying large caps is where it is, and he's getting a lot of these questions, really. So we'll wait and see. All right, thank you so much, Parag Thakkar, Khosh Pora, Amit Goel for joining us today, and may you all have a festive weekend going ahead as well. We're going to put the focus on global health. Global health continues to ramp up capacity with multiple expansion projects underway and a strong long-term growth pipeline in place. Before we speak with the management, Varsha is joining in to set that conversation up for us. Dr. Naresh Trehan is going to be there on the other side of that short setup. Varsha.
Well, let me start this conversation with the big capacity plans that they have. They've already added 72 beds during Q1. The operational bed count reaches to 3,737, and total announced pipeline is about 3,350 beds. South Delhi construction is underway, other projects moving through approvals. Now talking about their capex plans, well, total capex plan is at 4,850 crore over the next 5 years to be funded through debt and internal accrual, and the major capex is for Mumbai, Pithampur, Guwahati, South Delhi and Varanasi projects. Guwahati remains the next growth driver or next growth engine for the company. Project is been scaled up to 650 bed, estimated investment around 970 crore. Noida is emerging as a key growth driver for the company. Occupancy is roughly around 30 to 40% despite continuous bed addition. EBITDA loss narrows to 5 crore versus 24 crore, a loss of 24 crore in Q4 FY26. So overall, if you see, big capacity expansion is underway. A majority of projects are under execution, and capex of around 4,000 odd crore for the next 5 years.
Okay, great. Thanks for that, Varsha. Let's get in. Dr. Naresh Trehan, Chairman and MD of Global Healthcare, joining in on the show. Dr. Trehan, thanks so much for taking the time out and joining us and giving us that perspective. We haven't had a chance to talk to you post.
Good morning.
Very good morning. Post quarter one at least, but I don't remember talking to you post quarter four as well. So I would love to know, how is it that 2026 is shaping up for you, sir, and as a business and per se as a sector?
So first of all, let me make a little correction here. We don't look at it like a business. We look at it as healthcare sector, where the main purpose of our existence is to take care of patients. So as you have seen that the growth has been consistent from the last 3 years when we went public, there has been a very substantial growth in our value, and also the fact that it rides on the back of quality care and better patient satisfaction and outcomes. So this growth will continue because we, as you can notice, we do very deliberate steps moving forward. We are not in any way focused on saying that let's do rapid expansion without paying attention to quality. That's not our street. Our whole dharma is that our quality is adjudged one of the best in this part of the world, and also we are the only hospital who has been named in the first 150 hospitals of the world, first leading hospitals of the world by Newsweek International, which does a survey of 28 countries. So I think that the whole mainstream that we are maintaining is we are doubling capacity. Our margins are robust. But like I said, our growth is basically based on the fact that our volumes are growing.
Sure.
And also the fact that we like to contain the cost to the patient also as much as possible in the current environment.
Sure.
And also this is the philosophy. Now, if you look at the industry itself, if you ask me that question, that today we are about half of what we should be to service our country. It is required at every level, starting from the primary health center in the village to the secondary care center, also in the rural area, then the district hospitals, and then the super specialty hospitals. So that between the government and the private sector, we are actually providing service to the whole of India's population. Yes. And moving forward, we need to double ourselves because the capacity is way behind what
Dr. Trehan, just on that point, and apologies for interrupting you, but and this is Alex. The first question was asked to you by Neeraj, my colleague. We were having a conversation recently with a panel of heads of hospitals, and I was invited to make a distinction between a missionary hospital and a private sector hospital when we were talking about capping of room rent. And the fact is that they were saying that they were in the business because ultimately, yes, they're providing a service, but they're also in a business. So I appreciate that you're providing a very, very important service, but your shareholders would also be focused on your bottom line. So from that perspective, they're looking at profitable growth as well. What can you tell us about the levers of that profitable growth in the current financial year?
So as I said to you, if you look at our track record, we have actually been at a very steep progress in our ability to serve, and the revenue has gone up, the margins are robust, but you must also understand that this capping of bed rents or room rents or whatever, it's not that kind of sector. Healthcare got its own sanctity. You know how many things go in. You cannot draw a parallel between a hotel and a hospital because the hospital provides services which are 20 times more than a hotel does. Hotels' profit margins are huge. We are not in that game at all. Our growth is very steady. The shareholders can expect robust returns, no question about that. But the point is not for any other reason, but on the back of serving more and more patients, providing better and better quality of care, frontier technology, so that we now, if you can see, robotics is playing a very important role. We have been practicing robotics for a long time, but every specialty now has an expert on robotics as part of our ecosystem. So the growth is ascertained by quality of care, number of patients that are seeking you incrementally. As if you look at the last quarter results, a lot of that growth came on the back of higher volumes that we were able to serve.
In fact, let me ask you about that, Dr. Manna here, and thank you so much for your time. Pardon me, but I'm just going to come in with a few quick questions, if that's okay, on specifics. And I want to start by asking about Noida, which is emerging as your key growth driver. Your EBITDA losses have narrowed from 24 crores to 5 crores now. My question to you is that what is your pathway to break even, EBITDA break even? By when do you see this happening?
We are expecting it in the next 4 to 8 weeks. We will be actually positive. This has been the history that you must understand that the Noida hospital was opened less than a year ago.
Yes.
And if it is almost reaching break even in 1 year, you know that we already are on a very sort of healthy track, so that we know that the demand for our services is increasing on a daily basis. So it takes time in healthcare to set the systems, to make it perfect, which has now happened, and more complex procedures are being done. more and more robotics, more and more new technology has been introduced. So we have arrived in Noida representing one of the highest standards of healthcare that you can provide
That's
to any
actually a very important update, that you're going to have break-even, EBITDA break-even in this quarter itself. What is the overall sustainability of the average revenue per operating bed, or ARPOB as we say it, in a consolidated fashion? And if you want to talk about any one star, and if Noida is that star, what is the kind of ARPOB you're seeing there?
So we estimate it will be around between 65 to 80,000 per bed, occupied bed per year, per day.
It's an average, yeah. Okay, so 60,000 to 80,000. You're at 70,000 last quarter. So you see this increasing to about 80,000 for the financial year?
Yes, of course. Yes, we do. Because the introduction of newer technologies, newer procedures, more complex procedures. So that is what we are handling, and that's what we specialize in, and that's why we expect our ARPOB to keep going up, because of the fact that we are providing that superior service.
Okay, just wanted to know about your expansion timeline. About 3,350 plus beds of expansion is what you have announced. What is the kind of timeline you see to complete that number?
So starting from about 2.5 years to 3.5 years, most of our projects will come to fruition.
Oh, you have up to a ceiling of 3 years on that. Understood. Let's talk a bit about Guwahati and the potential you see in Northeast. You're well established, say, in the NCR region, and you've talked about how Noida has worked. What is the Northeast outlook?
You know, there is, like, if you look at the pattern where we are going, is where the people need our services the most. People who have to travel long distance to seek specialized care. So we actually want to provide that specialized care of the highest standard close to the people where they come from. So as you know, Northeast is not served by high quality medicine of any variety at this stage. So we were invited to create that standard of care in Northeast, starting with Assam. And we responded by saying, yes, we will build one of the finest hospitals. And if you can look at our model, we always create hospitals which are larger in size, so that you can afford to get all the good people who are at the highest standard on the same platform, so that they can serve across all specialties together.
Sure, and that's fantastic. I think you're investing 970 crores in this Guwahati project, right?
Yes.
Okay, and your total capex is about 4,850 crores.
That's correct.
How are you funding this, sir? Is there going to be some requirement of a fundraise coming in?
So what we do is, we do most of our generation is from inside, and we do not go above a model of 50-50 debt. So each institution will get financed by us, by our internal generation, and also take 50% debt on that institution. And what we have, this model has worked very well for us, and we have been able to pay off. Right now, we are almost debt free, or in fact, we are positive in cash. So that model has worked well over the last 6 hospitals that are already functional. And we expect that all other hospitals that are coming online sequentially will also follow the same pattern. So I think that...
All funded through internal accruals?
No, 50-50, as I said. We would take 50% debt on that institution, where particular, but 50, we do not go more than 50% debt. And we find it very, very possible, and it has, like I said, proven over the last 6 institutions that we have built, that they are now, they have paid off their debts, and today we are cash positive on our balance sheet.
Thank you so much, Dr. Trehan, for speaking with us. It's such a pleasure to have you on. And I know as a business channel, we focus on the numbers, but the magnitude of what you are doing for the country is definitely not lost on us and our viewers. So thank you for all of that work once again.
Thank you.
Thank you. Dr. Naresh Trehan there. All right, let's turn focus to Suprajit Engineering is showing signs of a turnaround with Q1 revenue and EBITDA jumping sharply. The company says SCS integration is complete. Before we speak with K. Ajit Kumar Rai, the founder and chairman of Suprajit Group, Puneet is joining in with more details. Puneet, what's the highlight?
Well, thank you for that. It's definitely been a good quarter for the company as well. But more than the growth, I think the street's looking at the way forward as well, since SCS, which was acquired way back in Q2 of FY25, has now completed integration. The reorganization has been completed as well, with closures of warehouses as well as plants. And hence, the street's now getting more positive. So over the last few years, the revenue growth, while being decent, has of course been led by acquisitions amongst other strategies, but has lagged its peers. So essentially the question now being if now is the time to look at Suprajit Engineering with a much more deeper lens, given that all of that is now behind the company, and if it has finally turned the corner. The first few questions would be on revenue growth, because now with SCS integrated, almost 56% of revenue is still from the global side. If that continues, will be the first key question. And the other factor that the company is moving from a component supplier to a system integrator for braking systems, essentially. How is that journey going to be? How is that accepted by customers? And finally, on margins, if the range between that 12 to 13.5% is something that the company will have as a bare minimum expectations over the next 2 to 3 years, will be some of the key questions from this conversation.
Need for that, and let's welcome in Mr. K. Ajit Kumar Rai. He's the founder and chairman of Suprajit Group. Thanks so much, Mr. Rai, for joining in. This is Neeraj Shah here. Good morning. And I would reckon that since in August on the con call, you have said that the guidance still holds for the year, that never mind the fact that there were Middle Eastern disruptions, you reckon the year will shape up eventually to the way you had penciled it to be. Would that be a fair assessment?
Good morning, and thank you for having me on your channel, Neeraj. Yes, I think this year has been a good year for us. It has started well. Post the integration, I think we have been able to ensure that the company as a group has been meeting its targets quite comfortably. As you have seen in the first quarter, the growth of our business has been in solid double digits, 20+%. And our EBITDA margins, particularly in our global cables and mechatronics division, has been excellent, and it has been in strong double digits. So the progress so far is good, and we still stand by our guidance that we have given.
I'm trying to think what's the if companies sometimes tend to look at a 5-year block and tend to think of where is it that the leap year growth will come in, where is it that you leap ahead from a range that you've established for yourself, or a glass ceiling that you can break out. How do you think about that, sir?
I think if you look at our global markets, if you bifurcate into, let's say, 3 segments, China, Europe, and North America. North America and Europe are not growing. When China has got some growth, South America and rest of the world is also not growing. So the global automotive scene is one of no growth, basically. And against that, when you are talking about 20+ growth, it is a phenomenal delta in terms of the growth. So I think we are already there in that inflection point in terms of growth. So we expect that to continue this year and next year, largely because of our global model that we have been able to present to the world, that we are onshore where needed, we are close shore where they want, and we are also competitive with our facilities both in India and also in China. So our model is the most ideal for our customers. That's why despite the market underlying is not growing, we are growing at 20%. And I think that trend is going to continue at least for this year and next year.
Mr. Rai, this is Alex, and good morning to you. So therefore, very exciting times for you. I want to double down on the export opportunity, or rather the overseas opportunity, right? Which is a bulk of your book right now. You're talking about 56% of your revenue coming from overseas, right? So is there a possibility that will expand, and what are the benefits that have already accrued to you on account of the depreciation of the currency?
Depreciation of the currency has got both sides. It's a double-edged sword. We also import a lot. That's number one. And also some of the cross currencies between Hungarian forint, Mexican peso into US dollar or euro, that also have some negative impact. So overall impact of this fluctuation in foreign currency is something difficult to say. It has not been negative for us, but it cannot be depended upon. But our model is what is ideal for global customers of ours. That is what has led us to win some marquee, large, orders from some marquee customers. And I think the smaller players, the point is one of consolidation globally. I think the component industry will go through a major consolidation of players. The larger players with the global reach will continue to do exceptionally well. And I think that is what we are seeing as far as Suprajit is concerned.
Sir, I know that a bulk of your products are essentially control cables for two-wheelers, but on mechatronics, which a lot of global players are now talking about, I'm wondering whether your suite of products has the opportunity to grow, where you will have deeper penetration with more automakers globally, and whether that itself as a component of the overall pie in terms of revenue share has a potential to grow more from this point. Can you give us some sense on that?
I think, cable has been our mainstay, but not necessarily in the two-wheeler. If you look at our bifurcation of our pie chart, nearly 40+% of our business is in automotive passenger vehicles, and only about 25% is in two-wheeler.
Okay.
Global, segment-wise business of ours. In terms of mechatronics, I think, it is not that there are not other players. There are many, many players in this business. It is a question of where our focus is. Our focus is on certain segments, particularly on displays like digital displays on a two-wheeler with digital clusters, displays in the non-automotive segment, sensors that is going into, let's say, parking brakes or throttles, etc., etc. Actuators, electronic actuators, where we have got strong presence. Actuation technologies where we are focused on things like seating systems, etc. And also on the things like electronic throttles for the two-wheelers, etc., etc. So we are not in the entire segment. We are focused on the area where we have a moat, where we have a customer comfort, where we have been able to win new contracts. So I think electronics is a large play in the automotive segment. We are in a specific space where we think we have the advantage of customer comfort and the product knowledge. I think that's where we are winning the contract. As you have seen, our electronics division has been growing very well. Yeah. And, even internationally, particularly in the actuation side, we are winning new contracts. Yeah.
Understood. So therefore, it seems like FY27 is started off certainly on the right note. It's going as planned with your retaining of your plan for the full year. Thank you so much for taking the time and speaking to us today, Mr. Rai, and we look forward to speaking to you after the Q2 numbers as well.
Thank you for having me.
My pleasure. What a morning, isn't it?
Okay. Primary market is where all the action is. Just look at Tempson's. And you are seeing the pre-listing settlement of the rate. It's 331 rupees was the issue offer, the IPO offer price. Listing is at 631 rupees, 110. Matlab paisa double on listing pop. I really don't know. Okay, this is the company. It's the largest manufacturer of contact and non-contact temperature sensors in India. Diversified portfolio across sensors, heating and cables. Nearly 29% revenue comes from exports. What's the weakness? This is our SWOT analysis. Working capital intensive business. Inventory days have increased over the years and borrowings have risen significantly. Manufacturing concentrated largely in Udaipur. What are the opportunities? Demand from metals, petrochem, defense and industrial automation sectors. Export penetration can increase further. Growth through acquisitions, subsidiaries and joint ventures. Of course, you have to watch out for a slowdown in industrial capex, which could impact order inflows and raw material price volatility, may pressure margins as well. I believe there is a significant OFS component as well in this, but we'll have to pull that up for you. So,
the margin profile, Tamanna, is apparently low to mid 20s. And so therefore, from that perspective, you're talking about a revenue growth that has been pretty substantial over the last 3 years. it is a relatively high entry barrier business as well. So,
yes.
So the fact is that I think those are the reasons why some of these niche players are getting the kind of attention that they're getting in this market.
I mean, why you see this kind of a listing pop, frankly, could be anybody's guess right now.
Yeah.
It's as much as why a movie worked at the box office and why it didn't. One can only hope. It's a good day for Tempsons. We'll take a very short break. We're coming back with our special presentation on the other side, where we're talking all about CAS and the chaos around it. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
लॉर्ड्स मार्क इंडस्ट्रीज हमेशा आपके साथ।
Well done on that ESOP sale.
Thank you.
Now that you have this extra money to invest, let's build a staggered deployment approach and balance things out between aggressive and safe bets.
Ionic Wealth is your co-founder in your journey of wealth creation.
Hold up. Let him get a second opinion first.
Sounds good.
You can continue.
Ionic Wealth is putting the power of institutional grade AI in your pocket, so you can get your second opinion first. Ionic Wealth AI.
इस शेयर मार्केट में हाथ में हो कोई भी फोन, यहाँ है सबका इक्वल हक, क्योंकि आप जो भी हो,
जहाँ से भी हो, जैसे भी हो,
ये मान सकता है बॉस। तो SIP करो, इन्वेस्ट करो या IPO, डाउनलोड ग्रो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
One day horizon. You know, a cooling towel है. ये positioned as a heat protective gear. I can feel the cooling. We have a couple of lakh workmen working at different sites in very harsh conditions, and I'm more than happy to get your product to all of you. This is such a moment for him. हमने ये बनाया adaptive. Wheelchair bound people के लिए independent mobility है.
इस तरीके से he is going to be the hero for many people.
Don't look at the disability, look at the magic of the ability that they have.
Back with India Market Open right here on NDTV Profit. Now, we are going to take the issue, if I can call it an issue, or the issues surrounding the closing auction system head on. And why this has come to the fore is because of what happened on what I call a tricky Thursday. And why is that so? The Sensex was roughly 77,180 or 77,200 when the CTS ended. The indicative auction price was as low at 74,988, which is a 2,000 points air pocket in a few minutes. I'm calling it an air pocket on purpose, right? And that is the worry, because there is a bit of a gap between what's happening until 3:15 and post that. The official close, though, thankfully, was 76,933.59, which is about 539 points, 0.7. So you can see there's a lot of volatility that happens here, even though it ends calmer. And this is where the issue is. That 77,200 put option for Sensex moved from 54 rupees to 499 in 10 minutes. We're talking about Korean options doing so much. Look at what's happening back home in India on expiry days at least. But so why is it that this is happening, right? There is a thin book and fat tickets. I think you can almost coin it this way. And what's happening out there? Because the expiry places hedges, unwindings, passive rebalancing and prop flow in the same 10-minute book, because now there is a special session for it, and all of them come at the same point of time. Currently, the small cash order can really make sure that the lean IEP, which is the discovered price, while the real money sits in the larger options book. Remember, from 3:15 to 3:30, there is no continuous matching, which is very separate or very different from what used to happen. So if this is confusing you, what is the eventual take on the closing auction system? And we'll come back with this a bit later on in the day. But there is an issue because the market is thin, and cash could continue to have teething issues for a lot longer period of time, because the Indian markets don't have the liquidity depth that some of the global markets have, where cash is functioning very, very smoothly. Small traders would do well to not trade index options on expiry day, at least not be on the selling side, because then you could be caught on the wrong foot, and the system will work better with more participation. But let the risk be that of institutions. If you're a retail investor, don't try to take that risk right now until the situation gets resolved and more participation comes in. Remember, mutual fund participation has moved up. I think give it some time. Don't trade for the next 3 to 6 months on expiry day in put and call options, especially on the short side. That's the simplest thing to do for a retail participant. But we've had a fabulous conversation when the closing auction system began with MK Global's Manjari, and she joins in right now. She heads the dealing out there, and it'll be lovely, Manjari, to talk to you, understand, now that you've had a month and you've seen the first Sensex expiry as well, what's the takeaway according to you?
So, I think we would definitely have an initial teething issue, as you rightly said, that anything which is introduced first time would have some issues. But I think it's something which on a long term would really work very well as far as the other developed markets work. The bigger issue with us is we have weekly options and the monthly expiries where a lot of options are sitting. And all the closing happens on the closing option session basis. So that is where the bigger issue right now is. As far as you were talking about the indicator price, the way you look at indicator prices, it will always be a little faulty, because you can always withdraw the order also. So not necessarily the order is in the system when actual price matching happens. You can always put the order and withdraw it, and the indicator prices can keep on moving. So trading options in live market based on indicator price itself is not the right benchmark for trading. And that is where we can see huge volatility happening. Definitely not necessarily everyone is looking at it in trading, but with price moves, you will have a lot of stop losses which get triggered, and further the price gets expanded.
Yeah, it's an important point. Samir Arora is with us, and Samir is waiting by as well. I do want to acknowledge that he's joined us. Samir, we'll come to you in just a bit because we want your opinion on this. We know that you study this very deeply as well. But Manjari, I just want your perspective on, from the writer's perspective, right, of these derivative contracts. It's becoming less and less lucrative to do that. And so in the interim, while we're waiting for the dust to settle, it's actually something you'd warned us about, to say that on expiry day, you will have chaos. Yeah. Tell us from the writer's perspective, what do you do?
Yeah, so ideally from a writer's perspective, as I said, it's a black box. It's very tough to anticipate where the closing will come. And that is where the risk, as far as the writer is concerned, would play on. But I feel somewhere we have to relook at how the pricing is happening for the closing option. And if we can, for weekly options, can we actually move to the reference price, which is a more traded price, where we have a lot of arbitrageurs also who are liquidity providers in the system, and where the price is little fair. So can we have a closing auction which works the way it works, and we have a reference price where weekly options or monthly options close? Something which can be looked at, where there is more liquidity. Like yesterday, we saw a lot of stocks where they moved around 2 to 3% on very low volumes in closing auction. And that finally decides the closing for the month.
Exactly. Exactly. Manjari, we hope to have you back for a more detailed conversation because I think we need to give this a little more time and then figure how it settles. But we really appreciate your time today. Manjari Mazumdar there from MK Global. And I want to welcome on to the conversation Sameer Arora, founder and fund manager, Helios Capital. Sameer, a very good morning to you. And we're not going to spend the entire time of our interview talking about this, but I think this is something that needs to be addressed. There's a saying, "Garibi mein aata gila, pair pe kulhadi." Is this one of those things, or is this a bitter pill that we needed to swallow?
Well, actually, I didn't relate to it because we are not last minute or end of day buyers or this thing. So the only thing for us was that we write covered calls and puts on our longs and short positions. And the only message we have for our trader is that you don't, on settlement days, which is basically we are only doing monthly. So on the last day, don't carry it till the end and, just square it off 15, 20 minutes before. Big picture, it is supposed to work because it has worked in the rest of the world. But we have seen that in India, the manipulation that has happened, I still believe Jane Street was outright manipulation. And so all those things, because we have seen it, maybe the system could have been more careful. I think the most interesting, not necessarily that will change my NAV, the most interesting thing will be on Monday when there is a massive rebalancing of MSCI with $500 and $600 million of stock being either sold or needing to be bought in the last this thing. So let's see how that works. But overall, I would think that you can give it some time, but if it doesn't work for a month, 2 months, we can't keep saying that, it'll settle someday because it is paining a lot of people in between. And the whole system was working at the end of the day. It was not that it was totally out of line with reality. It was working. We have single stock futures, world doesn't have. We don't have to copy everything that the world has. But let's see. But these will be dramatic days. I think Monday should be dramatic. Let's see what happens.
Yeah. Now, the question also is of overall mood. And you're right, Sameer. For a participant like you, it doesn't really make a difference. And for many, it won't. But for many, it does. Does it cool the overall enthusiasm at a time when people are not really looking at the returns they hope for, and the only way where something exciting is happening is in the primary market?
No, but before that, so if you're looking for interest of the world into India, the FI world, 99% will not be bothered about this. The guys who will be bothered are those who are doing derivatives and writing calls and puts and basically doing in our futures market. And we anyway separately have a plan. It looks that we have to bring down the volume as per all the regulators. So maybe they are achieving that without this being primary objective of this exercise. So I don't think this model, whether closing auction is working or not working, is an issue for which FIs are buying or not buying India.
I'm not talking about FIs. I'm talking about Indian investors.
We don't want, we have said again and again, we don't want as much volume in puts and calls and futures and options. So maybe it's discouraging them without that being the main intention.
Okay. Sameer, in the past conversations, and good morning, Alex here. So, in past conversations, you've mentioned how your conversations with foreign investors has gone, right? And in the interim, since our last conversation, we've been speaking to other people who've said it's all about relative earnings growth. You've seen the first quarter pan out. You've seen how your own funds in India have worked. What are the conversations like now?
Everything has changed. Everything has changed. Everybody is interested in India. I think 100% of the public is interested, whether they buy or they don't buy, although they are already buying also. So I had one of the Indian broking heads come to Singapore and I met him. And he was saying that about, like Feb, March, or maybe Jan, Feb. When he came, the guys here, because I do only India, but most of the guys here do Asia at least, or emerging markets, and they were not interested in listening to Indian stories and Indian developments. And he told me that 100% of the public is now interested in knowing what is happening. I think the reason for that is that in July, the volatility in Korea and all was so high. Like the market, after having, say, Samsung Electronics having earnings growth of 500 odd percent, the stock fell 30%, and then it recovered, but then it again fell. And it's no longer obvious every morning that you have to buy those markets or those stocks. And as soon as in 1 month, you lose 30% on your big positions, even if the market has also fallen 30%, you realize that, everything cannot be one theme, one sector, or a few stocks. But I'm just telling you, independent. I mean, it's not my view. This one of the big brokers from India told me that everybody in Singapore supposedly is now interested in listening to Indian stories once again. And bottom line is, you can see that in the net flows. And one reason for that is indeed the fact that the earnings growth has been very high. Even aggregate earnings will, if you exclude OMCs, will be say 18-20%, and mid caps are 25 and small caps are 30. I think the world has realized that what is holding back India is not India, and it is not AI. It is the pathetic performance fundamentally and in the stock market of the top 10-12 companies of India.
Yes, that is exactly what a lot of people are looking at now, Samir, which is what is the word? The word that one gentleman told us yesterday, he called it senile. And this was Shankar Sharma. He said some of these large stocks are behaving senile. Would you use a word like that, or do you think that they will come out of old age and doddering?
They've been disrupted. They did not show any innovation. They just tried to protect what they had. For example, why wasn't a Paytm type thing done by some bank? You may have read recently that Jamie Dimon said that he's envious of this app, which I also use here, called Revolut. He said why we couldn't have done it. And he sort of was cursing his team, I guess, because he said, I'm envious of Revolut. So Revolut, just an app for money exchange, currency exchange and all, was recently valued at $125 million, I think, $1 billion. Point is, some of these things have been done in India, but they could have been done by the larger guys. So if you see, I read in a ICICI report that from March 22 to March 26, in the top 10 companies of India, which were at that time 11, because HDFC Bank and HDFC were separate, what I estimated from that percentage is that they had that something like $180-200 billion was sold only in these 10 stocks. But from India, they took out only 60 billion over this period, which means 110, 120, something in that range was reinvested in India in stocks outside the top 10. That's why you see people buying IPOs, I'm talking about FIs, buying IPOs and QIPs and placements and anything and everything, as long as there is some excitement there. And these are somewhat newer companies for them, not necessarily new in the market. That's why you have new age, new themes, older companies, but which were, not the obvious 10 of those time where everybody was overexposed. So that's what is doing well. India is doing well, by the way. You just make it an equal weighted index, India is doing well.
Well, Samir, it is. And just before I ask my next question, I must tell you that while there are some fabulous restaurants and eating places that have opened up in Mumbai as well. So you keep on posting photos of places that you discover elsewhere in the country. Take a trip to Mumbai, come to our studios, and we'll take you to a fabulous restaurant.
And it would have been vetted by your food commissioner or whatever.
Most certainly.
Tukaram certified restaurant.
Tukaram.
Yeah. But okay. So, Samir, congrats, by the way. 15,000 crores AUM in such a short span of time. Kudos there. But my mind takes me back to the lovely ad that you guys had given back in November 2025, right? It was a Con Chotu, effectively saying that small caps right at the thick of things. Yeah. So, but is it still the time to kind of bet on that end and effectively, therefore, be bottom up and bet on earnings growth as opposed to getting muddled between large cap, mid caps, and small caps?
That is true, but actually the thing is that the large caps look at the consumer sector or look at the IT sector, or actually, even though we own some of these banks, look at the bank sector. There is no life, there is no excitement, there's no new story. And if it's a small story that earnings will go up 1% more than before, then people already own the stock. I'm telling you, and I've been saying forever, it is easy to say that investing is boring, but who wants boring jobs? Who wants to hear that this month, instead of having 0.1% beating the expectation, our earnings growth will be 0.5, or that the range of 1 to 2% has been raised to 1.5 to 2%? That looks good for that 1 hour. But beyond that, the world is growing. Yesterday, you heard Nvidia saying at a $5 trillion market cap that the revenue will be up 70%. And if our guy comes and says, I'll grow 1 to 2%, and we say, no, you're very cheap. We have also seen that in actual action, that if they are selling 150, 200 billion of these, so by elimination, because we only do elimination, by elimination also you land up outside the largest companies. I am not saying that go to small companies, but I am saying don't go by the history that the old large will remain the new large. I actually tweeted saying either you can invest in history or you can invest in the future. I think the world wants to invest in the future, and there's a certain minimum, it may not happen, but there's a certain minimum return that you expect. So if a company is saying that I'll grow 1 or 2%, then I have to assume that you don't know anything, you will grow more than that. Because I want 12, 15 rupee percent type hopes, dreams, and it may not happen. Or that you are so cheap that your P will go up when you actually grow 3% instead of 1%. I mean, how can that be a model? So consumer guys say we'll grow 5-6%. IT guys say we will grow 2%, 4%, and the rest of the world says we go 15%. So everybody wants the 15-20% stories.
Makes sense.
And you see also, one IT guy says I will grow 15-20% and stock it does not go down, it goes up. It's not, there's no need to analyze. The management in some is saying you, sorry, I'm not growing. No, we like you. Why you like? And the other guy, when they say that we'll grow, people like it. They give them benefit of doubt. On the end, it may happen or not happen. So there is no deeper analysis than just listening to these guys.
Okay. Yeah, makes sense, and yeah, beautiful. I mean, well summarized, Sameer. And in fact, some of the commentary that companies have given have been great too, in select pockets in the smaller
in the same sector. In the same sector.
Yeah, in the same sector. Agree. But there is one more sector that you that recently has come into social media chatter because of what you mentioned. I wanted to talk to you about it. That's consumers, right? And you had mentioned, I believe, that the moat was probably not the product. The moat was the distribution and the stranglehold they held on the shelf space. And that is
even
changing.
Product, yeah.
Sorry, what I meant was that, and that seems to be changing. So therefore, is the future of consumer investing, Sameer, as things stand right now, not behind the brand and the size of the company, but behind interesting product suites that newer companies are introducing? They may be in the private market, but so be it.
Not necessary. But just quickly, let me tell you that I gave the 2, 3, 4 reasons that these consumer companies have basic, their old story was we have 6 million outlets, we can spend national money on general entertainment channels, we have products that have been working for 20, 30 years. And then as analysts, we would say that these guys, their counterparty is a Kirana store who buys small volume. So basically all the bargaining is with the brand. And now every one of them has been challenged. The distribution, half of it you can give money to quick commerce or e-commerce and they will deliver for you. You don't need to do national advertising. You can do regional if you're launching in a few places. Or in terms of product, so many different startups or companies have, getting into individual sub-segments of these consumer. Your counterparty is no longer a Kirana store. And there's a fifth one, which has not happened in India yet, that there'll be store brands or private label that will come. And I've been saying this for 1.5 years, and just last week or the week before, there was an article in Financial Times saying that I think the decline of the brands. And in that article, it says that for 9 years in a row, Kraft has had negative sale growth. 9 years in a row. And you know that Warren Buffett was one of the biggest buyers 9 years ago of Kraft. So the point is that these things are not, again, something that is happening in India. All you have to do is see who in India goes abroad in terms of investing and says that my top holding should be Procter and Gamble. Have you ever heard of anybody saying it? So what are the companies there still people are willing to buy? Walmart, although it fell 9% last week, but broadly Walmart, or even these, the cheaper, what do they call, Ross, and what I mean is the stores, they control, or of course the e-commerce companies.
Yeah.
Because they are the distribution, they are the access, they are the front, and they will decide, and they have data now. So that is the new world, if you want to call it new in that sense. Otherwise, I to say completely new companies is the best in many of these.
Cheesecake Factory has done excellently. Just to your point, Samir. In India, the question with some of these new companies and consumer tech companies, and there's a large online e-commerce player which was in focus today, one downgrade from different brokerages coming in. They're very far from profitability in some cases. That doesn't worry you?
They are not at all far from profitability, because you guys are hating. I am not. But you guys are hating, as a market, we are hating these private equity guys selling every day their stock and taking out $30 billion a year.
We are not hating anyone.
No. I mean, market hates, even I hate that way, that every day how much they are making. They all invested when it was well before any profit word was even considered. The point is, we are buying them 10, 12 years after they started. They fought in the private market with other competitors who were also funded by some other private equity guy. And we broadly can see what is the progress from there to here. Do you remember that? Although, by the way, I don't own Lenskart, or none of our funds own Lenskart, and Lenskart has doubled or whatever. Not doubled, but it's gone up 50% since IPO. Do you remember the Twitter fight?
Yes.
A year ago, on how every fund which buys Lenskart should be boycotted?
Yes.
Where are those guys? Where is that social media? Where are your Dubai friends? Where are your US friends? Everybody's gone, because the stocks, when they do well, everything gets this thing. So what happened is...
Samir, your Dubai friend was talking about Lenskart just yesterday and saying what a great company.
Whatever. He was saying it's a great company. Okay, very good. I'm happy. I'm not happy. I'm happy. I don't own it, but I'm just saying the point is that everybody can have a 2-3 year plan. Well, first, let's do the largest IT companies in India. How much loss they have caused to shareholders in the last 1 year versus a loss that any of these smaller startup loss-making companies has done. Loss can be in your account because the price is high, and there you are projecting that in 2 years earnings growth will be there. Here also you can project that 2-year profit will be there. You see, in every company you're not evaluating it whether there's profit or not, because these IT guys have a lot of profit. Then how come these stocks are down 50%? Because in the new age, you can project 2 years later that there'll be X% higher profit. In these ones, you're not able to project. So even the absolute profit might be there. What is the benefit that is given to any shareholder? Ask the big mutual fund. What benefit have you got by holding a profit-making company? These are all in your mind. As long as you can see unit profitability, you can see path to overall profit, and you can see that the service is not selling pet rocks or things like that. That's a genuine service which you are using, you are happy about, and that is the new way of life. It has a case. Otherwise, why will you buy Anthropic? It's a loss-making company. OpenAI is a loss-making company. All the companies that you feel jealous about, you mean we, that India does not have, the world has, they're all loss-making companies for many, many years.
I think jealous is the right word.
Yeah, I mean, jealous means we keep saying India does not have, we don't have AI. Well, every AI company is loss-making.
Right.
Unless you're talking about beneficiaries of AI. I mean, beneficiary means the guys who are using that capex, like not who are, on whom the capex is being spent. Okay, so that like Samsung, so they are profitable. But the guys who are spending the money on AI, on that part, everybody in the world is loss making.
Sure.
Everyone, including Meta, including even Google on that new part, everybody is loss making. And we are feeling envious of them. But when we have a loss-making company, we say, no, how can we buy a loss-making company? Even though it might be only food delivery. But I'm talking the concept of loss versus profit being made currently.
So, Samir, you spoke about foreign institutions, or you spoke about the outside in, right? And one aspect of that is currency. And I don't know if the central bank does. We certainly follow your social media platform and what you say on it. But it seems like the RBI was also listening to what you were saying on FCNRB, because maybe 24 hours after you posted that, they announced that they would be shutting the window.
Okay, so good. Thank you. So what to do? What to say?
No. So having said that, are you feeling sanguine about the stability of the currency after that turmoil that you've had? And do you anticipate that there's actually a pop that could take place once the unwinding of the book of the Reserve Bank of India takes place? Or do you not think that an appreciation of the currency is possible?
I think a big pop is not happening, but if any appreciation has to happen, it has to happen starting from September 1. So the logic is very practical, but we don't know whether that word works like that, which is that when you are giving FCNR money to effectively the government through the bank, so if on that day the rate is say at 95, then effectively the government is saying, or RBI is saying, that 3 years later you can get this money back at 95. Right. So if the rupee was already 93, then you have to, in a sense, because you are saying that all the hedging is at my account, that is RBI's account, then you are basically effectively saying that you can take your dollars back at the same rate 3 years later. So it is better for RBI to take in all the money first at a sort of a rupee being weaker, and then have it strengthen if at all they are in the business of trying to strengthen it on their own. So there was no logic for RBI to actively encourage, or whatever is the word, strengthening before all the money is in. Because then you have just a higher hurdle which you are guaranteeing, or a more tougher hurdle that you are guaranteeing. So if any appreciation has to happen, let's see if it happens in the first 5-6 days of September. Otherwise, it's not happening. Highlight is that the weakness has been arrested, and as the way we have seen last 2 years, even that would be acceptable.
Samir, before we let you go, which is the book you are reading before you post it on X?
No, I've already posted it on X. I carry it in my bag because I read in office when I have time. So currently I'm reading this.
Okay.
So this has been recommended by Elon Musk in his recent interview with The Economist magazine, saying that if you want to understand.
Okay.
So this has been recommended by Elon Musk in his recent interview with The Economist magazine, saying that if you want to understand, because that lady asked that, you keep saying that when AI comes, people won't have to work will be optional, everything will be done. How does that work? He says to see how that could work is this book. I've read half of it, but I don't think this is a positive this thing. I don't know what spin he was giving, but it's a science fiction book written in 1980s, but otherwise good.
Wow.
Otherwise good. Okay,
I just
great.
took it from. So what I quickly tell you. So I didn't think that I'll read other books in the series. There are 10 of them. But I met a guy at the Bangalore airport. He says, "You are reading this book." I have read all of them. I said, "I don't plan to read anymore." He says, "No, second book is very good." So I will read one more.
I was just going to say, Samir, maybe you'll find the answer in the last chapter. Who knows?
But he told me the second book is very good. So now I'm going to read one more because he was so convincing. So let's see.
We'll get an update on the series. We'll get an update on the series next time we speak with you, Samir. Always a pleasure to have you on. And I second Neeraj's invitation. If you're making the rounds of Mumbai, especially during the festive period, we'd love to host you and find something interesting to explore in the city.
Okay, thank you very much.
Samir Arora, pleasure as always. Now, on that happy note, we'll wrap up the show. I don't know if markets are looking that happy or, bracing themselves for what comes next. Actually, Nifty is improved. You're right, Nifty is improved and it's IT that is mighty today. 3.5% up on the Nifty IT index. That's where the entire story is. We'll take a very short break. We wrap up on India Market Open from everyone on this table and everyone behind the scenes. Thank you so much for watching. Ask Profit up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. और trust, पूरी दुनिया का. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
Sorry, I'm late.
No worries.
So our daughter, she's starting university in a few years. How do I safeguard against these dollar fluctuations?
So factoring in LRS, the route, and the currency hedge, here's your best move.
Ionic Wealth is your co-founder in your journey of wealth creation.
What's the rush? Let them get a second opinion first.
Yeah, this works.
Great. Please continue.
Ionic Wealth is putting the power of institutional grade AI in your pocket, so you can get your second opinion first. Ionic Wealth AI.
इस शेयर मार्केट में हाथ में हो कोई भी फोन, यहाँ है सबका इक्वल हक। क्योंकि आप जो भी हो,
जहाँ से भी हो, जैसे भी हो,
ये मान सबका है बॉस। तो SIP करो, इन्वेस्ट करो या IPO, डाउनलोड ग्रो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
One day horizon, एक कूलिंग टॉवल है, ये पोजीशन है एज अ हीट प्रोटेक्टिव गेयर। I can feel the cooling. We have a couple of lakh workmen working at different sites in very harsh conditions, and I'm more than happy to get your product to all of you.
This is such a moment for him.
हमने ये बनाया एडेप्टिव, व्हीलचेयर बाउंड पीपल के लिए इंडिपेंडेंट मोबिलिटी है।
इस तरीके से he is going to be the hero for many people.
Don't look at the disability, look at the magic of the ability that they have.
Arunesh Chawla, the DPUMP Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, No way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Hello and welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Well, the Bitcoin reclaims the $81,000 mark on ETF flows. BlackRock slashes minimum Bitcoin to EBIT conversion. It is targeting $109 billion in client digital assets. The Genius Group plans $827 million in Bitcoin buy. Well, the Bitcoin has reclaimed the $81,000 mark on fueled renewed institutional demand via the spot ETFs, and the US spot Bitcoin ETFs has seen an inflow of almost $232 million on August 27. Now, Bitcoin's rally faces a key supply wall at $81,000 to $86,000, where the long-term holder break-even levels are there. Sell orders and positions, especially in the options, are converging. Global financial major BlackRock has slashed the minimum Bitcoin to EBIT conversion from $25 million to just $1 million, a 96% reduction. The move opens more participation, allowing eligible investors to exchange for ETF shares. EBIT stands for iShares Bitcoin Trust, which is a spot Bitcoin exchange traded fund which is managed by BlackRock. Well, South Korea's Mirai Assets says it's targeting $109 billion in client digital assets, with Digital X at the center of push spanning a crypto, stablecoins, real-world assets, and security tokens. This signals institutional participation for crypto ecosystem. Singapore public company Genius Group announces their plan to buy $827 million in Bitcoin over the next 5 years. Genius Group is an AI-powered education company. This shows an increasing trend amongst the corporates to add Bitcoin in their treasuries, which is a good sign for institutional holding. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. After a couple of days of consolidation, we are seeing a good buying, especially in Bitcoin and Ethereum. Apart from that, even altcoins such as Solana, Tron doing well in trade. Interesting support and resistance levels are flashing on the screen. But now, time to look at the crypto strategy for the day. Here's what's there to keep in mind. The market outlook is back at a bullish momentum. Remember, technical breakout right now is happening because of ETF flows, and the sentiment is extremely greed as well. So there is a word of caution which you should maintain while you are trading, and the new Bitcoin resistance range has been pushed up. Now it ranges between the $81,000 to $85,000 mark. Now as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved. Whether it's about crypto, regulations, taxation, or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in. Thank you so much for tuning in.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that will solve all your stock-related queries. My name is Puneet Zaveri. With me today is Thomas Sarkar, and wishing our viewers a very happy Raksha Bandhan. Hopefully you give your sibling a harder time next year. But as we look at the markets, we've consistently highlighted for the benchmarks that, we've seen that we continue to be in that range closer to that 24,100 to 24,600 mark. We started and actually ended yesterday just a tad below that 24,100, and hence have seen some buying come through over the last at least the hour and a half that we started trading today. Now, very importantly, we'll continue to watch where we end today as well, because the range essentially hasn't been that great. We continue to operate at the lower end. Let's look at the Nifty 50 also in terms of heat map, because we are seeing a couple of key counters that continue to do well in terms of the heat map for the Nifty 50 in terms of gainers. Those are HCL, Tech and TCS. So as well as Tech Mahindra and Infosys and Wipro. So the top 5 gainers continue to be from the IT pack. If there's any kind of short covering, maybe that could be your reason. But today we are seeing that index certainly do well. Bajaj Auto got a target price upgrade from CLSA. Hence that counter is up almost 1.7% too. While in the losers, you see a couple of them, ICICI and Ultratech almost down 1% each. But barring that, at least for now, we continue to be up about 70 points. Nifty IT is doing well as well, but let's look at the advance decline ratio for the broader markets. Now, yesterday, you did have some good moves, and hence the advances continue to do well, have been over the last couple of days as well. But today as well, that very, very neck and neck. So that line came through very close, then advances have continued to dominate, and the mid cap, small cap show you that exactly, as well as the BSE 500 for those individual movers too. Now, over the last couple of days, you've seen some good moves on financials as well, so as well as the gold finance companies. Today, Mastech is up 11% as well. Looking at the broader spectrum of IT, so is the small cap name doing well. Capri Global up 4.8%, and Just Dial has had a management change, stocks up 10%, locked in upper circuit. Whirlpool had some good moves in the start of the week, starting to see some reversal of that. Avanti Feeds and Crompton are the other ones as well that are continuing to be under pressure. But let's now start taking your stock related queries. Joined in by Saumil Mehta. He's the head retail research at Mirae Asset Sher Khan on the technical side. Radharaman Agarwal, the managing director and CEO of Swarm Advisors, now joining in. Gentlemen, both of you, thanks so much for joining in today. Let me start off with the first question. A short-term view that is on PTM is what Mohit is asking us this question on. Saumil, holding shares at 1165, asking a short-term view on the counter.
See, my view is definitely positive on Paytm. It has been in a very strong uptrend in the medium term. In the very short term, yes, it can go down till at least 1640 or probably 1630. But keep a very strict stop loss around 1600 and hold on to the position. I'll be expecting the stock to go above 1770 or 1780, which is the upper end of the Bollinger Band on the daily chart. So positive in the short term, medium term both.
Queries coming in on Panacea Biotech. Anil Nair from Abu Dhabi is holding around 180 shares, bought at an average price of 550. He's stuck at a high level, currently sitting on a loss. Should he continue to hold this counter or exit? Mr. Agarwal, any view on this?
I think he's stuck with the losses. Maybe he should hold on for some time, but he should not be averaging at the current levels. He should hold on maybe the current positions.
Got that view, Radhaman. But the next question coming through, and this one is from Sunny, who's from Karnataka, asking a question on Bajaj Consumer. He's holding shares at 201 shares, almost at 465. He can pull up Bajaj Consumer on screen. So stock's trading close to his level. He wants some medium-term view. Radharaman, how do you view Bajaj Consumer? It's not definitely a preferred name that comes to your mind in the FMCG space, but what's the long-term view? Is it good to hold for the medium term? What should investors watch out for?
I think it's a good stock to get into. In fact, if there's a change of management happened about a year back, the numbers have also come quite well. If you look at the last quarter also, the results were quite good. And we expect the counter to do well. In fact, we should add maybe at these levels as well to take it forward. So I think the counter looks good and the numbers have been coming quite good in the quarters. and we expect similar good quarters to come in going forward.
The next query is on Paradip Phosphate. Rohan from Thane is holding around 950 shares bought at a price of 64 rupees. He wants to know the long-term view on this counter. Mr. Agarwal, any view on this?
So I think he should hold on to the current piece. So effectively, in long term to medium term, the stock looks good, but he should be holding on right now.
Holding on, got the next question coming through, this one's from Hyderabad. Manohar actually dialing in for a stock query. Manohar, very good morning. Thank you for calling in today. What's your query?
Yeah, good morning and thanks for taking the query. It is regarding Billion Brains Garage.
Okay.
I want a short-term view to enter into the stock, whether it is the right time to enter and what is the right level. For a short to medium term, I want a technical and fundamental view as well.
Got it. Well, got your question, Manohar. Saumil, let me come to you then. Firstly, on Grow, how do you look at this counter now? Has been at that 200 range, then there are some bouts that it keeps coming below that as well. Is that a level that you're watching out for? What's a stop loss and a target?
See, in the very, very short term, as the query is, in the short term, I'll be expecting the stock to, be a little negative on the negative side. It has started making lower tops, low bottom, trading below 20-40 daily moving average. I'll be expecting the stock to go down till 180, which is the 200 daily exponential moving average. So at this point of time, if you're trying to, get into the stock, wait for some time, let the correction complete, and then revisit it around the 200 daily exponential moving average, and then take a bigger view. At this point of time, avoid is my call.
Okay, the next one is on SPR Auto Tech. It's for you, Mr. Agarwal. Astha Sabarwal wants to know, she's already holding few shares, bought at a price of 4,660, currently sitting on a loss. Should she continue to hold or exit?
I think we recently had a QIP in this counter. The company is doing well. And I think one should hold on with a medium-term view. In fact, just a disclaimer, we also hold that in our fund as well. So that's a disclaimer I would like to put to the audience. But at the same time, I think we just had a QIP. We were a good participant in the QIP which happened. And QIP happened with a shade lower price. But the company looks intact for a good growth, and it's a very good hold for a medium to long run.
Got it. Viewers, you can also give us a call for a stock-related query as well. The next one coming through with this one's from Murli. He wants to know about Philatex India, holding shares at 42, Radharaman. Stock's trading close to 79 now, so he's sitting on some good gains. Should he continue to hold?
I think he can exit the stock and maybe look for other options as well. He can make good gains, right?
And is this led by valuations or the sharp run-up in a shorter span? What's the rationale?
The rationale is more in terms of the run-up has been very, very sharp. So I think maybe an opportunity would get lower.
Okay. The next query is on Leap India, again a recently listed company. Harsha from Andhra Pradesh is holding 250 shares, bought at a price of 160. Should he add more for long term? Mr. Agarwal, any view?
I think he can add on. The business model is quite robust, and in long run to medium term, that should do well. But it will be a longer gestation in these counters.
Got it. The next one, and this one's also from Chandrasekhar, who's from Bengaluru, about GNG Electronics. He actually wants to make a fresh entry here, Radharaman, and we've seen stocks, I think, up almost 6-7% today. And this year, in the past year, it's up already 83%. Despite this run-up, Radharaman, would you still advise buying, or would you wait for some pullback? And that would be the advice for now.
I think the run-up has been quite sharp. In fact, today also is up. So my suggestion would be to maybe hold on and maybe wait for some correction to enter, not at the current levels.
Got it. The next question coming through, and we actually have a couple of questions on fee.
Today also is up.
PM Industries. Subrata Mukherjee wants to make an investment right now and wants to buy this counter. Is this a good level? And I'll also come to Radharaman, but Saumil, start us off with on the technicals as well. It's had some pullback on PM Industries. What's your view?
I think in the very short term, my view is negative. In the medium term as well, it is trading below 20, 40, 200 daily moving average. So I'll be a little negative here. The downside would be till at least, I think, 1970, 1980, which is the lower end of the Bollinger Band. So at this point of time, avoid is my call for short to medium term. Overall, the trend is positive. So we'll wait for a basing out pattern and then enter the stock. But at this point of time, avoid.
Any view, Radharaman, on FM Industries? Because we've seen, of course, the auto ancillary pack do very well. This one hasn't seen too much run up, at least comparatively to the other players. So is it a good time to add?
I don't think so. We should add now. There are enough good other players available in that auto and space. So I would suggest maybe looking at other options right now.
Okay, got it. The next one, and this one's from Bala from Coimbatore, wants to know about
auto and space. So I would suggest maybe looking at other options right now.
Okay, got it. The next one, and this one's from Bala from Coimbatore, wants to know about Federal Bank and if it's the right time to enter for the next 1 year. Again, Radharaman, we've seen a good run up on this counter, had some news flow regarding Jana as well, if that could be an acquisition candidate for Federal. How are you looking at Federal now?
The Federal looks good. Maybe there might be a short-term pullback and all that, but I think the bank is doing quite well and it's a good time to maybe look at additions in the counter.
Next query is on SBI funds. Sanjay from Thane wants to know whether is it a right time to buy this counter for the next 3 years or should he wait for further downside? Mr. Agarwal, any view on SBI fund?
I think SBI fund is the leader of the pack, and my suggestion would be that maybe you can add and maybe slowly buy in tranches. And 3 years is a good horizon. It's a medium-term horizon, and the stock should do well in that period.
Got it. The next question coming through, and this one's on Shyam Metallics. Our viewer holding shares at 605. And this is Chandan Jain from Karnataka. He is a regular viewer of the show. And your stock's doing well, up almost at 1100 now. Saumil, his question being if it's a good time to book out his profits, would you recommend that?
See, I'll hold on to it, to be very frank, because I'll be expecting more upside for Shyam Metallics. It is trading around 1100. If the caller has invested for short term, definitely book some profits. Good run up from 980 to 1090, but I'll be expecting the stock to go till at least 1200 plus in the medium term. So I think hold on to it, keep a stop loss around 1000 and hold on to it.
Right, the next query is from Sudhakar from Shambhaji Nagar. It's on Sagility. He's holding 150 shares of Sagility, bought at a price of 43. Wants to know whether it's a good time to add more. Saumil, any view on this?
Absolutely, add more. Keep a stop loss around 41. My targets are around 54. We have a report on this very recently. I'll be expecting the stock. It has broken out of a basing out pattern, high top, high bottom formation on the higher degree time frame. Great stock to be in. You can add more with a stop loss around 41.
Got it. So can add around 41. Okay, I got that view. The next question is from Vignesh, actually on Natco. Saumil, I'll stick with you on this one. He wants to enter this counter right now. Would you recommend that?
Natco Pharma, you talking about,
yes,
right?
Yes.
Natco, I'm not. There are a lot of other stocks which are doing really good on the pharma space. I would not stick to this stock because it's been the downtrend for a little while, not doing much. It has been there around 1000 levels for a very long time now. There are good stocks like probably hospital stocks or Davis Lab. Davis Lab is doing good. Cipla is doing good as well. You can choose large cap stocks as well. So I think Natco Pharma is not in my list and would suggest to exit.
Next query is on HDFC Bank. Anirban Roy wants to know whether it's the right time to buy HDFC Bank from long-term perspective. Mr. Agarwal, any view on this?
I think among the private sector banks, HDFC Bank has been a bit laggard. So my suggestion would be maybe in a combination of an HDFC and ICICI one should look at, rather than only looking at HDFC. So ICICI will perform better in terms of the banking space.
Got it. Well, let's now start the rapid fire round in this edition of the show. Saumil as well as Radharaman, you know the drill. The first question is from Ravi from Mumbai. He wants to know if it's a good time to add NTPC for the next 2 years. If not, what's a preferred power pick according to you, Radharaman?
NTPC can be added, but a good power pick can be Tata Power.
The next query is on TCS. It's for you, Somil. Ajay from Dubai has bought around 147 shares at a price of 3,944. Currently sitting on a loss of 41%. Should he continue to hold or exit?
No, absolutely hold on to it. I'll be expecting a medium-term uptrend to start now.
Radharaman, just a follow-up on Tata Power, because we've seen that litigation happen, stock was down. Despite that, would you add it right now?
Yeah, definitely.
Okay, got it. The next question is from Mr. Bhupati from Vishakhapatnam on HBL Engineering. He wants to enter for the long term here. Would you recommend that, Radharaman?
One could look at for long run, yeah.
The next query is on Intellect Design. It's for you, Somil. Jigar from Mumbai is holding Intellect Design, currently sitting on a loss of 10%. Should he continue to hold this counter or exit?
Absolutely hold on to it.
Muthoot Finance as well as Shriram Finance, both held by Khurshid from Delhi. He wants to know, Radharaman, if he can deploy more capital in both or in either.
I think Shriram Finance would be a better bet.
The next query is on Bharat Coking Coal. Murthy from Thane is holding 800 shares, bought at a price of 45. Should he average or exit? Mr. Agarwal, any view?
He should hold on. He should not average.
Tejas Seth asking us the next question on Oswal Pumps. He's holding shares at 404. It's been a rank underperformer here, Radharaman. He's asking if he should still continue to have his holdings or average down?
He can average it at the current levels.
The next query is on Wockhardt. It's for you, Somil. Astha is holding few shares, bought at a price of 1,570. Should she hold or sell?
Wockhardt Pharma, definitely hold on. I'll be expecting a very good rally on the upside.
Next one is SJS Enterprises from Ishwar, who's from Kolkata. He wants to buy this counter for the long term, but asking because there's been a very big run up already here. Would you recommend that Radharaman still at this price?
Yes, definitely. I think the growth prospect seems quite good.
The next query is on Newland Labs. Ramesh from Bangalore has purchased few shares. Should he continue to hold or exit? Somil, any view?
Absolutely hold on to it.
Physics Wala bought at 123 by our viewer Srijit. He wants to know about a long-term view here, Radharaman.
So I'm negative on the stock here. So
the next query is on Eicher Motors and it's for you, Mr. Agarwal. Sumit from Delhi has bought fresh shares of Eicher Motors. Can he continue to hold this counter for more than 1 year?
Yeah, definitely. I think he should hold on the counter.
VA Tech Vabak bought at 1,547 by a viewer. He's in good gains right now. Radharaman, should he continue to ride that wave?
I think he should hold on and then continue.
The next query is on REC. It's for you, Somil. Sumana from Dubai is currently holding 490 shares, bought at a price of 415. Should she hold the counter for the next 3 months? Any target stop loss that you could recommend?
Hold on to the stock. It has given a very sharp sell-off. Keep a stop loss around 300. My target in the short term, medium term is around 350 probably. But if you have traded for short term, exit.
A long-term view on BSE at the current price, Radharaman, is the question from Suresh. Can he buy?
Definitely one should add on the current levels.
The next query is on Belrise Industries. It's for you, Somil. Vishwanath Reddy from Andhra Pradesh wants to know, can he buy Belrise at the current market price?
Yes, definitely. Keep a very strict stop loss around 215 and buy.
Power Mech as well, Somil, a quick view if it's the right time to enter for the next 6 months to a year is what Ahmad is asking.
I would avoid entering at this point of time. So yeah, if you have the position, hold on.
Got it. Well, that was the last question of the rapid fire. Somil, we'll let you go on that note. Thanks as always for joining in and giving us your views. Radharaman, stay on. A lot more stock-related queries on the other side after this very short break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रिनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। Amba Shakti SDTMT.
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
Let's build a staggered deployment approach and balance things out between aggressive and safe bets.
Ionic Wealth is your co-founder in your journey of wealth creation.
Let him get a second opinion first.
Sounds good. Ionic Wealth is putting the power of institutional grade AI in your pocket so you can get your second opinion first.
इस शेयर मार्केट में हाथ में हो कोई भी फोन, यहाँ है सबका इक्वल हक, क्योंकि आप जो भी हो,
जहाँ से भी हो, जैसे भी हो,
ये मान सकता है बॉस। तो SIP करो, इन्वेस्ट करो या IPO, डाउनलोड ग्रो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
One day horizon, एक cooling towel है, ये positioned as a heat protective gear. I can feel the cooling. We have a couple of lakh workmen working at different sites in very harsh conditions, and I'm more than happy to get your product to all of you.
This is such a moment for him.
हमने ये बनाया adaptive, wheelchair bound people के लिए independent mobility है.
इस तरीके से he is going to be the hero for many people.
Don't look at the disability, look at the magic of the ability that they have.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday.
Welcome back. You're still watching Ask Profit right here on NDTV Profit. We still have Rajaram Agarwal on the fundamentals. Let me now welcome in Raja Venkatraman. He is the co-founder at Neo Trader, now joining in the technicals. Raja, very good morning and thank you for joining in today. The first question coming through, and This one's on between Welspun Corp or APL Apollo, which is a better investment to do, is what Dilip is asking at the current price. Raja, what would be your opinion?
Yeah, when you take a look at Welspun Corp and APL Apollo, both of them have been doing well. But then Welspun Corp majorly due to the block deals that have been happening, we have been seeing the steady follow through to the upside. Now, what we need to see is that when the promoter offloads the quantity which has been mentioned, we can see that there could be some bit of profit booking. So overall, on the higher time frames, Welspun Corp looks to be a much stronger bet because the momentum is very strongly to the upside. And once the profit booking emerges, I would say a support levels around 1650 would be a good area to get into. So I would put more weightage on Welspun Corp.
The next query is from Shravan. He wants to sell 200 shares of Heritage Foods and buy Parag Milk. Should he do that? Mr. Agarwal, your view on this?
Second, he can do that, yeah. So he can maybe exiting Heritage and getting into Parag.
And this whole, dairy space continues to be in focus. We, of course, had the listing of Milky Mist, but the value-added product play yet again coming through in focus for all of these products. But let's, go across to our next caller now, Jigar, who's from Amchi, Mumbai itself, dialing in now. Jigar, a very good morning. What's your query? Hi, Jigar. Can you hear me?
Yes.
Yeah, Jigar, go ahead with your query.
Yeah, hi. So, is it Puneet?
Yes, yes, Jigar.
Yeah,
You're talking to Puneet. Hi, how are you?
I'm good, thank you. Very difficult to get through to you guys.
We've not had actually too many callers. I thought that, it's Raksha Bandhan, people might be celebrating, but glad, Jigar, that you could get through today.
No, 15 calls I tried.
Oh, wow. Well, I appreciate you trying for the first 14 times and glad that we could reach you, Jigar. What's your query?
I have 500 shares of NMDC at about $70.
Okay.
I missed selling it at 96 because I was waiting for 102, 103 targets.
Okay.
It's a technical view that I had. So is it now worth selling it here, still making some bit of profit? Or should I still wait for around 3-6 months? Not more than that.
Okay, got it. So 3 to 6 months. So let me go across to Raja then, because he'd be better off answering that short-term question. Raja, on NMDC, Jigar missed out, but is it still a good time for him to continue holding, wait for a better price on NMDC?
Yeah, NMDC is definitely, metals are once again in the limelight. But when you take a look at the prices where it is trading near the 2024 highs. So one should be really careful here because if there is some profit booking, if the overall scenario in the global markets were to slip, then 81 could be a good risk point which you can consider as part of your investment. Otherwise, if things stabilize and if there were an up move, then it could actually take out the new high, which will invite more buying participation.
Right. The next query is on Genesis. The viewer Baba Saab from Karnataka is holding 1600 shares, bought at a price of 244. Should he continue to hold this counter for the next 4 weeks? Any view on this one? Raja?
Vatek Baba, right? I didn't get the audio.
Genesis International.
Yeah, Genesis has been doing well. And when you take a look at the sectoral play, you can see that the stock momentum is.
Raja?
Vatek Baba, right? I didn't get the audio.
Genesis International.
Yeah, Genesis, has gone through a torrid phase, but then over the last few months, there has been some bit of recovery, which I'm seeing right now. So I would say that there are a good set of supports which have emerged closer towards the 170 mark, and the prices have rebounded from there. So yes, one can continue to hold, and if one has the capital, because it has come to good set of supports, can also look to add into at the current juncture.
Got it. Well, let's go across to Pune now. Aniket, dialing in for a stock query. Aniket, good morning. What's your query?
Hello. Good morning, sir. Good morning to panel. Actually, I have 15 shares of Ambuja Cement.
Okay.
I had a few more, but at the price of 529, and I had book profits at 600. So now I am currently holding only 15. But from that I forgot, and now it has fallen a lot. So should I hold, exit, or now it is good time to add a few more for long term, or buy another stock in this category, which looks good?
Got it. Well, Radharaman, on Ambuja Cements, what's your view for Aniket?
Cement overall, the cement pack has started giving reversal signs, and maybe things are not good in the first half, but second half looks very bright. So I think he can average it out and maybe add certain things in Ambuja at the current levels for medium to long term perspective.
Got it. So second half definitely looks promising, but viewers, of course, standard disclaimer: the channel that you're watching currently is part of the AMG Media Networks, and so was, of course, Ambuja Cement part of the larger group as well. That's a standard disclaimer that we are putting out. The next question coming through. This one's from Shankar, who's from Bengaluru, on Sterling and Wilson Solar. He's a regular viewer holding shares at 229. Wants to know if he can average at this current price or wait for that 229 to come back. Raja, how do you look at it?
The overall the solar industry and the renewable industry has been going through a share of phases, but then when you take a look at the current movement in SW Solar, Sterling and Wilson, we can see that the stock has been in a declining mode over the last several months. Now, in the last 2 to 3 months, because of some renewed interest in the EV space, we are seeing some bit of upward trajectory here. And I would say that this is signs of recovery, so one should continue to hold on.
Next query is on ITC. Right, it's on ITC. Lavanya from Bangalore is holding 1200 shares, bought at a price of 296. Should she hold or average for the next 6 months? Any view on this, Raja?
I would say that ITC has been trying its luck for almost more than 2 years, but the stock has not been really able to make the cut. And with the entire consumption basket not been able to pull its weight over the last several months, I would say that amongst them, ITC has been the weakest. So ITC should not be considered as a investment bet. And I would say that if below 260, then it could attract more selling interest. So overall, ITC is not a good stock to be in.
Got it. So definitely an underperformer according to Raja on this counter. Let's go across to the next one. This one's on Okla, India. Satyan, who's from Palakkad, actually asking us this question. He's been holding on for some time now since the IPO. Wants to know a 3-year view on this counter, and what would be your opinion here, Radharaman? Because, not that direct FMCG play, slightly underperforming as well, but is it still a good buy?
So I think you can look for other options in this sector rather than looking at this particular company. So maybe a direct FMCG place could have been a better bet right now.
Right, the next query is on Okla, India. Satyan from Palakkad. Okay, that's one been done. The next one is on Shriram Properties of Purvankar. The viewer wants to know which stock is better to enter at this point of time. Shriram Properties of Purvankara. Raja, any view on charts on this?
Yeah, I would say that both the stocks from this sector are underperforming, and I would say that both are best avoided.
Both are best avoided. Got a long-term view is what Prajwal is asking on Lemon Tree Hotels. He's holding shares at 140. And he's holding 900 shares here. Stocks at 107 now, so he's currently in a loss. Should he average down here? How do you look at it, Radharaman? We of course have a corporate action also of the entities. So what's your view?
I think he can hold on, maybe do averaging also the current levels. Because the buying price is high, and I think the stock is available at good price right now. So he can average and then take it forward.
Okay, the next one is on JSW Cement. Asma from Bangalore is holding 100 shares, bought at a price of 154. Should she add more? Look at any other counter for short term. Raja, any view on JSW Cement?
Yeah, the cement sector always goes through a lull phase, especially during the rainy season, and that's what we have been seeing amongst all the cement names, which are especially entrenched in cement, not like stocks like Grasim. And we can see here that JSW Cement also has been consolidating over the last few days. Yes, there are signs of recovery which I am seeing right now. But then, if I were to get into the resistance level, would be closer towards 130.
Got it. The next one is on MCX. Our viewer Rajesh actually holding shares at 2,200. So he's sitting on very good gains right now. Actually, wants to know the long-term view. Should he exit or accumulate? Is the question here from him, Radharaman. What's your take on MCX?
MCX is a good stock to hold on. He should not be exiting and I think holding on for a medium to long run.
And still, in terms of a buy, is this still advisable even at the current rate?
Maybe not buying at the current levels, but maybe holding on the current pricing. Maybe once it gets cut.
Got it. The next one, and this is a caller query from Andhra Pradesh. Kumar dialing in for a stock query. Kumar, what's your query? Very good morning. Hi Kumar, can you hear me?
Hello. Yeah. Good morning.
Good morning, Kumar. Go ahead.
Yeah. I bought Bajaj Finance around 10 shares at 975.
Okay.
So can I hold or add?
And this is a long-term bet, Kumar?
Yes, long-term.
Long-term bet. Got it. What's your advice on Bajaj Finance, Radharaman?
I think he can add further the current levels also.
Okay.
Right. The next query is coming in on NCC. Kavya from Hyderabad has bought around 3,000 shares at a price of 255. What's the outlook? Currently sitting on a loss. Should she continue to hold this counter, Mr. Agarwal?
So you continue to hold, but I will not advise any further fresh buying.
Got it. The next one coming through, and this question, it's on Forging or MTAR Tech. Both from different segments, of course, but our viewer wants to know if it's, this is Shujana from Chennai, wants to know if it's the right time to buy. Raja, on MTAR Tech, actually, we've seen, multiple moves come through and revival yet again, very volatile. But what's your advice on actually both of those counters, either of them or both of them that you like?
Yeah, Forging definitely is looking very interesting, and one should consider getting into Forging rather than an MTAR Tech, because MTAR Tech has had its fair share of run, and the sterling run which we have seen over the last few months have been quite prolific. So now at this juncture, profit booking is bound to occur. So if you want to get into MTAR Tech, the levels will be closer towards the 6,000, where there are some decent set of supports. Otherwise, between both of them, Forging is a better one.
Okay. The next one is from Sanjeev Jain from Rajasthan. He wants to invest 5 lakh rupees in Misho, Grow and Honasa for long term. Mr. Agarwal, what's your view on this? Should he do that?
I think you look at Grow as among the picks, what you're mentioning.
The next question coming through, and this one's on from Arun Kumar. He's from Karnataka and wants to know about Premier Energies. He's bought shares at roughly 1050. So asking for a very short-term view here, Raja, on this counter. How are you looking at it?
Yeah, like we spoke earlier, the EV space is definitely looking interesting, and anything connected with the EV space, this company is into the semiconductors. And we can see that the stock is consolidating at the moment. There is some bit of profit booking here. So I would wait for a recovery, and that recovery level would be the resistance zones around 1040 to 50. After that only, I would be looking at entering into the stock.
Next query is on Tata Tele. Shubhodam from Shubhodam is holding around 250 shares, bought at a price of 80. Should he hold or sell? Raja, any view on this Tata Teleservices?
Tata Teleservices is a very range-bound stock. So, if you're continuing to hold on, yes, you can hold. There are signs of recovery visible, but then I would not advocate adding any further capital at this juncture.
Correct. The next question coming through, and viewers, we are going through thick and fast on the show with your stock-related queries. So if you haven't already, the last stretch now for you to send your queries on. Next one's on Maruti Suzuki. Our viewer holding shares at 13,500, and he wants to know, and this is Bharat, if he should wait on or sell the stock now. What's a long-term view that you have, Radharaman, of the space as well? Because we're now starting to see consolidation. M&M also in that range, so is Maruti. The numbers for the monthly sales have been quite strong. How are you looking at this space now?
I look at the space being very promising. I think even the first 4 months, what numbers have come out have been very, very positive. And Maruti leads the pack to that extent. So I think we should look for a long term very clearly in terms of investment in Maruti.
Got it. The next question, this one's on an interesting one from Sriram Raghuraman. He's a regular viewer of the show. Holding IndusInd Bank at 629. Now, I don't know if he bought it on the way up or on the way down, but he's still sitting on some good gains right now. asking if for the long term he should still continue to hold. We've seen, of course, a big management change come through, that big derivative issue also behind. But Radharaman, how are you looking at this one, especially compared to its to the financial players in the private banking space? Should he book out, probably enter either of those, or should he continue to hold?
So I think he can maybe take a switch and book the profits here and then move into an Axis on ICICI. That's a better suggestion from our side.
Okay. The next one is on Godrej Consumer. The viewer hasn't mentioned his name, but he's holding around 6,000 shares, bought at a price of 910. What's the short-term view on this, Raja?
Yeah, Godrej Consumers seems to be under pressure, and we have been discussing about the consumer space under stress, and there is another stock that continues to face some headwinds. And I would say that it's not a right time to enter, but if the holding is there, then the risk level would be around closer towards 945 to 965. So that's a very important zone the prices have to hold.
Got it. I've seen a management change there as well, and hence the stock tanked actually on that day and hasn't moved either way from that level of 900 odd. But Padma from Bengaluru, and this is another stock that's not done well for investors, that's Havels. She's holding shares at 1270 and again wants to know a medium to a long-term view here. What's your view, Radharaman? Because we've seen that, for the last, I think, 5 years, the stock stuck in this range, almost absolute no returns. Should she bite the bullet, exit the counter, buy something else?
I think she can hold on. The stock seems okay in terms of now, so maybe she can hold on for some time more.
Query is from Ishwar from Kolkata. He wants to buy a stock from the CRDMO space. What would be your top pick here, Mr. Agarwal, for long term?
Which one you are saying? Which space?
CRDMO. Contract research development, pharma space.
So we would not like to recommend in that space. We would like to maybe look at more on the hospital side. Okay. That's a sector we like more. So that's the reason I was not recommending a stock there. So we like larger hospitals to that extent in terms of entering at the current levels.
Got it. The next question is on Transray Lighting. Rajiv, who's from Delhi, he's also a senior citizen, wants to know about a shorter 3-month view on this counter. How are you looking at this one, Raja? Again, a very perplexing one where stock doesn't move. It's been getting a lot of orders, but any view on the charts for this counter?
No, actually, despite some decent set of numbers, the stock has been unable to show some traction. So, which clearly says that there is not much of buying coming through, and actually there are some exits that are being happening. So, I would say that at the current juncture, 440 level holds a very important significance for the days ahead. So, below that, the stock would attract more selling.
The next query is from Suresh Khanna from Bangalore. He is holding few shares, 1,000 shares of Yes Bank since 1 year. Should he continue to hold this counter or exit? Mr. Agarwal, your view on this?
I think he continue to hold this counter. There are promising developments happening on the corporate side. So I think he should hold on.
Got it. The next one coming through, this one's on Acme Solar. Usha, who's from Bengaluru, holding shares at almost 390. Wants to know a short-term view yet again on this one. Raja has seen a good move this year, but is it still advisable to hold or book out?
Yeah, Acme Solar has been doing well, and there is no reason to book out. The stock is continuing to show a good performance on month-on-month basis. So I would say one can look to hold this stock.
Queries from Vijay Kirti from Chennai. He wants to know whether it's the right time to enter travel and food services. Raja, any view on this? TFS?
No, nothing in particular, because the stock has been quite sustained move over the last few months. So I would say that one should move on to some other trading bet or investing bet.
Got it. The next question coming through, this one is from Prashant, who's a regular viewer of the show on Suzlon, bought at 52.3, holding 2,700 shares, and wants to know the long-term view. Again, this one also, Radharaman, we've seen some moves, but I think the quarterly result wasn't that impressive, and hence stock has been in this range for a while now. What's your view for the long term?
So I'm not very bullish on the stock for a medium to long term. So maybe you can book and book losses and move to some other counter.
Correct. Well, let's now start, the rapid fire round in this edition of the show. Raja as well as Radharaman, you both know the drill. The first question's on Vedanta Power. Subodh holding shares at 38. He wants to know what's a view here on this counter, Radharaman. How are you looking at it?
You can just hold on, not to add at this level.
The next query is on Vedanta Power. It's for you, Raja.
Vedanta is done.
We are done with that. The next one is on Cupid. It's for you, Raja. Abdul from Kerala wants to know the short-term view. Any target or stop loss that you could suggest?
Yeah, Cupid is on a, you can say it's on steroids because the way it's moving, it's quite. So I would say that there is no target in particular, but then the risk, what you can keep it is closer towards 230 to 240. That would be your risk point as far as this trade is concerned.
Most certainly, counter continues to have an up move. But Namit from Munich holding on to IDFC First, and thanks for joining in, Namit. He's holding shares at 67. Wants to know if he can sell out of this particular counter. Radharaman, how do you look at it? He wants to buy into Grow. I think you've given that view. But would you recommend selling IDFC First here, Radharaman?
Yeah, if he's looking to buy Grow, maybe he can look at exit here and then look at Grow.
Got it.
The next query is on Syngene International. It's for you, Mr. Agarwal. Suresh from Indonesia wants to know whether it's a good time to enter for the next 1 to 2 years.
I don't think so. One should enter here in this for a medium term.
Latent view is the other one. A long-term view is what Rajesh is asking from Mumbai. Any view here, Radharaman?
I think yes, you can look for a long term.
The next query is on HG Infra. Is for you, Mr. Raja. The viewer is Shashidhara is holding around 100 shares, bought at a price of 720. Should she continue to hold or exit?
Yeah, one can look to hold on to this because the overall momentum is positive.
Correct. The next question is coming through. Actually, we've taken this one, so let me add another one. From Lavanya from Bengaluru on HDFC. What's a quick view here on the technicals, Raja?
Yeah, HDFC continues to be in some sort of pain point. I would say that with the stocks hitting lows, I would say that it's better to exit and move into some other counter.
The next query is on latent view. It's for you, Mr. Agarwal. Rajesh from Mumbai wants to know the long-term view on this counter.
Yeah, we can hold on. Yeah, we can add.
Next one's on ICICI Pro AMC, bought at 3292. Is it a good bet for the next 5 years, Radharaman? Is the question from Sunil.
Yeah, definitely yes.
The next is on Reliance Industries. It's for you, Mr. Raja. The viewer is holding 400 shares. Should he continue to hold or exit?
Yeah, you can continue to hold, but do not add further investment into Reliance.
Srinivasan holding on to Jamna Auto at 126. He wants to know if he should accumulate more at this price, Radharaman.
Yes, he can add.
The next query is on Ircon. Siva from Amravati is holding 528 shares at a price of 340. Mr. Raja, should he continue to hold or exit?
He can continue to hold.
Kantibai holding on to SBI at 1079, Radharaman. Should he continue to hold?
Yes.
The next query is on Infosys. It's for you, Mr. Raja. Sudeshna from Kolkata is holding 875 shares. Should she add more shares at current levels or continue to hold what she has?
Just continue to hold.
Garima holding Brigade Enterprise at 650. Wants to know a short-term view here, Raja.
Yeah, Brigade is on the positive side. More upward trajectory is possible.
Next query is on Orchid Pharma. It's for you, Mr. Agarwal. Shravan from Dubai is holding 70 shares of Orchid Pharma, bought at a price of 1040. Should he continue to hold this counter or exit?
Hold the counter.
Lalita Jewelry, a very recent listing. I don't know, Radharaman, if you have a view. A viewer bought shares at 201, the IPO price. Any view?
There's a positive view on the counter.
Got it. Well, that was the last question of the rapid fire as well as this edition of the show. We've done almost 85 queries. So Radharaman, thanks so much for staying on for the last hour and helping us solve these queries. Raja as well, very prompt in the last half an hour for helping us solve these questions as well. But viewers, out of time on this edition of the show. Thanks so much for watching in. Stay tuned though, a lot more action on the other side, and we'll be back with a lot more stock related queries at 2 p.m.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
Factoring in LRS, the route, and the currency hedge, here's your best move.
Ionic Wealth is your co-founder in your journey of wealth creation.
What's the rush? Let them get a second opinion first.
Yeah, this works.
Ionic Wealth is putting the power of institutional grade AI in your pocket so you can get your second opinion first.
इस शेयर मार्केट में हाथ में हो कोई भी फोन, यहाँ है सबका इक्वल हक, क्योंकि आप जो भी हो,
जहाँ से भी हो, जैसे भी हो,
ये मान सबका है बॉस। तो SIP करो, इन्वेस्ट करो या IPO, डाउनलोड ग्रो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
One day Bharat, you know a cooling towel है, ये positioned as a heat protective gear. I can feel the cooling. We have a couple of lakh workmen working at different sites in very harsh conditions, and I'm more than happy to get your product to all of you.
This is such a moment for him.
हमने ये बनाया adaptive, wheelchair bound people के लिए independent mobility है।
इस तरीके से he is going to be the hero for many people.
Don't look at the disability, look at the magic of the ability that they have.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
Arunesh Chawla, the DPUMP Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upwards.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way.
Hello and welcome to KYC. You're watching NDTV Profit with me, Sharad Dubey. This is the show where we get you interesting companies, recently listed companies, and also companies with the story, and also a chance to make alpha for you and for your portfolio. But today there's a very interesting company I've got for you. It's of course recently listed company. Try to guess it. It's one of the largest private IPP players in India. Also, I'd like to give you one interesting hint. It's backed by Abu Dhabi Investment Authority. Stock was recently listed actually in this month itself, August 6th. And the stock has done fairly well. It's up 13% from its IPO price as well. Of course, it's an energy related stock I'm talking about, and the company in focus is Juniper Green Energy. This is the company which we are talking about, but the question remains is, why are we calling this company? Of course, the company has come out with its numbers. We'll try to understand that, and the moat and industry positioning, how actually things work out, or is it just like any other player? Also, another key query we'll be understanding is what led to a strong Q1, and will this actually sustain, because the numbers are very strong here. Also, the third queries would be the details of that 25-year power purchase agreement with SGVN and the margin guidance, at least on a consolidated basis. How does it look for the company? How does the company mitigate the risks for the industry? Because there's always a risk element attached to it. The BSS, Battery Energy Storage System, that is where we are seeing the outlook and the tendering projects as well. It's small, but Street is looking at that as well. Debt reduction plans and the target debt equity ratios. What is it? Because of these companies or this industry, the balance sheets are heavy. A lot of queries, the management will be answering all of them. But let's understand what the company actually does. Where is the alpha lying here? And the details about the company. It's NCR based IPP renewable energy power producer. Let's get into the details about it. They're focused on utility scale, solar, wind and hybrid projects. I'll give you the detailed breakup about it also, but let's understand what this company is and where in the industry is the company fitting. FDRE, as we call it, Firm Renewable Energy Segment. So this is the dispatchable segment to talk about it, and this full form will come. The integrated capabilities come in, especially the entire project life cycle. So we'll try to understand the business model. First question from the management: long-term PPA with central and state government entities. So yes, there is stability in the revenue. Weighted average tariff is roughly 3 rupees 70 per unit, just keeping it very simple for you. And the total outstanding debt, this is a very important number, 13,000 plus crores coming in. Remember, the company has come out with its IPO, and maybe some proceeds were used to reduce the debt as well. Major revenue comes from 3 states, Maharashtra, Gujarat and Rajasthan. So that is what we are talking about. 23% of the project's portfolio is operational right now. That means the remaining portion work needs to be done. But before you start your analysis and watch the KYC on Juniper Green Energy, understand the full forms, and it's nothing to panic. It's very easy. Gigawatt peak, that's a power unit. Also, we have these important power units which you always keep hearing when you judge or analyze a power company. This is very simple: power purchase agreement. Also, 2 important things: WSH will be coming in the investor presentation if you're analyzing. It's very simple. It's nothing but wind, solar, hybrid. That's the short form. And FDRE, firm and dispatchable renewable energy. There is an angle to BESS as well, but this is something you should be knowing when we talk about this company and with the management as well. But what's the capacity? The operational capacity is approximately 2.5 gigawatt peak and 500 megawatt for BESS. Going ahead, the total portfolio is of course on the higher side as well. But from the capacities, the new order wins is something which caught my eye. This is the most important one: 25-year-old PPA with SGVN. The rate is at 4.25 rupees per unit. Next order win is SECI. This is a wind order of 870 megawatt and also a BSS order coming in. So orders wins is something which the company has been announcing post June 30th as well. And GUVNL wind tender also award has come in at roughly 3.5 rupees per unit. So this has been the recent order wins coming in from the company. But how does the portfolio mix actually stack up? And I have taken the technology part. Solar is largely, you could say, coming in at around 30% Wind is on the lower side. Hybrid and your FDRE segment, that is where we are seeing much bigger action happening. So these are the 2 segments you should be tracking when it comes to the larger portfolio. Also, there are some industry triggers which you should be talking about. India's peak demand is expected to cross 340 gigawatt by FY31. So you can imagine so much of power sector and power ancillary segment is supposed to go up. The expected solar capacity addition would be roughly 52 gigawatts by FY31. So important industry triggers are definitely there, but I've done some detailed analysis on this newly listed company. Strong Q1 operational numbers, especially on the capacity addition, and that's where I'm going to give you the operational parameters, but you need to stay with me. It's going to come in some time. Second important reason what may work is the receivable outstanding days are reducing. This is really important for a company in this industry. 98% of their portfolio is secured via long-term PPS. Typically, this is around 20 to 25 years. That means the revenue visibility is there, so is the stability. Strong competitive bidding win rate, and that is where the conversions are good, and this is a very important operational feature for the company. Another good reason is the strategic diversification in both hybrid BSS solutions as well, and currently right now this is what giving the premium to most of the listings, IPOs and even listed players as well. But what may not work? Higher valuations versus peers. A little bit of analysis we have done. It's quite early. IPO pricing might have been a bit expensive, and when a new company comes, there's of course lack of analyst coverage, and that is why we feature these companies very early in KYC only for you. Execution risk is definitely there. This is the entire industry specific risk. Higher working capital requirement would be there, and at times payment delays also happen because the exposure is, on a concentrated manner, especially on the off-takers and the supplier base as well. So that is where the concern lies for the counter. But let's understand what the company is all about, and because of that we are going to get the KYC ratings for you. Remember, the company has been recently listed this month itself, so a lot of data would be coming post the Q1 numbers, and we have taken from the RHP as well. We have income statement, balance sheet, cash flow, but today we are taking operational parameters. And remember, whenever an IPO comes, the return ratios also get in stress because the capital base expands. So it's not fair to judge a company a lot of times on a case-to-case basis, at least on the return ratios. Coming back, shareholding street cred, take it with a pinch of salt. It's just 1 month for the IPO. Valuations we'll compare and get you all the peers. Which are the peers for this company and the outlook as well. What are the key numbers you should be watching out for? Remember, these type of companies have long-term vision, but short-term issues on the execution risk and payment always remains in this industry. But let's start income statement, how things have happened. Q1 numbers, we'll come to it, but the CAGR numbers are very strong. PAT numbers, it has been a little bit mixed, but the top line and the operational numbers have been very strong, and largely you should be looking at the EBITDA numbers when you judge a company of this sort. There are a lot of adjustments also. I'll simplify it for you. The margins is pretty good, and they have maintained that 95% margin mark also. So that shows a good momentum, in this counter. It's a stable company, to be honest, but is there any growth? That's the question to be asked. Q1 numbers have been really strong. Of course, the company has reported its highest EBITDA and revenue numbers as well. But let's talk about balance sheet. Balance sheet, a little bit of concern is there. Look at that amount. The expand company ज़्यादा करेगी, debt भी ज़्यादा लिया, roughly around 13,000 crore, and currently it's plus that. Now, what will be the debt reduction plan? And for a business like this, what is the debt equity ratio? What should be the optimal one? That's what we'll try to understand. But as of now, for this industry itself, I give a very neutral rating here because there's always going to be a need of large capital and even debt would be there. So it's a neutral rating for the balance sheet. But let's understand the cash flow. Companies expanding capacities. I mentioned to you earlier in the positive point that the working capital ratios are increasing, and when that happens, the cash flow goes up, and this is the number I'm talking about that has happened if you compare that with FY25 or even FY24. Interesting, right? For a company like this, the question is, when the cash flows will come, and the company has delivered it very strong. So I'm going to give this a strong thumbs up as well. But let's move on from the financials and talk about the operational parameters, how different it is. This is a capacity utilization factor. It's called CUF, and this is generation in terms of million units as well. These are the numbers. Largely, they have improved and done well. And so largely, I'm going to give this a strong thumbs up as well. The Q1 numbers, remember, good capacity addition was there, and that's what captured in a company like this. Shareholding, take it with a pinch of salt. There is, of course, Abu Dhabi Investment Authority invested in the company. 86% promoters are holding. That means they are going to be reducing their stake as per SEBI norms over the next 3 years by at least 11% here. But as of now, it's a neutral rating, nothing much to talk about here. Let's talk about Street Cred. It's just 1 month data. It hasn't been a very strong, massive IPO listing as other companies compared. A minor 8% listing gains. From IPO price, stock is up 13%. And since listing is 4%, the company hasn't done much here. After Q1 numbers, slight sell-off pressure was definitely there. But it's very even Stevens as of now as well. Market is slowly trying to absorb. A lot of institutions and viewers in the retail are watching the show. Maybe you'll get an idea where does the company stand. So right now, let's keep a neutral rating here. Valuations, well, I would say it's a neutral, but slightly towards the expensive side for Juniper Green Energy. Acme Solar, NTPC is there. These are the FY26 EV EBITDA multiple which I have taken. So it looks like fairly valued to its peer, but on the higher side. Also, compare that with Adani Green as well as API Green. It is slightly on the expensive side for both of them. So that's the concern coming in for the valuations, but take it with a pinch of salt. Let the earnings come and let other peers also perform. These are long gestation business models. We should not take decisions on just 1 month basis. Let's talk about the outlook. And outlook is also neutral. I'm going to keep it. The numbers are important. You can note it down or take a screenshot of this conversation. BSS installation is roughly 4,500 megawatt by June 2027 and 10,000 by March 2028. Also, a couple of numbers to track would be 14,000 acres are available for the under construction areas and the awarded projects. So there is a significant way already the company needs to do, and already the utilization factors are slightly lower. More than 200 locations are available for wind turbine installation, and I still say it's a very nascent industry right now. So you take things with a pinch of salt. It's a long gestation business model. For a long-term investor, it'll be much more interesting to understand or track this sector. But as of now, I'm going to give this a neutral rating, especially because of execution risk as well, which is involved, and we have seen that. But let's do a revision. The company has done really well in income statement, cash flow, and the operational numbers. The inherent nature is such that the balance sheet will always have debt in this kind of a model. Also, short-term period when it comes to the shareholding and Street Cred, I've kept a kind of a neutral rating here. Valuations also neutral as of now, but slightly on the higher side. Outlook, long-term is definitely the big story, the India growth story, the India's energy story, but short-term execution questioning. So I'm going to keep a very neutral view for this company, around 5.5 out of 8 when it comes to Juniper Green Energy. Take things with a pinch of salt. It's just been 1 month the company has come for the IPO. Let it develop more, and maybe we get more perspective in the next KYC session as well. But our conversation continues, and we'll have Ankush Malik, the whole-time director and CEO at Juniper Green Energy, where he'll talk about his journey, the company's journey, and what lies ahead for the future as well. But let's take a small break. We'll be back soon.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Let's build a staggered deployment approach and balance things out between aggressive and safe bets.
Ionic Wealth is your co-founder in your journey of wealth creation.
Let him get a second opinion first.
Sounds good. Ionic Wealth is putting the power of institutional grade AI in your pocket, so you can get your second opinion first.
इस शेयर मार्केट में हाथ में हो कोई भी फोन, यहाँ है सबका इक्वल हक, क्योंकि आप जो भी हो,
जहाँ से भी हो, जैसे भी हो,
ये मान सबका है बॉस। तो SIP करो, इन्वेस्ट करो या IPO, डाउनलोड ग्रो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Arunesh Chawla, the DPUM secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has a good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV.
Hello and welcome back to Know Your Company. We are joined in by Ankush Malik, the whole-time director and CEO of Juniper Green Energy, recently listed company and good Q1 numbers coming in. Mr. Malik, it's always a pleasure to have you with us. What's the actual moat for the company and the industry positioning? You're coming first time in KYC. Take it away.
So the business is, we are a renewable IPP, right? So we build projects, we then own them for life, right? And sell power to utilities under long-term PPAs. I think how we have differentiated ourselves is, so today in terms of overall capacity, we have more than 11 gigawatts of capacity in our pipeline, of which the operational capacity is around 2.5 gigawatts. There's another 3.6 gigawatts which is under construction where the PPAs have been signed. And there is another 5 gigawatts where we have won the tenders and we are awaiting PPAs, right? Now, along with this, we are also building, we also require 9 gigawatt hours of battery, right? Now, so the real differentiator for us, I think, has been in terms of our capabilities around having all three sources, which is wind, solar, and batteries, right? So what we have been able to do, we started off with solar. We then moved into wind around 2021, and we have in our earlier avatar as Orange, we had done a lot of wind. We started that in 2022, and then in 2024 we moved into batteries as well, right? So having all three capabilities has allowed us to do these new age tenders, which are called FDREs, which is firm dispatch RE, and that plus hybrids form around 84% of our portfolio. So primarily, I think what happens is you get better returns on these projects because this is technology which is newer. So you can move because we have been able to move faster on these. We have been able to make returns which are better than the market. In terms of our moat, I think on a qualitative basis, it's about being able to move very, very fast, right, on ground.
And Ankush, what led to a strong Q1, and going ahead, what will be the guidance?
So yeah, I think the numbers are strong, but I think this will keep on happening primarily because if you look at the capacity addition, right? So the capacity addition that has happened. So last year FY25 we were 1170 megawatts of capacity. That capacity today sits at 2575, of which around 700 megawatts has come in the last 4-5 months, right? So what then happens is in the coming quarter, you will see the entire revenue EBITDA for this capacity also coming through. What happens is, in terms of guidance, right, what we are looking at is by end of FY, so by FY March 27, we are looking at a capacity of around 4 gigawatts. The battery capacity would be around, by March 27, should be around 2.5 gigawatt hour, goes up to 4.5 gigawatt hours by June 27. And then FY28, we are looking at a number of around 6 gigawatts plus 10 gigawatt hours of battery, right? So primarily because of this, you will see numbers as also growing very, very fast, right, on the revenue and the EBITDAs. The capacity that we're talking about, which is the 4 gigawatt capacity by March 27, the run rate EBITDA is around 2,700 crores.
And Ankush recently announced a 25-year PPA with SGVN. What are the key details and our order outlook here?
Right. So this PPA that we signed yesterday is a 50 megawatt PPA, which is a 25-year PPA. But our business model, all our projects actually have, or 98% of our capacity is tied up under similar PPAs, right? So these are all 25-year PPAs. So the good part is once you see our EBITDAs coming through, right? So whatever EBITDA has come through, that will essentially remain throughout for the next 25 years, right? Because the PPAs are already signed, our product is already sold. What happens is we have these stable cash flows which remain, and the growth comes in from new capacity, right? So that's the benefit of having a 25-year PPA, right? It's a very, very stable cash flow, so you'll not see EBITDAs going suddenly going down, right? So there is some variation due to weather, but that variation remains between plus minus 5%, right? But whatever you see today in that has come from commissioned capacity, that will stay not forever, but that will stay for the next 25 years.
And Ankush, what would be the margin guidance for FY25? Any sustainable rates going ahead?
See, in terms of our EBITDA margins, you would have seen that this year or this quarter, this number is around 90% or 90 to 91%. We believe in our business, this is where our EBITDA margins will stay. So 90 to 91% is the EBITDA margin that we are looking at over a longer term period. It has improved previously from 86%. And that is again primarily because the size was much lower, right? So we are 1100 megawatts. Now we are a 2.5 gigawatt company. We largely see the EBITDA margins being stabilized around these numbers going forward.
See, there are a lot of risks also, concentration risks, execution risk in the industry also. How does your company mitigate that?
In terms of execution, I think execution risk, especially on renewables, is around two things majorly. It is land and grid connections, right? So once the land acquisition is done and you have a grid connection, the project completion or the project construction is pretty standard, right? Maybe a little more tedious on wind, but on solar it's pretty not a major risk, right? So what we have been able to do is we have been able to move early on grid connections and land, right? So today we have grid connections for our entire capacity that is there in our pipeline, right? So for the entire 11 gigawatts, we have grid connections. We have another 4.5 gigawatt of grid connections further. And same is the case for land, right? So land, we have already acquired 14,000 acres of land, which is available for our under construction and pipeline projects. So I think, yeah, so primarily the way to mitigate these risks is to move early, right? Have sites which are developed by the time, so that by the time you get into construction, these are all those issues are sorted. And that's what we try to do.
All right, and Ankush, speaking of BESS, that is battery energy storage systems, how is that growth looking like for your company?
So on the BESS space, right, I think BESS has primarily come in over the last 2.5 years. I think where we sit on BESS is providing it as a full solution along with our renewables, because then it allows us to provide solutions which cannot be provided by a lot of entities, right? Allows us to then have higher margins with respect to competition. There are now standalone BESS tenders that have come about over the last 1.5 years. But there we have still not participated because the returns are not significant, right? What has happened is getting bid as a transmission element where the risks are pretty low. A lot of new people have entered. So we're not looking at a standalone BESS to that extent, given the returns that are available. We're looking at it as a part of our overall renewable solution, which has allowed us to add returns to our renewable portfolio. So that's how we are looking at BESS.
All right. Thanks a lot, Ankush, for your views on the company recently listed, coming first time for the KYC and giving interesting industry views as well. It's always a pleasure to talk to you. So there was an interesting company debuting for the first time in KYC, Juniper Green Energy. But is there some execution risk at play, or India's growth story, the long term for the renewable energy remains strong? For interesting companies like this and much more, including the newly listed ones, stay tuned to NDTV Profit, and yes, keep watching KYC.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
Factoring in LRS, the route, and the currency hedge, here's your best move.
Ionic Wealth is your co-founder in your journey of wealth creation.
What's the rush? Let them get a second opinion first.
Yeah, this works.
Ionic Wealth is putting the power of institutional grade AI in your pocket, so you can get your second opinion first.
इस शेयर मार्केट में हाथ में हो कोई भी फोन, यहाँ है सबका इक्वल हक, क्योंकि आप जो भी हो,
जहाँ से भी हो, जैसे भी हो,
ये मान सबका है बॉस। तो SIP करो, इन्वेस्ट करो या IPO, डाउनलोड ग्रो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
One day Bharat, you know, a cooling towel है, ये positioned as a heat protective gear. I can feel the cooling. We have a couple of lakh workmen working at different sites in very harsh conditions, and I'm more than happy to get your product to all of you.
This is such a moment for him.
हमने ये बनाया adaptive, wheelchair bound people के लिए independent mobility है।
इस तरीके से he is going to be the hero for many people.
Don't look at the disability, look at the magic of the ability that they have.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
Arunesh Chawla, the DPUM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading?
Nifty started the session in the green today, but now trades off day's highs, still above 24,000. Broader markets see mixed moves. IT leads with gains as heavyweights aid the rally, and FMCG, auto as well as real estate drag in the trading session today. IT stocks surge with TCS, Infosys and HCL Tech gaining as Nvidia's strong results revive optimism around the global AI trade. Oil holds gains as hopes of a swift US-Iran deal fade. Uncertainty over Strait of Hormuz reopening keeps the supply risks elevated, supporting crude prices. Tencent's Instruments makes a blockbuster market debut with shares more than doubling from the IPO price. The issue also sees massive investor demand, oversubscribed multiple times. Ather Energy jumps as Hero MotoCorp really moves to buy more shares. Tejas Network surges after bagging a large TCS order for BSNL's 4G network, exceeding its existing order book. Hello and welcome. You have joined us on Markets at 12. I'm Nisha Podar, and we are here today in NDTV Profit, really celebrating the day of Raksha Bandhan. To all our viewers, many warm wishes on this particular occasion from the entire team of NDTV Profit and Markets at 12. Let's begin the show by looking at the market. And yes, the markets are also treading cautiously today. Nifty 50 flattish in trade in terms of the momentum, but absolutely listless at this particular time after really losing a lot of ground from the positive zone to now the negative zone. But 24,000, that is coming close, and that is where a large amount of pessimism really lies. Let's take a look at the internals. It's a broad-based kind of a pressure movement, because if you take a look at the sectors, it's only the IT sector which is really showing the maximum amount of momentum, and there you go. It's Infi, TCS, and some of the banks like HDFC Bank which are really up in trade. But there you have the sectoral play. Just take a look at that. It's a sea of red there and only a tinge of green, especially coming in from the IT sector. But remember, IT sector has been a highly volatile sector for many months now. There are days it's the top gainer, and there are days it is the top loser. There is nothing in the middle when we talk about this particular sector's momentum. In fact, if we really take a look at the broader market also, mid-cap universe is also in the red zone, 0.1% down in trade. And when we take a look at the banking sector, that is one space which is really taking the lead in terms of pessimism, especially from the heavyweight side, that is putting pressure now on Nifty 50. Aman Chauhan, who's the fund manager at Abacus Asset Manager, joins in now for more discussion. Aman, good to have you on NDTV Profit, and warm wishes on Raksha Bandhan to you and your family as well. To begin with, on a day like this, of course, the participation is also on the lower side, but it is quite listless day of trade, and we have seen enough momentum in the first half hour of trade where market has lost a lot of ground. What's your sense on that?
Sure. Hi Nisha, thanks for inviting me, and festive season greetings to you and your viewers also.
Thank you.
It's not just today. I think last 2-3 days market has been lackluster, and one of the near-term reasons is that there's too much of activity on the block trades, on the P blocks that is coming in, which is sucking in the liquidity. So not much of money or interest has flown into the secondary market per se. So too much euphoria in IPOs in that sense, and blocks. So these two things are taking a bulk of the liquidity. That to me is one of the near-term reasons. Besides that, crude is still north of 80-85, which is not a good signal, though we have stopped discussing the Middle East crisis on a daily basis, but that is something which is still lingering. In spite of FCNR, everything coming in, rupees still 95-96, so that is also not improved. So from the global perspective, things have not yet turned positive for somebody to look at India in a big way and we see a good rally, and hence the time correction or the sideways moves that we see.
All right. So, Aman, very well pointed out. In fact, this was one particular trend which was really on top of my radar also in terms of the selling pressure really coming in with the block deals really taking place. Is it a market of sell on rise? Because as soon as the markets really tested again, Nifty 50 at 24,200 levels, a series of block deals really came in with some bit of stock momentum already seen. Is that a sign that the market and these investors are pessimist about the long-term gains and maybe see further weakness going forward, even though we are entering into a sustained festive season? So is that the sense we are getting from these large investors and the block deals being launched right now?
No, sorry, we can't say that, because frankly, this is a market. For every buyer, there is a seller, right? So while the FI or a P is selling, the domestics are buying, right? So if you look from the domestic angle, they are bullish, and that's the reason they are buying, right? So it's difficult to say that is this a sign that market is sell on rise. Ultimately, right now, for last several quarters, what is holding on to the Indian market is domestic liquidity. It is a mutual fund, it is the institutional bank, it is a retail bank that is holding on to the market. It's not the FIs, and they continue to remain strong. From that viewpoint, I don't think this is like a market on sell on rise. Yes, there is bit of supply which can, or if, which is a near-term overhang, but I think in the month or so, the SEBI deadline for many of the IPOs will be behind us. So whichever IPO has to come will happen in the next month or so. Then it will be a normal flow. It won't not be a rush kind of a scenario that we are seeing today. And post that, then markets can start to move up, because then there will be limited supply, and the liquidity that continues to come in then gets, you can say, invested in secondary markets also.
Right. Of course, that was just one of the points that I mentioned. But going forward, the festive season demand and the expected market was positive momentum, and then that being weighed down by the crude and many other factors that you mentioned, also add to that a higher base effect in Q3 that is going to impact the overall earnings. How are you seeing the next few months of this calendar year for the market?
Frankly, the first quarter results have been much better than what we or the street expected, because we all felt in the March quarter the Middle East impact was not visible because everybody had a 1 month of inventory, and hence just the month of March was not visible in 4Q. 1Q we felt we'll see the margin pressures, but that has not come in. Not just that, even the top line growth has been pretty decent, right? So the domestic demand has held up pretty well. Based on that, we are now, you can say, expecting a similar kind of number in 2Q also. If that has to pan in, bearing the small impact one might have because monsoon has not been, it's below normal, or it's not being as good as what we would have liked it to be, overall we'll still see then a double digit kind of earnings growth for FY27, and if that happens, then it's a decent earnings growth that, in spite of macro challenges, in spite of monsoon, everything, corporate India still grows at double digit. That, I think, is a good long-term positive for any investor looking at India.
Right. Also, Aman wanted to know a quick word on some of the things like the themes that you are still bullish on for investments at this level.
So we are still clearly adding on to pharma. That is one sector which is also a clear beneficiary of the currency, plus it's a very resilient sector. NBFCs and then mid-sized private banks is the preference in the financials. We are also pretty positive on the manufacturing theme, so we might not look or invest into an MNC cap goods company because the valuation will be very high, but anything decent both on the cap goods sides, engineering sides, the EPC, anything that is benefiting from the manufacturing growth that is India is witnessing, we are looking to invest into that names. IT, we are still neutral. I know today it's the buzzword because one, stock are pretty cheap post the recent fall, post the AI announcement that came in. But we are still not very excited. We feel more of a market performer than an outperformer, and hence not very excited in adding weightage in the IT services sector. So, and plus we are positive on metals. So both ferrous and non-ferrous is something that we like, and that's a decent exposure in our portfolios also. So those are probably the sectors that we are looking at the current juncture.
All right, Aman Chauhan, always a pleasure to get chatting with you on NDTV Profit. Thank you so much for joining us, and enjoy the rest of the day. Thank you.
Thank you.
All right, moving on, and AI is the big theme that we are really focusing on. So artificial intelligence is quickly moving from a buzzword to a real world tool for solving problems at scale. And India sees that opportunity really perhaps better than most. Salesforce India CEO Arundhati Bhattacharya talks about the use of AI and scale of adoption in conversation with me earlier. Let's listen in to an important snippet of that conversation. While many companies are new age, they have adopted it faster because also they are newer in terms of their whole establishment. What happens to the old establishments who have a low-cost model which gives a consistent return to all the stakeholders? There, how difficult is it to really make them understand the ROI dynamics from not just quantitative but qualitative perspective? One. And second, how difficult is the conversion still on many of the sectors which have been the sectors of the past?
So, you are right that the new age companies, because they don't have legacy, they write on a blank page.
Yes.
It's easy for them to start with AI-infused apps or solutions. In respect of legacy companies, they can't throw away their legacy structures, right? So to that extent, obviously, they do take a little more time in order to understand how they will adopt. But the question as to whether they will adopt because there is an investment required, I don't think that question is there at all. Even when you have a legacy stack, you don't just sit on that legacy stack.
Yes.
You have to maintain that stack. You have to change when the versions change. You have to put in new facilities on it. You have to launch new products. You have to address new regulatory requirements. So there is a lot of work that goes on. It's not that you do one investment and that's it. After that, it's a very tiny investment that goes on. That's not the way it is at all. The investment into IT is an ongoing investment.
Yes.
So this will form part of that ongoing investment. However, what is really required is for us to understand, in order to make this really effective, when you are changing a product, you have to also change the processes and the people. Now, people change doesn't mean you change the people. It means you upskill the people.
Yes.
It means you give them the right kind of inputs to enable them to use the new technology.
Yes.
But the process change is also a powerful one, in the sense that what could take earlier 8 steps, today may be able to be done in 3 steps.
Yes.
Now, do you really change the process? Or do you say, this is the way I've always done it, and I'm going to stick to it?
Yes.
So, it needs a lot of rethinking. And that is why you find in the legacy organizations, because they need to put all of their workflows, they need to automate their workflows, they need to create a data foundation, a solid data foundation to whatever they're putting on. So there is a time that is required for them in order to really absorb the newer technologies. But that does not mean that they are not working on it. It also does not mean that they are not going to spend on it. They are. Because this is a must. Means this is something that's a given.
But there was a famous quote that I recently picked up, that there should be reservation for humans in the age of AI.
I think, given where we are, and especially in India, go to any of the state hospitals. Look at the amount of time a doctor can give to a patient. Can you increase the number of doctors materially so that the patients get more time? You can't. You have to have digital labor over there
Yes.
in order to free up the doctors to give that little personal time that a patient deserves.
But sophistication also is a luxury in India, where we are so cost sensitive.
No, but it is not sophistication. What I would say is that a patient deserves to be heard.
Yes.
A patient does not deserve for...
And technology helps that.
Exactly.
Yes.
So what is repetitive? Say, for instance, taking down the symptoms. Now, I have an agent where I just recite my symptoms. It takes it down and comes to a, say, initial diagnosis. And as the patient is working in, the doctor gets to hear all of this.
Yes.
So he already knows the initial issues, the symptoms, the initial diagnosis. What he does is look at the patient, actually has the time to look up and look at the patient and query the patient.
Right.
So as to ensure that you're getting the right diagnosis or refining the diagnosis.
So healthcare has several use cases, but like all sectors, but the trust bit at the last mile,
Which is why the human will always be in the loop.
Yes.
I do not believe that the human can be taken out of the loop, especially where health is concerned and where money is concerned. These are two things that are primary to human beings. I do not see humans being replaced there.
All right, so that was Arundhati Bhattacharya demystifying artificial intelligence, its usage and adoption by Indian corporates. Let's now move on to another top story that we are really focusing on. It's the new listing that we are talking about, and it's over 100% gain on listing that we have seen on Tencent's instruments. Let me take it straight across to the management and the promoter group, Aryan Rathi, who's the lead global sales at Tencent's Instruments, and also Vinay Rathi, who's the managing director. Gentlemen, so good to have you on NDTV Profit. My first question to you, Vinay, is that the investors have really shown a lot of support and confidence in your company even after listing. The first day pop was phenomenal. How are you going to sustain this confidence for shareholder value? What are the key drivers that you're going to deliver on as a company?
No, first of all, I would like to thank all the people who have helped to have the company listed. And today we have got from limited number of shareholders to today we have got over 1 lakh shareholders. So thank you everyone for this huge listing. So we are not even able to digest what does it mean. So we are still digesting. And what we can assure all the investors and all the shareholders as of today is that we would be pushing hard and pushing harder our goals to reach the customers, supply them better product, supply them better engineered product, stay invested in R&D the way we are doing, and the rest is in the hands of the market.
Right. So several aspects that really work for your company, especially the sector that you belong to, the market, the IPO market is really showing a lot of confidence in the manufacturing and the services which are more real when it comes to the industrial sector. Now, Aryan, when we talk about the global market, of course, your sales and exports momentum has been also on the positive side. What are the growth drivers there? What are the internal targets in terms of reaching out more geographies? And how is the export mix going to increase and also benefit on the profitability aspect in terms of the margins that you gain?
Right. So, I mean, manufacturing is on the up, not just in the investing world, but we are seeing capex across our target industries. And we are very hopeful for a growth in these international markets, especially supported by the newer companies we have set up in South Korea, Poland and Mexico. So we are seeing good traction there. And we believe the growth should be in line with what we've grown in the past. And I mean, it looks very hopeful given the kind of, let's say, projections we are seeing.
Right. So, Vinay, coming to the numbers, in the last 3 years, numbers that you have posted, we have seen that while the EBITDA margin is the one which has dampened on a year-on-year basis in FY26, your profits have really increased. Where is the margin erosion really coming in from? How will you arrest that? And what is the kind of guidance which you'll give for profits as well as profitability aspect as well?
So I would not say that the margin has come down over the last 3 years. So it is stabilized in the range of the EBITDA range is nearly similar, a point here and there. So those were maybe because of some special projects in some years. So we got some additional margin, but I think we would be hovering in the same range of the margins. So what we are trying to do is to choose our products and also our customers so that this kind of margin can be maintained and having a similar growth profile what we have been having in the last 3 years. So that is our endeavor to add more products, more innovative products and pushing for a reasonable margin profile what we have been adding in the last years, what we have been having in the last years.
Right. So, Aryan, you want to throw more light on which are the new products which are seeing a lot of demand, where the focus is coming in from in terms of demand as well as value creation in terms of the margin play in more evolved products?
For sure. So, I mean, we're working on multiple technologies across different markets. Essentially, temperature is ubiquitous. So, we are working on specialized technologies in cables, let's say also in the sensors, where we are attempting the automotive segment. We are also working in the new energy areas and developing products for that. So, electrification is a theme that we are very bullish on, and I mean, we are seeing major tailwinds, especially for our electrical heating segment. So we are foraying into the mid voltage heaters there, where that will unlock a whole host of opportunities in a market that is not very crowded. So I mean, it's a mix of newer kind of markets, newer products, developing our existing product lines, I mean, to be at the cutting edge across the global stage.
Right. So also, Aryan, from 29% of the revenue from the export composition, what is the target that could really it can increase to?
Right. So I mean, if you see that our export growth has been a lot faster than what we've been growing in India, and we hope to continue that. That will be a mix of deepening our presence in existing markets like Southeast Asia, Middle East and Europe, and also exploring newer markets. I mean, what I mentioned earlier as well, markets like South Korea, like Mexico, that are industrializing and growing extremely fast. So we see, I mean, immense opportunities there. That said, I mean, India, we're seeing I mean, immense demand. So I think both the markets will be competing with each other for who grows faster.
Right. So there's good competition coming in. But Vinay, give us a sense in terms of it being a capital intensive sector. And now we are in a stage where the pressure points are building on your kind of companies from 2 points. First is the raw material cost, the supply chain disruption overall. How is that impacting? And second, how are you also taking care of your leverage position and making it far less, costly and more efficient?
Yeah, firstly, for the raw materials, so most of our orders till date have been a short-term contracts, like the contract period could be ranging from 4 to maybe 16 weeks. So most of the cost of the raw material or change in the price of the raw material is already built up in the prices for the customers. So there is no impact or erosion of the margin because of the change of raw material prices. That is one thing. Secondly, because of the leverage position, I think so there would be an additional profitability layer which could be added because of we are clearing off a lot of debt on our balance sheet. So that would be adding up a few percentage like on the profitability side because of this additional income.
Right. How much debt levels are you comfortable with? And can you give us a plan in this by this end of this financial year? What are the debt levels that you will bring it down to, as you already have a plan of reducing it?
So we would be clearing off about 55 crore rupees of debt from the proceeds of this IPO. So that is already there in our prospect. So that would be clearing off. So that is a level of debt which will be reduced from the current balance sheet.
All right, Aryan Rathi as well as Vinay Rathi, many congratulations on a stupendous listing, and also wish you all the festivities and celebrations as well. Have a great day. Thank you so much for joining us on NDTV Profit.
Thank you.
Thank you.
All right. All right, that's TempSense Instruments up almost 95% from the listing price. All right, let's move on to TVS Motors, which has really appointed Raymond Kargar as the CEO and also director effective January 27, 2027. And remember, he will also serve as the whole-time director and also KMP for a 5-year term and over 3 decades in the global auto industry. He brings extensive leadership as well as turnaround experience across Europe, Asia, as well as Africa and also Middle East. In fact, K.N. Radhakrishnan will really continue as the CEO as well as director until 27th of January. So there is top brass changes at TVS Motor, and the stock is plummeted on the changes that have been just announced, almost 5% down on this particular company at this moment. So there you go. That's a big development coming in on TVS Motors. And there you go, also completely out of time on this edition of Markets at 12. But do keep it with NDTV Profit for all the news, views and all the market action. Thank you so much for joining us.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Let's build a staggered deployment approach and balance things out between aggressive and safe bets.
Ionic Wealth is your co-founder in your journey of wealth creation.
Let him get a second opinion first.
Sounds good.
Ionic Wealth is putting the power of institutional grade AI in your pocket so you can get your second opinion first.
इस शेयर मार्केट में हाथ में हो कोई भी फोन, यहाँ है सबका इक्वल हक, क्योंकि आप जो भी हो,
जहाँ से भी हो, जैसे भी हो,
ये मान सबका है बॉस। तो SIP करो, इन्वेस्ट करो या IPO, डाउनलोड ग्रो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
One day horizon, एक कूलिंग टॉवल है, ये पोजीशन है एज अ हीट प्रोटेक्टिव गियर। I can feel the cooling. We have a couple of lakh workmen working at different sites in very harsh conditions, and I'm more than happy to get your product to all of you.
This is such a moment for him.
हमने ये बनाया एडेप्टिव व्हीलचेयर बाउंड पीपल के लिए इंडिपेंडेंट मोबिलिटी है।
इस तरीके से he is going to be the hero for many people.
Don't look at the disability, look at the magic of the ability that they have.
Arunesh Chawla, the DPUM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights help. Hello and welcome to NDTV Profit. You're watching trending stocks from the NDTV Profit Suzlon studio with me, Hiral Datia, and Sharad Dubey, who's standing at the NDTV Profit market pit with all the action. Sharad, I mean, it is Raksha Bandhan, so I'm sure everyone's watching out for some gifts from you as well today. The question is what's happening with the markets, because we are at the day's lowest level. So I'm sure a lot of opportunities and galore from here on.
Well, that's right, and of course, greetings of Raksha Bandhan to you as well, Hiral. But looking at the markets, it's very dull at the large caps, and you can say that, especially the volumes coming down, the markets was doing fairly well in a very tight range, and the sudden fall happening, and right now it's flat. This is happening same for Nifty Bank also. The cash effect is done for the month of August almost, but still no major volumes is coming up. And I'll give you a very important point about VIX also. That is also on the lower side of 10 to 11. A little bit more sell-off coming in Nifty Bank. So the technical setup for Nifty Bank is a little bit weaker as compared to Nifty. But still, it's very less, below the 11 mark. But let's understand the key factors today. What's more important here? Is there a macro asset play? That's something to talk about. There is a volatility coming for both Nifty Bank, and I've taken important support levels for Nifty and Nifty Bank as well. These are the ones on your screen. This is the number you should be tracking because we have broken that 24,100 mark. Nifty Bank support range also is fairly there at that 57,000 odd level marks. But moving on, the volumes and volatility, both the V's are remaining less, and that is why it's becoming a dull ray of trade except for IT stocks. Small caps have remained strong this week. Today also, most of the indices in the small cap portion are in the green. Strong short covering and new positioning in the new series for the IT segment. That is why it's doing well. But apart from that, select buying coming in the telecom, ancillary, chemicals and EV two-wheeler segment. We'll discuss more on that, as well as the strong listing. This is where the action is. We could say in the primary markets, a superb listing doubled. So this is one of the important stocks to talk about. But action shifts today for three important reasons. Fed chairperson Walsh first speech in Jackson Symposium Hall, and India's industrial July production data and the forex data also comes in. So we will be tracking this, and of course the global earnings in BYD. So not so much going into the weekend, but yes, the overall commentary in Jackson Symposium Hall would be something to watch out for Monday.
Okay, so lots to watch out for. Thank you, Sharad, for that. But let's look at the watch list at this hour. The IT's, entire segment has been back in action, and this is post the Wipro ADR in overnight trade. If you look at TCS, Wipro, Coforge, so large cap, mid cap, both of them seeing broad-based buying activity in today's session. Apart from that, you have a Tejas Network, which is in focus. Strong moves there on the back of an order win close to over 1,500 odd crores. And this order bid has actually come in from a TCS. Just Dial is advanced most in 6 weeks as well, and the volumes are pretty strong, and they have a management change coming in there on that front. Ather Energy, if you talk about a Hero MotoCorp, they will be raising their stake in the company, and that stake is worth almost 1,758 odd crores, and that's the reason why you're seeing that kind of moves on Ather. Moving on, Meesho, in fact, CLSA has initiated an underperform, and they have a target price of 150 on the counter. A 50%, 50 rupees drawdown from current levels is what you could potentially see. Federal Mogul is another one where the board has approved a special dividend, and it's actually trading at levels which is the highest in 13 months. Zee Entertainment is also in focus on the back of the NCLT reducing Subhash Chandra's liability to 6.5 odd crores from 22,000 odd crores. So lots brewing on that front, and that stock is in focus. Dixon also, because GST Council may cut the tax on mobile phones to 18%, and that's the reason why that counter is up in trade. Metropolis, your EBITDA margin target of 27-28% in 3 years is what the management has indicated, and they're expecting improvement in the core business margins, and that's the reason why you have Metropolis up in trade. Tata Tele is also buzzing in trade on the back of smart volumes today. And you have a Tempsons, and that's listed at 111% premium, and this is with regards to issue price. Strong volumes in terms of Whirlpool, and you have a GE Shipping where they've approved open market buyback worth 900 odd crores, and that's the reason why that counter is in focus. But over to you, Sharat, to take the rapid fire with Sachin Janardhan Sarvade.
Okay, thanks a lot, Hiral, for that. Good afternoon, Sachin. Always a pleasure to have you with us at NDTV Profit. IT stocks, you know, we are seeing a good up move coming in, a little bit of short covering coming in, and the new expiry, also new additions are coming in the positions. How do they look on the chart? More momentum ahead, and if yes, which would be a good pick?
So in a broader terms, basically in large caps, none of the IT stocks actually qualify for the like trend momentum types. Only the momentum is up, structure is also weak, even the trend is down. So in a downtrend, when momentum is up, it is known as a bull trap, or basically a dead cat bounce. So right now what we are witnessing is a dead cat bounce. Only thing is OFSS is a good stock in IT stocks, which has a good momentum, structure, and even the trend.
Okay, so dead cat, or you could say a bull trap when it comes to IT stocks today. That's an interesting take. But Tejas Networks, a big order win, LOI coming in from TCS, good momentum. Do you think there will be much more, power to this up move, or this will also get sold into?
So today's the movement has come with volume, so this is a good thing. Only thing is we have seen some kind of a profit booking from the upper levels, but I think this will sustain, and we can see 625 650 levels on the upside.
Any kind of a breakout coming in Just Dial? Can you have a look on the daily basis or at least a weekly basis on this?
So Just Dial is in a process to change trend from down to up. So today's up move is not with volumes, but earlier when we have seen around 14th and 15th or 16th of July, the up move was happened. That was with volumes. So after that, we have witnessed some kind of a profit booking, and today that profit booking has stalled. So what I am seeing is from top almost 24% correction was happened, and today's up move is like in the direction of an uptrend. So we can say we can see 800 900 levels as well in Just Dial.
Right, and GE Shipping, what's there on the charts? They have announced a good buyback also, but remember that's from open market, so it'll take its time. So your views on it? Technically, any trade can be made here on this?
So GE Ship right now it was in an uptrend, and right now it is changing a trend from up to down basically. So right now one should not basically enter in this stock.
Is there a trade to be made for Dixon Tech? Positive news flow coming in, but it's largely a little bit of sell-off happening, and that consolidation range is something we are looking at, or is there something more?
So it has actually trying to change the trend from 6th of July, and it has successfully changed the trend from down to up. Only thing is a lack of momentum and a good structure is pending in the stock. Above, I think 15,000, even that problem will also solve. So above 50,000, 15,000, we can see a good up move towards 16 and 17,000.
Another low volume counter, especially on the telecom ancillary space, Tata Teleservices. Have a look on the chart. Any trade can be made here. The stock is up 6%, or profit booking or partial profit booking would be better here.
I think total profit booking will be a good in Tata Tele, as actually this stock is in a great downtrend in all the time frames basically. So best thing is to book your profits and stay away.
Book profits. Next stock, the last one is Whirlpool. If you can get that on the charts as well. Your views on that?
So Whirlpool is in a downtrend, and yesterday it has touched the 100-day EMA. Today it again rejected that 100-day EMA, and right now trading below that level. So stock is in a downtrend, and booking profits in this will be a good idea basically.
Alright, that's the end of the rapid fire round. Thanks a lot, Sachin, for that. But now we have Puneet also, and Puneet, a lot of movement happening in the stocks. Which one are you covering?
Well, it's TVS Motor Company. It's a big negative for the company. K.N. Radhakrishnan, he's been with the company for the last 20 years, since actually 1990 actually, and he has actually now decided to move on. He will be stepping down from the role of CEO, and they've appointed Payman Khegar. He is the director and the CEO from 2027. Now, stocks reacting down almost 5% because under K.N. Radhakrishnan, there has been a very strong rise both in terms of sales as well as the achievements on the new verticals that TVS has entered as well. Now the news flow being that K.N. Radhakrishnan will subsequently become the non-executive director of the company starting from July 2027. So there's still some time to go, but definitely a big negative because and the stock's down as well. Now the other factor that he has been associated as the CEO since 2008 of August, promoted to director and CEO in 2018, and since 2018 the stock is up 7 times for TVS. It's been a rank outperformer, one of the most expensive two-wheeler stocks, and hence that definitely will take some sheen out of the stock as well. Now the other factor that under K.N. Radhakrishnan, they started the scooter portfolio way back in 2013, but since 2018 there have been multiple launches under Norton brand. The iQube electric vehicle scooter was the other big launch for the company, and they did acquire Norton also way back in 2020 under K.N. Radhakrishnan. So now they will be expecting new launches, but most certainly the sheen out of the stock and that premium valuation will crack up until there is clarity on what the new CEO will target first.
And Puneet, speaking of more auto sector news, Ather Energy is also in focus. What's new here? Is it more acquisitions happening from Hero MotoCorp?
Well, it's certainly a stake raised by the Hero MotoCorp, and it's been a meaningful rise that they have accorded. Now, we knew that Hero MotoCorp will be investing in the company as well. They earlier held roughly around 29.5% stake. Now have subsequently invested 1,758 crores. So the stake will now go to 32.5%. It's already been an associate company, but the rise of market value, because Hero MotoCorp invested roughly around 180 to 200 crores way back in 2016 in Ather, and now the total market value have subsequently done multiple raises post that too. But with that, the market value is close to 14 to 15,000 crores. So it's definitely a big bet and investment that's done well for Hero. And now with 32.5% stake, which got diluted during the IPO, now again as a strategy for the company, raising stake, if that happens further, will be something to watch.
Thanks a lot for that, Puneet, tracking all this segment or the auto sector especially. But over to you, Hiral.
No, those are interesting moves that you're talking about, because you've spoken about a TVS where you're talking about leadership rejig that's happening on the back of the exit of the CEO. You're talking about Ather, where Hero has gone ahead and increased stake. Pull up that one on the screens. And you have a Ola also, which is in focus because they have launched their S71Z with a made in India Bharat Cell LFP technology, and that stock is also at the day's highest levels with gains of 5.5% coming in there. Sachin, look at the three counters: Ola, TVS and Ather, all the three from the two-wheeler space. On the charts, anything that you like?
Ather Energy I like good because this stock is actually maintaining a good uptrend with a little bit of correction, like 5 to 6%. Whenever we are getting any kind of a 5 to 6% correction on the downside, we should accumulate this stock. We can see at least 1700 to 1800 on the upside.
Okay, 1700 to 1800 on the upside is what you're watching out for in terms of where Ather Energy goes. But moving on, Misho, let's pull up that one on the screens as well and see actually what that stock has done since listing. It's going to be interesting because pretty much steady. You're trading at levels of around 208. You have a CLSA which has actually given it an underperformed and they have a target price of 150 on the counter. What they're indicating is that it's a tough cohort to monetize from here on. Affordability and desirability for the masses is the concern, and can it actually make money? So the question is in terms of whether it will be profitable or not. Overall, if you talk about the AOVs, that's the average order value, that needs to be high for affordability. The improvement in terms of delivery efficiency is what you should be looking at. And the monetization of low-income cohort is going to become a key challenge from here on. Payments, lending and content monetization is competitive in India as streams, and the current valuation is pricing in unrealistic outcomes as well from a Misho, and hence they have underperformed for a target price of 150. Can we just have a long-term chart in terms of Misho from the time it listed to understand the kind of gains and what's happened with the counter? This is today's chart. In terms of 6 months,
30-31% is the kind of returns, 15% in this month, it's this year itself. Sachin, would you actually say it's best to book profits in terms of a Meesho, or are you seeing further momentum from here on?
I will differ from the reports which you are telling. 150 levels, if actually the stock comes near 150 or 155, it will be the breakdown for the stock, and then it will not stop there. It will actually go down further. But with actually seeing a technical chart, it is right now into a process of giving a breakout from a symmetrical triangle, and we can see on the upside 254 will be the first target, and if that is also broken, then 315 and 380, that will be the targets. So I am very much surprised about the targets which you are giving on the downside according to the reports. So I feel it should not come that much.
Another interesting stock is Federal Mogul, and interestingly, it has come out with its record dividend. I think it's the largest dividend in the last 2 decades, and the dividend yield on yesterday's closing price is roughly 17%. Why this record dividend coming in, and what are the key triggers? We have Puneet with us. Puneet, very different scenario here, largely untracked stock, but the story remains something else.
Well, most certainly, and I think it will be, the story still will continue to brew as well at this point of time, because as you mentioned, there's a 7.5% interim dividend, but an 86.5 rupees special dividend that the company has announced, and the record date, of course, being 4th September, but this will be a payout of almost 522 crores, and this is an important figure because this will be a dividend yield of almost 16 to 17%, given the stock was around 550 odd rupees before today's move as well. Now, how big is the context of the dividend is also important. They have roughly a market cap of 3,100 crores. General reserves, what they have, including the cash, is roughly 1,380 crores. So 522 crores, a straight payout. Out of that 1,380 crores, and hence it has raised certain eyebrows and a lot of attention for investors now as well. This also is much more because the PAT distributed completely of FY26 would be 178 crores. That's roughly 32 rupees, and hence they've gone ahead and raised cash from the reserves also to pay out this particular dividend. If there is any other move that could be follow through, will be something to watch, because this is owned by Tenneco, the global company, which also had another listed player in India. So hence very interesting moves happening in this counter.
Thanks a lot, Puneet, for that. And there might be some mispricing also as per the numbers. What they're talking about is both of them are Tenneco Group companies as well. But Sachin, wanted to get your views on this as well. The stock has rallied a lot. The record date is, of course, in the first week of September. Do you think good time to do a little bit of profit booking in this counter? What do the chart levels suggest?
I think one should stay in the stock, and what I am seeing right now is above 667 levels. We can get a bigger breakout, which can lead targets further till 900 and 1100. So I think there is a potential in this stock, and the target which I have set, even that is only a very small target, which I can say the stock has huge potential.
Okay, there is a huge potential for Federal Mogul. We'll be tracking this as well, and of course we had mentioned it yesterday. It was our stock of the day also. But we are going to keep Puneet busy again. And this time it is for another sector. It's not the auto sector, right?
No, this one's the EMS one that we're tracking right now. And the whack of Dixon Tech, now that continues to be in focus today as well. Now, there are media reports which are talking about the GST rate actually on mobiles to be cut from the current 18% to 5%, and this could be a big boost because a lot of cost savings for consumers at this point of time as well. So we've just done an analysis that cost of a phone, if currently at 25,000, including a GST of 18%, could come down to almost 20,100 rupees, assuming just a 5% GST. So there's almost a 19.5% cost saving that a consumer could do, and comes at a very important time because we've seen that there has been a very high memory prices which has increased by almost 4 to 5 times, and hence the cost of the the mobile phone has also increased dramatically. There are lesser discounts also currently, so this could help Dixon because almost 80% of their revenues comes from the mobile business, and hence could trigger a better consumer performance. They could be looking at buying the phone in Diwali again, and hence could trigger some demand because Dixon has maintained flat guidance for this year. Could be a key trigger to watch.
Thanks a lot, Puneet, for that. But of course, Sachin, we discussed Dixon Tech earlier, but any other EMS stocks which are looking good on the chart where a trade can be made, or these are all consolidation candidates?
On a long-term chart, Dixon actually looking very good because after a 50% downside correction, the stock has given a good upside bounce. It has right now reclaimed its 50% Fibonacci levels of 14,374. The next resistance for the stock will be around 15,500 and 17,000. Once 17,200 is reclaimed, I can bet this stock will be always in news. Basically, we can see it on the upside 19,000. 23,900 and 28,700. These are the targets on the upside. So I think the downside correction has almost done with the stock, and on the downside we can play like buy on dips also in the stock.
Okay, so buy on dips in terms of Dixon Technologies. But moving on, Manipal Health, let's pull up that one on the screens of HSBC, which is initiated a buy. They have a target price of 1,000 on the counter. And what they're saying is economies of scale are at absolute play. That stock, though, is at the day's lowest levels as we speak. In fact, it's India's biggest private hospital operator, and they are set to sharpen their focus and profitability after doubling the bed capacity since FY23. They're expecting profits to grow 3 times over FY26 to 29, and they're expecting the net debt to EBITDA to actually improve to 0.7 times in FY27 versus the 3.7 times in FY26. In terms of improving EBITDA margins, and this is with regards to the acquired Sahyadri Hospital, that is going to be the key catalyst as well. And overall, if you have to look at in terms of where business goes, or even from the time the stock has listed, if you can just get a long-term chart, it's actually crossed a market cap of 1 lakh crores. 36% is the kind of gains that you've seen on this counter since listing. Sachin, your view in terms of Manipal Hospitals, because 36% is the kind of up move that you've seen since listing. Probably some strong momentum, but today you're seeing some pressure.
So yes, definitely the stock is actually going into steps, basically making a higher and higher low. So the trend for the stock is up only. Only thing is we will see some kind of a small profit booking, and downside the support levels are around 755 levels. If it is holding 755 levels and getting again a bounce, we can again see it can reclaim 815 levels today's top, and can go upside till 850 and 900 levels as well.
Right, of course, that's the view coming in for Manipal Health as well. But speaking of strong listings, Temson has taken this entire street by storm, almost doubling on the IPO price. Just wanted to get a little bit of SWOT analysis on that. We are joined in by Varsha here. Varsha, this entire week has been very strong for the IPOs, and today was also not different.
Yes, absolutely. But you know, one thing, Sharad, is Temson. When it comes to Temson, there are no listed players when it comes to India for Temson, and hence you're seeing a company which is very strong, have products which are import substitute products, and there's very high switching cost when it comes to products of Temson, because for the manufacturers or for the steel industry or for any of the industries, the temperature solution products only contributes 1% to the overall cost. So hence the switching costs for these manufacturers are very high, so they don't switch their suppliers or often quickly, and that's the moat that Temson has. But you know, speaking about the SWOT analysis, well, they are the largest manufacturer when it comes to contact and non-contact temperature sensors in India. They have diversified portfolio across sensors, heating and cables, and nearly 29% of revenue comes from export. But onto the weakness, this is a working capital intensive business. Inventory days have increased over the years, and borrowings have also risen significantly. Onto the opportunities, well, we are seeing growing demand when it comes to metals, pharmaceuticals, defense and industrial automation sectors. Export penetration can increase further, and they do have scope of growth when it comes to acquisitions and JV. Lastly, on the thread, well, slowdown in the industrial capex can have an impact, negative impact on this company, and raw material price volatility may increase, margin pressure. But overall, a very strong company, and hence you're seeing it has doubled investors' money.
Right. Thanks a lot, Varsha, for that. Good analysis on that, SWOT analysis. But we are out of time here now. Thank you very much, Sachin, for staying with us, giving all important technical calls, and in such a market also what not to do, that's also important. But now we are out of time, folks. For trending stocks, from me, Hiral, and the entire team which have put together this wonderful show, it's a buy. But for your profit, stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time.
Because cricket ho ya medical care, trust is earned
With consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most.
state-of-the-art innovation, made in India.
और trust पूरी दुनिया का. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
Factoring in LRS, the route, and the currency hedge, here's your best move.
Ionic Wealth is your co-founder in your journey of wealth creation.
What's the rush? Let them get a second opinion first.
Yeah, this works.
Ionic Wealth is putting the power of institutional grade AI in your pocket, so you can get your second opinion first.
इस शेयर मार्केट में हाथ में हो कोई भी फोन, यहाँ है सबका इक्वल हक, क्योंकि आप जो भी हो,
जहाँ से भी हो, जैसे भी हो,
ये मान सकता है। तो SIP करो, इन्वेस्ट करो या IPO, डाउनलोड ग्रो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
One day Bharat, you know, a cooling towel है, ये positioned as a heat protective gear. I can feel the cooling. We have a couple of lakh workmen working at different sites in very harsh conditions, and I'm more than happy to get your product to all of you.
This is such a moment for him.
हमने ये बनाया adaptive. Wheelchair bound people के लिए independent mobility है.
इस तरीके से he is going to be the hero for many people.
Don't look at the disability, look at the magic of the ability that they have.
Arunesh Chawla, the DPUMP secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upwards.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs.
Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaign.
Nifty started the session in the green, but now trades off day's highest points, still above 24,000. Those broader markets see mixed moves. IT leads with gains as heavyweights aid the rally. India defense, FMCG as well as auto lag. IT stocks surge with TCS, Infosys and HCL Tech gaining as Nvidia's strong results revive optimism around the global AI trade. Oil holds gains as hopes of a swift US-Iran deal fade. Uncertainty over Hormuz reopening keeps supply risks elevated, supporting crude prices. Tempson's Instruments makes a stellar market debut with shares more than doubling from the IPO price. The issue also sees massive investor demand oversubscribed multiple times. And among the buzzers, Tejas Network surges after bagging a large TCS order for BSNL's 4G network exceeding its existing order book. Aether Energy jumps as Hero MotoCorp moves to buy more shares. Good afternoon, you're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets. And when you talk about Nifty 50 as well, it's very close to the day's lowest points, just a slight bit of recovery from that as well, so very much off the day's highest points. And when you talk about some of the gainers and losers as well from within the entire Nifty 50 pack, and in terms of a sectoral basis, you do have IT that seems to be standing quite resilient against an otherwise tepid market. So whether you talk about FMCG or auto, realty, consumption, energy, all of those sectors on the back foot, what's holding up quite resilient is something like IT as well as pharma, just showing a little bit of resilience against the backdrop of an otherwise lackluster day as well. But when you talk about the top gainers from within the Nifty 50 as well as the top losers as well, some stocks like TVS Motor on the back foot, so that's one counter that's down about 4% odd. There's a Credit Access, Grameen, Whirlpool and Physics Wala as well, Bharat Dynamics that you're looking at as well. So some of those counters are just sort of on the back foot a little bit, something like a Shriram Finance, ICICI Bank, Eicher Motor. So some of the counters from within the financial services pack on the back foot. There's something like a Cipla as well. Some of those pharma counters still a little bit downbeat against an otherwise resilient sector as well. But when you talk about IT as well, that's the one that's really holding on to some gains as well. So something like TCS, HCL Tech, Tech Mahindra, Infi as well as Wipro. Those are the top gainers from within the Nifty 50. Other than that, there's a Bajaj Auto that's holding up quite resilient. And one other stock to really look at is something like a TVS Motor as well. So do watch out for all of those sectors as well as stocks. But that's said and done. Let's quickly take a look at the entire commodities complex. And when you talk about that, you've got oil prices that do have a very, very interesting setup at this point in time. Let's pull up oil to see exactly what it's up to. But in terms of the broader premise, of course, you do have some bit of weekly loss that you're notching when you talk about oil as well. So Brent about 0.7% lower, WTI about 0.8% lower against an otherwise lackluster week as well when you talk about oil. But when you talk about gold, not at all the kind of picture that you're looking at for oil on the for gold on the flip side, because not only is there a 13% monthly gain that you're looking at the monthly gain being among the century's strongest months as well. So that's what you're looking at when you talk about gold, and lots of factors to watch out for, which is something that we'll be discussing with our analyst as well. But before we do that, let's quickly pull up copper as well and take a look at the price moves that you've seen. So about 14,300 per ton in terms of the price levels that you're looking at for copper. And when you talk about the entire backdrop, it's very close to that record high, so 14,500 thereabout is the record high, by the way, and given the kind of way that it's been gaining as well, 9th straight weekly gain that you're looking at for copper. Now, Vandana Bharti, Head of Commodity Research, SMC Group, joins us on the show right now. Vandana, a very good afternoon and thank you so much for taking time out. As always, pleasure having you on the show. First things first, just wanted to try and understand what you think about gold, and we'll come to oil in a bit, but it's been holding some of those ranges that we've seen of late, right? So when you talk about gold though, it seems to be slipping at least on a daily basis, not at all the picture that you're looking at on a monthly basis with that 13% gain thereabout.
Yeah, hi Shreyanshi, and thanks for having me in the show. Somehow we have seen a golden cross in gold, but since then we are seeing a very little movements in gold prices, and the entire world it is paying attention on Jackson Hole Symposium actually. So we are just waiting for that outcome, and before that there is a very range bound kind of movement in the dollar index, whether it is dollar index, it is yield. So nothing happening like a very in any direction, in higher side, either on higher side or lower side. And the Indian market, it has decoupled with the international market because of the import duty rumor and all. So Indian market it is trading on the discount of say 5,000 to 6,000 in gold prices. If we consider silver, the discount is of 6,000, so 8,000. So somehow the Indian market is trading, MCX is trading on discount. Only this is happening important in the Boolean counter. Rest of the world, it is trading in a range. So the Indian market, it is happening.
No, absolutely. And Vandana, of course, season's greetings to you as well, and a very happy Raksha Bandhan from all of us here at NDTV Profit. Missed wishing you earlier, but when you talk about the monthly gains, that's specifically what I'm talking about in terms of what's happened this month. Let's also sum that up for our viewers in terms of the kind of key levers that you had for this kind of growth, right? Because when you talk about this 13% gain, right, there's a divergence in terms of the MCX market, the market back home, and the global benchmark. But what's more important right now is that entire strength that gold seems to be maintaining, because you're still looking at, one of the century's strongest months when you talk about gold.
Yeah, and it is happening when we see generally a correction in this month of September in equity. It has happened from last, if you compare the last 5 years of like consecutive years, we have seen 4 times decline in 5 years in equity market. I'm talking about S&P 500, and the correction in equity market and traditional buying, it is triggering a buying in gold prices, physical gold, ETF buying, and everywhere you can see a buy. So for September month, it is a very good time to go for buy in gold, and it is a time to see a correction in equity market. So we are going to see a very deadly combination, and the buying has started, and it is in everywhere. Like in physical, we are buying; in ETF, we are buying. Central banks, they are already buying, and bond yield volatility, it is forcing another players to come forward for gold.
No, absolutely, and that's a very interesting setup to say the least right now, right, Vandana, when you talk about gold. But when you talk about copper as well, just wanted to get that out of the way because it's nearing those record high levels, close to $14,500 a ton as well is what you're looking at for the record high. So very, close to that level as well right now, and the 9th straight weekly gain. So you've seen that trend really continuing. Do you see that trend really sustaining when you talk about copper?
Now it is overstretched, and there are many strong reasons for the rally in gold, because we have seen many disruptions, mine disruptions in gold, and we have seen decline in China reality sector. It is on a 4-decade decline. But yes, the other niche buying in copper, like from AI and data centers, the demand is already increasing, and the supply side is on decline side. And if we consider the LME, SHFE, and US inventories data, it is on multi-year low. If we consider the US data, yes, the inventory is on a higher side, but it is not for the open market. So we shouldn't confuse it with the availability of the inventory in US market. Apart from that, new minings are coming. New minings are not coming in copper, zinc, and bauxite in any base metals because of the pollution issues and all. So yes, there is a structural bull run in copper, but I consider the silver and copper ratio. Both are industrial metals. Silver is bit of precious metal, and the silver and copper ratio is suggesting that now this is a time for silver upside, and there should be a plateau in copper prices. So yes, before new leg of rally, we can see some kind of profit booking in copper prices, and this is the time to shine in silver prices.
No, absolutely. And just how shiny is silver going to get then, Vandana? Talk numbers here when you talk about some of those levels that you're looking at and tracking closely.
Yes, I have referred the option chain data of silver in comics, and it is suggesting that $72 is very much in sight, and the next is $75. I won't talk about $80, but yes, there is some call build-up in $80 strikes as well. So now the support is on higher side. Now it is $62, $63, and the upper side it should move towards the level of $72. So $70 is a very strong psychological supports. Once it reaches a level of $70, very soon we can see the level of $72 because there is a huge build-up in OI and volume at that strike.
No, absolutely. And that makes a lot of sense as well, Vandana. Thank you so much for helping us out with that ratio as well, right? Comes in handy when you're tracking the market very closely. But, when you talk about oil as well, we've seen quite the interesting week. Throughout the course of the week, there's been some weakness, some sort of strength that has been gone from the oil market. And do you think that the alternate sea routes that have been figured out, do you think that's the, one to blame when it comes to this one?
Yes, whenever some supply disruptions happened in the history, rerouting happened very quickly because if you consider the Russia-Ukraine war, rerouting was there. Again, during this Iran and US war, again, rerouting is happening because ultimately these things are essential things. Without that, world, everyday utilities can't happen. So yes, rerouting is there, and one thing is that we are entering into the mild season zone, and apart from that, some production has increased, and there is some plus in rig counts number. So these are the positive things which is sending the prices on lower side. But yes, the real concern is inventories, and we have seen some kind of build up in inventory. So that is also a sigh of relief for the Asian economies. So yes, there is a limited downside in crude oil, of course, because the refined products are already trading on higher side. So $77, $76 we can expect on lower side. On higher side, now it is not $95, it is $88, $89 kind of level we can expect on higher side. So yes, now this is making a lower lows, lower highs these days, a descending channel.
Right, absolutely. And in terms of the price levels, Vandana, when you talk about oil, lastly, just wanted to get a quick check from you in terms of what are the kind of price levels that you're watching out for, both on the upside and downside. And you've been spot on about some of those levels. And this is a little bit of a googly right now because you do have the escalation that is being priced in very differently than it was at the beginning of the war.
I'll consider 200 as DMF for the support, and this is 7,800 on lower side for M6 market. On higher side, I would see like the 8,500 above range for this week because yes, peace talk is on positive side, and we can expect some kind of positive statement from Iran or Pakistan side. So because of that, market is in range. So on lower side 7,800, on higher side 8,500. Below 7,800, we can expect 7,600 kind of level. So now we should get ready to see a narrow range for oil. It is not like that in a week time we can see a volatility of 2,000, 3,000 kind of level.
Right, absolutely. And thank you so much, Vandana, for taking time out and joining us this afternoon. That really sums it up in terms of the kind of developments that we've been seeing of late when you talk about crude, gold, copper, but also silver as well. And that's something that Vandana is quite bullish on, by the way. So that's something that you're watching out for. But as the siblings across India celebrate Raksha Bandhan today, we're putting your brother's Rakhi gift to the market test right now. If your brother gave you 1 lakh rupees last Rakhi, where would it have grown the most? Silver, gold, Bitcoin, or some other space? In fact, Sharad is standing by with not just an answer, but also the comparison on sector's performance from last year, Sharad.
Well, yes, Raksha Bandhan Mubarak. To start with, I'm sure a lot of you are exchanging greetings and also gifts as well. Now imagine Last year, you got a gift of 1 lakh rupees. This year, what that investment would have made. I'm sure a lot of brothers have invested in equity markets, but they haven't performed well. Maybe as sisters, investing in gold must have given you 56% returns. That means you earned 56,000 rupees more. Also, if you have invested in sugar, the retail sugar segment, that itself gave 38%. FD has also actually outperformed Nifty. And that's the interesting story here. Silver also, it has doubled your investments. Also looking at, if your brother would have given you something in dollars, say $1,000, how that must have panned out. Let's have a look in that. And we've got some global assets also for you of how things have moved. Of course, the best performing global asset has been Brent crude, if you had invested in the crude ETFs, and the worst performing Bitcoin. But right now, with the last 1 month, Bitcoin has been going up. Global assets, your brother gives you $1,000. Brent, you have made 32%, Bitcoin index lower side, but Nasdaq and even S&P 500 would have made you good returns. And dollar, you also get appreciation as well. So it's a very interesting take, this Rakhi. But remember, when you get the gift from your brother, you don't have to invest entirely on assets. Maybe splurge today as well.
Absolutely, and thank you so much, Sharad, for joining us with that. Now I know where to be investing your Rakhi gift as well, and do keep it handy for after the show ends. And thank you so much for getting us that analysis. But let's keep it going with a special report on BSF Jawans celebrating Raksha Bandhan today as well. Not in solitude, but in solidarity. Young women and schoolgirls from Jammu reached the international border to tie the sacred thread of Rakhi to the soldiers. Let's take a look.
Visuals speak louder than words. The BSF Jawans here on international border, they are not celebrating this festival of Rakhi with solitude, but with solidarity. And here you can see the girls and women from different parts of Jammu. They have reached here, one of the most dangerous frontiers of the country, to tie Rakhi. And this is a very strong message that you stand for the nation with an unwritten commitment, standing like a rock, taking bullets on their body. And we stand with you in all thick and thin. And here you can see they are tying a Rakhi. It is not basically a small thread of Rakhi. It is basically an expression of gratitude from the countrymen towards the Jawan, who are there 24/7, 365 days, trying to ensure that they guard the country. Even for that, even if they have to sacrifice their life, they do not hesitate. That's one of the reasons you will find there. They are not having any kind of a blood relation, but they're having a special bond. And that bond is of trust. That bond is of the Bharat. That means that they are with them, like the way they are always with the country. And here you can see these young girls from the school, they have also come here, they're tying Rakhi, they're making them believe that you might be away from your families, hundreds of kilometers away from your family, hundreds of kilometers away from your own people. But you are not alone. We are with you. We'll try to ensure to make you feel at home, because for them, the duty is really very important. And this Rakhi festival, they are not alone here. And you can see they have got several sisters from different parts of Jammu region who have come out to tie Rakhi to them. Let me talk to them. कैसा लग रहा है आपको यहाँ?
मुझे बहुत अच्छा और गर्व महसूस हो रहा है यहाँ पर आकर, क्योंकि मुझे ये अपॉर्चुनिटी मिली है इनको राखी बांधने की, क्योंकि ये दिन रात बॉर्डर पे खड़े होकर तैनात करते सिर्फ हमारी सेफ्टी के लिए। तो एटलीस्ट हम इतना तो कर सकते हैं कि हम यहाँ पर आएँ, इनको राखी बांधें और भगवान से यही प्रार्थना करें इनकी लंबी उम्र के लिए। थैंक यू।
So they are praying for their long life because they know strong BSF Jawan means a strong border, and that means the security, safety and integrity of the country.
Then there you go. So that's the Chetgarh international border that you're looking at, and quite the symbolic gesture there. But let's also move on and onto some somber news now. Nepal's flash flood disaster has now claimed more than 400 lives, with nearly 1,500 people still missing across Nepal and Tibet. You do have Nepal that accounts for 389 deaths at this point in time, while 3 people have died in Tibet. 1,468 people remain unaccounted for as rescue teams race to reach cut-off areas. The floods and landslides have destroyed roads, bridges and key infrastructure, complicating some of those relief operations as well. So that's something that you're looking at, and NDTV is bringing you the report from the ground. And let's also go across and see what really led to this Nepal flood crisis.
Tragedy unfolded in Nepal. This was around 8:37 a.m. on the 26th of August when ice and rock collapsed near Nepal-China border. The debris, ice mud and massive boulders were seen crashing into the Khola Dam on the river. And this is when water started building up. This was behind this natural dam of ice and rock. And the first major settlements got hit during this time, and that was hit because of surging flood waters. And this was followed by the collapse of a natural dam which immediately trickled this disaster. It sent a deadly wall of mud boulders and ice racing downstream. The search continued towards Nuwakot, which remains one of the most affected districts of Nepal. It left behind a trail of destruction in its path. And then the national highway, which was also seen getting washed away in the floods, was transformed into a major impact zone. It's day 3 of rescue efforts in Nepal after flash floods. The MEA in India and authorities continue efforts to locate missing Indians. That remains a worrying concern for all of us. Over 290 Indian nationals still remain untraceable in Nepal. Most of them were on religious tours and also on trekking expeditions. 84 of them have been rescued so far. 21 tourists from Tamil Nadu, 106 from Maharashtra are amongst those who have been rescued till last evening.
All right, then. So there you go. That's the entire word coming in terms of the latest death toll as well. 35 countries whose citizens are missing, unfortunately, since the tragedy has hit. That said and done, as our thoughts and prayers are with people in Nepal, let's also move on and talk about markets as well in terms of what the markets are up to. And when you talk about Nifty as well, you're seeing slight bit of recovery coming in from the day's lowest points and similar sort of moves like they were at the start of the show. When you talk about Sensex as well, some bit of recovery is what you see playing out, as you can see reflected on your screens as well. And when you talk about some of those sectors as well, let's quickly pull those up as well, because it's actually IT that's holding up quite resilient. Otherwise, tepid market that you're looking at right now. But when you talk about the IT index, the media, metal, healthcare, all of those indices holding on to some strength, and of course broader markets displaying some bit of resilience. Otherwise, the market is quite tepid as well, including the likes of FMCG, consumption, consumer durables, and of course auto that are on the back foot. So it's some of your IT names that make it to the top of the list when you talk about some of your Nifty 50 companies as well. Let's also very quickly pull up that entire list as well, because it's actually some of your IT names that make it to the top there as well. There you go. So it's TCS, Tech Mahindra, HCL Tech, Wipro, as well as Infosys, Bajaj Auto and Apollo Hospitals also, that are holding on to some bit of gains as well. But that said and done, of course, the one thing that the week has taught us is that AI is, of course, quickly moving on from a buzzword to a real-world tool for solving problems as well. And it remains even more important this entire week as well. India is seeing that opportunity perhaps better than most. So Salesforce India CEO Arundhati Bhattacharya also talks about the use of AI and the scale of adoption in a conversation with Nisha Podar as well. And let's listen into a slice of that conversation.
While many companies are new age, they have adopted it faster because also they are newer in terms of their whole establishment. What happens to the old establishments who have a low cost model which gives a consistent return to all the stakeholders? There, how difficult is it to really make them understand the ROI dynamics from not just quantitative but qualitative perspective? One. And second, how difficult is the conversion still on many of the sectors which have been the sectors of the past?
So, you are right that the new age companies, because they don't have legacy, they write on a blank page.
Yes.
It's easy for them to start with AI-infused apps or solutions. In respect of legacy companies, they can't throw away their legacy structures, right? So to that extent, obviously, they do take a little more time in order to understand how they will adopt. But the question as to whether they will adopt because there is an investment required, I don't think that question is there at all. Even when you have a legacy stack, you don't just sit on that legacy stack.
Yes.
You have to maintain that stack. You have to change when the versions change. You have to put in new facilities on it. You have to launch new products. You have to address new regulatory requirements. So there is a lot of work that goes on. It's not that you do one investment and that's it. After that, it's a very tiny investment that goes on. That's not the way it is at all. You know, the investment into IT is an ongoing investment.
Yes.
So this will form part of that ongoing investment. However, what is really required is for us to understand, in order to make this really effective, when you are changing a product, you have to also change the processes and the people. Now, people change doesn't mean you change the people, it means you upskill the people.
So in a week where Nvidia has reported 80% in terms of what they're penciling in for the next quarter for the revenue growth, it's quite important to watch out for AI, but that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Let's build a staggered deployment approach and balance things out between aggressive and safe bets.
Ionic Wealth is your co-founder in your journey of wealth creation.
Let him get a second opinion first.
Sounds good.
Ionic Wealth is putting the power of institutional grade AI in your pocket so you can get your second opinion first.
इस शेयर मार्केट में हाथ में हो कोई भी फोन, यहाँ है सबका इक्वल हक, क्योंकि आप जो भी हो,
जहाँ से भी हो, जैसे भी हो,
ये मान सबका है बॉस। तो SIP करो, इन्वेस्ट करो या IPO, डाउनलोड ग्रो।
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies. One day, you know, a cooling towel है, ये positioned as a heat protective gear. I can feel the cooling. We have a couple of lakh workmen working at different sites in very harsh conditions, and I'm more than happy to get your product to all of you.
This is such a moment for him.
हमने ये बनाया adaptive, wheelchair bound people के लिए independent mobility है।
इस तरीके से he is going to be the hero for many people.
Don't look at the disability, look at the magic of the ability that they have.
Arunesh Chawla, the DPUM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores. In FY27, do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade today. But before that, let's have a look at the markets. Now, firstly, if you look at the benchmark index, it's largely flat. Not any movement that we are seeing. It's hovering around the 24,100 level, but from the day's highest point, we are down close to around 90-100 odd points. When it comes to the Nifty Bank Index, that's down around 200 points in trade, about 0.3%. But if you look at the sectoral indices in trade, is the Nifty FMCG and the Nifty Auto Index, which have been the key draggers. Both the indices are down anywhere between 0.5 to 0.8% in trade. But on the flip side, we have Nifty IT, which has made a comeback up around 3 odd percent, followed by Nifty Pharma, which is up around 0.3% in trade. When it comes to small cap index, not much of a movement, largely flat, but a lot of stocks that have been buzzing. In fact, one of the new listings, Tencent, also falls under the small cap category, has listed with a premium of nearly 89%. Then we have Extranet, IQ Tech, Mastech, all anywhere gaining between 15 to 20% odd in trade. Sunshine Pictures, again a new recent listing. That stock is also up around 14 odd percent in trade. Then there is JG Chemical that we'll be talking about in the show. On the flip side, we have Wonder Electricals, which is down 20%. Azad India Mobility down 7%. Kalyani Cast, TPL Plastic, Exatotech down anywhere around 5 to 7 odd percent in trade today. So first, now let's see what's on the show. We'll be speaking firstly with the management of MediAssist. Now, if you look at the stock price, it's down nearly 28% on a year-to-date basis and nearly 35% in the last 1 year. But what's the way forward? What is the industry landscape looking like? What is the competitive dynamics here is something that we'll try to decode with the management on the show today. Apart from that, we'll be talking about stocks like MV Electro Systems. Now, the stock has gained post a strong commentary that has come in on the conference call. The stock is up nearly 30% since the company did their conference call yesterday. Syncom Formulation. Now, that stock, if you look at it, has hit its highest level in the last 58 weeks, more than 1 year, at a higher of more than 1 year, and the stock is up nearly 46% in the last 1 month. JG Chemical, that stock is up nearly 30% in 1 month. Today's move is quite great. It's up more than, I believe, 13 odd percent in trade, and volumes are quite strong, nearly 2x its 20-day average. And lastly, we'll be speaking about Extranet. That stock has been gaining for the second consecutive session. A name appeared in the bulk and the block deal data, something that we'll get to you today on the show. And the stock is up nearly 49% since listing on 31st of July. That means that in this month itself, the stock has given a return of nearly 50 odd percent, and it's up nearly 20 odd percent in trade. But as promised, let's go across to the whole-time director and chief executive officer of MediAssist Group to understand more about the way forward for the company. So firstly, to start off with, in the first quarter, the growth, if you remove the recent acquisition that was Paramount, if you remove that and see the growth, then the organic growth has been a bit slow. But for FY27 overall, what's your outlook here? In organic growth and including the Paramount acquisition.
Hi, good afternoon, Samit. Thank you so much for having me on this show. So historically, Samit, in our India TPA business, we've always said we will match or better the industry growth rates, right? And part of it is organic, and of course, part of it is through acquisitions. And all acquisitions that we conduct become organic because the renewal and responsibility immediately shifts to us. So last year, we bettered the industry growth rates in group and retail by over 700 basis points. In Q1, we've bettered that by over 600 basis points. So our guidance on this continues to be that we will continue to grow faster than the market in group and retail.
Okay. And when it comes to margins, it had slipped to around 20 odd percent, I believe. But what is the guidance here? Can you see this coming back to the 22-23% level anytime soon?
Absolutely, Soumit, that remains the focus. And historically, we were at 23-24% margin. Of course, the last 3 years, we have concluded almost 3 TP acquisitions and 1 international benefits acquisition. And as I'm sure you're aware, once Paramount came in, our lowest margin that we reported in Q2 was about 17 odd percent. And we've been steadily improving the margins on account of synergies. We reported a 20.3%, and obviously the immediate order of the day to get back to the stable 22-23% margins.
Okay. Now, if you look at the group premium under management, that is also called as PUM, that retention, I believe, has declined from 93.2 odd percent in FY26 to 90.2% in the first quarter due to portfolio rationalization, as you mentioned. But how much of this exercise is largely concluded, and what could be the sustainable retention rate going forward that we should expect?
I think there were a couple of reasons there, Sumit. One, of course, is integration of Paramount and a long churn, so the base is very different from the reporting perspective. And secondly, some amount of rationalization, that the size of the portfolio actually allowed us. We see this more as the current financial year indicator, but there is no doubt in our minds that we will get back to our historical or continue to improve on them.
But also, when it comes to the retail PUM, that declined 5 odd percent on a YOY basis, and market share also fell there to 3.6%. What is the strategy here to revive the retail growth? Can we expect market share to improve here on going forward?
So, Sumit, like I've always said, retail is taken on a very interesting way of hybrid model in the country, where part of the premiums are directly managed with us in the pure TPA model, and a lot of the premiums are actually managed with us in a plug and play technology platform model, which we currently don't report as market share. But if you included the retail portfolios where that we are helping manage through technology, on the whole, we will be about 33% of retail premiums are touched by MediAssist today. Of course, what is touched in the pure TPA format is where we are reported the market share. So we expect that the hybrid nature will continue to evolve, and in that hybrid model, our market share will only continue to improve.
Also wanted to check with you the 100% migration of Paramount integration, 100% claim migration of Paramount. Has it been done to Matrix? I believe you had given a guidance of second quarter. So is that in process, or has that been done? If anything on that you could share.
We're on track, Sumit. Typically, we take about 5 quarters to integrate any acquired TPA fully into our operations, our technology, and our framework. This is the 5th quarter, and we are sort of largely done with the integration, and you can clearly see that in the way the margins are also improving.
International revenue, that declined, I believe, 5%, despite the fact that management has been investing in this business. What is causing this weakness, and how should one see this business going forward?
So, Sumit, we invested into Mayfair over 3.5 years ago. We picked up a 60% stake 3.5 years ago. So Mayfair is a 3-decade-old entity running in international private medical insurance space. So clearly, the IPMI space in Q1 was impacted due to 2 big reasons, right? One is the whole ongoing the situation in Middle East, where the shipping related things have gotten impacted, and secondly, much lower student traveling abroad, and that's more a temporary dip in the core IPMI segment that we run. But having said that, we see international as a very big and strong growth lever for us. We moved our Chief Business Officer Nikhil as the CEO of Mayfair very recently, and we've improved our ownership to over 90% now. And we've in fact signed the first technology contract in Thailand under the new leadership, and you will see us do a fair bit of work on the international side, and we expect international to grow way faster than our Indian market.
Okay. How do you plan to monetize products such as Mavengard, which I believe identified a fraud of nearly 183 crore in the first quarter? So will this AI primarily improve MediAssist own margins? How will you monetize, and how will this help?
No, great question, Samit. Thank you. So all technology that we build has a dual purpose, right? One, how do we deploy that in our own operations, and how do we improve, and how does it contribute to our margins? And secondly, the most of the tech platforms that we're building now have become an independent line of business in delivering new revenues, and our own tech revenues even this quarter grew like over 50%, right? So tech continues to be a big growth lever for us. So we currently have contracts for leasing Matrix, which is our SaaS platform for end-to-end claims management. We've just signed a host of new contracts for deploying many other new capabilities, including Maven Guard, our document processing, and some of our other capabilities. And you will see them sort of kicking in and adding to revenue over the next 3 to 4 quarters as we consolidate that.
I believe you're talking about the 7 insurers who have contracted the technology platform, and the PM is, I believe, close to around 4,250 odd crore. But anything on the number front, how much could this contribute on the revenue side, on the EBITDA side, at least in percentage terms, that the company is internally targeting?
So we started teasing out technology as a revenue in Q1 last year, Sumit. We were around 2%. That was even before Paramount came in. Then Paramount came in and obviously added a lot more to the TPA revenue. And despite the TPA addition, the technology revenue is now 3.3% of the consolidated revenues. We expect that to continue to grow in terms of its absolute contribution. And from a margins perspective, it is a much higher gross margin product. At a steady state, we will be at least 1.5 to 2 times the margins on the TPA business.
Okay. Thank you, sir. Thank you for joining us and giving us the way forward for MediAssist. Let's also welcome in our fundamental guest, Gaurang Shah, Senior Vice President with Geojet Investment. Gaurang, you heard the management, but if you look at the share price performance, it has not been that enthusiastic. After this fall after this correction that we have seen, would you be interested, or would you advise your clients to go ahead and buy MediAssist?
Hi, Sumit. Thank you so much for having me on your show. Good afternoon to all the viewers of NDTV Profit and to you and your team. Standard disclosure as required. All recommendations that I'll be sharing with you on your show, Sumit, they are part of our fundamental research team recommendation from a long-term point of view. Our company, Geojet, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interests. So while we remain positive on the health insurance sector and along with the life insurance and non-life as well, to take a call whether to will come out with a recommendation on MediAssist, I think it will take a while. As of now, we don't have coverage on MediAssist, but as the verbatim was given by the management when you were in conversation with them just a while back, I think first of all, the acquisitions that they have done, I think we should wait for all that to play out on the earnings front. And secondly, whatever update they've given in terms of future acquisitions and of course the expansion plan, that needs to play out well, Sumit. So unless that translates into earnings, I think it will be a very difficult call to give a buy, sell and hold on this one. And as I mentioned, we don't have coverage, but we do cover health insurance related one company called Star Health. Though Star Health went through a difficult time in the last 2 or 3 quarters, specifically with the last financial year. And the market is very, very huge, Sumit, as far as health insurance is concerned. The only thing is market share and of course, in terms of product offering and acceptability. So these are the 3 points that one should possibly look out for. But we remain positive on the sector.
Okay. Well, let's slip into a short break and we'll be back with more small cap stocks on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी। अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Factoring in LRS, the route, and the currency hedge, here's your best move.
Ionic Wealth is your co-founder in your journey of wealth creation.
What's the rush? Let them get a second opinion first.
Yeah, this works.
Ionic Wealth is putting the power of institutional grade AI in your pocket so you can get your second opinion first.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
Arunesh Chawla, the DPUM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has a good futuristic investment plan. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV, when it really matters.
One day, एक cooling towel है, ये positioned as a heat protective gear. I can feel the cooling. We have a couple of lakh workmen working at different sites in very harsh conditions, and I'm more than happy to get your product to all of them.
This is such a moment for him.
हमने ये बनाया adaptive. Wheelchair bound people के लिए independent mobility है.
इस तरीके से he is going to be the hero for many people.
Don't look at the
Well, the first stock that we'll be covering today on the small caps buzzers is MV Electrosystems. Now, the stock has gained nearly 30% since their conference call. What was the commentary that had come in the conference call? Let's get in Puneet to understand more.
Well, thank you for that. It's been, as you mentioned, the last couple of days, the company reported the results for Q1 and then had the conference call yesterday during market hours, and hence since then a very stupendous move on the stock. It's actually a very recently listed company, just listed last month. Indigenously has developed a 3-phase drive proportional equipment essentially for the railways, which is a very important part for the company as well as for the railways as a whole. So this has been indigenously developed by them. It's their own technology, and during the IPO the company just had a revenue of 49 odd crores for FY26. Now they've given a strong commentary, but an order book which was almost 19 times of that revenue. So 922 crores was the order book at the time of IPO, which was 19 times the revenue for FY26. That has subsequently increased to 1,000 crores for the company, and they are saying that the revenue will increase from 49 crores last year to 400 crores for FY27, and that is the big factor that's driving the stock today. The other one that they mentioned that they will be able to have higher capacity utilization, so 70 crore kind of a revenue on a monthly basis for FY28. So they will be crossing 800 crores in revenue for FY28 as well, and hence given a good visibility over the next couple of years. The other factor and the final one is on profitability. Now, since the revenue was only 49 crores, the company was loss making for FY26. They have mentioned that they're looking at least a 10% profit margin. So that is the other third and the most important point as well. So overall, all these factors leading to a sharp up move on the stock yesterday as well as today.
Right. Gaurang, MV Electrosystems recently listed, came out with its numbers. Did you get time to go through them?
So, as Puneet was describing, from 49 crores revenue to 400 crores, if I heard that right, Somit, and from loss, if you have to take a 10% call on the revenue, then 40 crore profit they're talking about. All this will materialize subject to provide the execution of order book. And I think the numbers they're talking about in terms of revenues and profitability, if the order execution goes on well, then definitely this could be a major turnaround on the earnings front for MV Electrosystems. My sense is that, again, over here, Somit, one needs to have a little bit of patience for the order execution and revenues to move to that level so that the profitability starts trickling in.
Moving on to the next stock, that is Syncom Formulation. Strong move that we are getting in. Let's get in Varsha to understand why the stock could be up nearly 13% in trade today.
Well, overall a good volumes that we are seeing here, but before diving into long-term prospects of this company, let's see what this company does. So they are present across, they're of course a pharmaceutical company present across gynecology, fertility, gastro and critical care, and they have over 1,000 medical representatives across India. They have strong brands when it comes to IVF and women's healthcare segment. OTC and generic brands have wide pharmacy reach as well. Now, talking about the long-term growth drivers, one is of course the strong prescription-led business that might have, that might have induced long-term investors. They have good focus remains which on ethical prescription-based growth, long-standing relationship with doctors which will drive demand, and management is emphasizing on sustainable growth over aggressive expansion. Talking about the brand portfolio, well, Overfresh and Overfresh M is among leading IVF or gynecology brands. Consumer brands like Mega Joy, Asardar are some of their products which will aid growth in the future. Mix of specialty and consumer products provide growth opportunities going forward. On to the export, well, if you see the international business was built since 2001, which is present over 15 countries and have approvals over 10 plus overseas regulators, which will support future expansion. Now, beyond Q1, why Syncom is in focus is of course strong doctor-led prescription business expanding into 15 different countries, leading brands in IVF and women's healthcare, and large WHO GMP manufacturing base, which will support growth for the company in future.
Right. Thank you, Varsha, for that. Gaurang, your view on Syncom Formulation.
My worry, Soviet, is the strong dependency on doctor-led prescription business. Now, going into the future, and as we all know, there are a lot of changes that have been happening in this particular field. And if the regulations have to get tightened, even if there are tighter controls on doctor-led prescriptions, because finally it all depends upon what the fine end of the margin front is. So the strong dependency on doctor-led prescription is something that one needs to be a little bit careful about. Again, no coverage, so no buy, sell and hold. But a cautiousness is definitely required.
The next stock that we'll be talking about is Extranet. The stock has hit an upper sucker of 20%. Yesterday, a big block deal that took place. Let's get in Jasmeet to understand firstly what does the company do and who was the buyer in trade.
Well, Somit, thank you for that. As rightly said, the stock has been gaining tremendously in trade. What interesting about this particular counter is it operates as an IT service company and provides end-to-end services. But the interesting aspect is the company did get listed quite recently. It's been about a month since the listing, and the listing gain was about 7% odd. But since the listing, the stock has rallied a lot. If you look at the gains which the company has achieved over the last 1 month, it's nearly about 53% odd. So that's a huge jump we are seeing. In terms of the things that led to the overall rally is the performance of the company. company. Now Q1 was quite shocking given the overall performance. The revenue saw an uptick of 11%, while the EBITDA saw an uptick of nearly 89%. Even the margins have improved nearly 800 basis points, which saw a huge leap from the earlier margin range of roughly 13% to 21%, which becomes a key thing to watch out for. If you look at the net profit, even those were up fairly by 77 odd percent. Now, what happened exactly in the Q1 and what's the rally about? The first reason is the overall service contribution. Generally, for IT companies, the service revenue contributes higher margin. So, in this quarter, the company had higher revenue from the services. That's why the overall margins improved. Services moved up from earlier 46% to 65%, and management also targets quite bullish outlook for the services. If we look at the other key aspect, the overall order clocked in for this quarter is only 60 odd crores, and in terms of the order book, that stands at 373 odd crores, and the management expects the majority of the order book to ramp up in FY27 itself. Now, if you look at the key commentary in terms of the management outlook, they're targeting a 500 crore top line by FY27. This is huge given the quarterly revenue of the company stands at 50 odd crores. Now, in terms of the growth trajectory, they expect to grow roughly 35 to 40% year on year for next 3 to 4 years. Given IT companies have been growing at 5 to 6 odd percent, the small cap company is targeting a growth range of 35 to 40 odd percent. Lastly, in terms of the margin, they expect to improve it further by 50 to 75 BPS.
Right, Gaurang, your view, does it warrant to have a premium valuation given the growth rate that it is guiding for?
No, Somit, I'm surprised with 50% plus run up from the listing, if I heard that right, and the valuation where it is trading right now, given the numbers and the 35 to 40% target that the company's kept. I think this is a very, very tall order. Given the limitations and headwinds in terms of what the IT sector is facing. Again, a word of being extra cautiousness is always necessary. And it would be interesting to see whether the company is able to deliver numbers the way it did for the first quarter. So valuations are very, very rich, Somit.
Okay. Well, thank you, Gaurang. Thank you for joining us and giving us your view on the stocks that we discussed on the show today. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
One day भारत पर you know एक cooling towel है, ये positioned as a heat protective gear. I can feel the cooling. We have a couple of lakh workmen working at different sites in very harsh conditions, and I'm more than happy to get your product to all of you.
This is such a moment for him. हमने ये बनाया adaptive. Wheelchair bound people के लिए independent mobility है.
इस तरीके से he is going to be the hero for many people.
Don't look at the disability, look at the magic of the ability that they have.
Arunesh Chawla, the DPUMP Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upwards.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture?
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition of the show. My name is Puneet Zaveri, and over the next half an hour, we'll try and get to all your stock-related queries. Now, if you joined us in the morning, we solved about 85 queries. So we are going towards that magical century mark for queries being solved in one particular day. Today, of course, greetings to all our viewers of Raksha Bandhan. But let's start with first a very quick check of how the markets are doing before we start taking your stock related queries as well, because for the Nifty 50 you continue to see those moves. Yet again sold off about 60 odd points from the high of today, so we are at around 24,100, were at 24,160, but there has been that fizzling out of rally. So the heat map very quickly if we can. Individual stocks within the IT space actually continue to do well today, and that has augured well for the overall breadth of what we have seen of the Nifty 50. So for the index, we were up about 70 points, now up about 20. But look at the top 5 movers, all from the IT space, led by TCS. You've seen actually the ICICI Bank, Ultratech and Asian Paints being the top losers for the Nifty 50 now, and seeing some sell-off on broader stocks too. So the index actually very neck and neck, almost 24 stocks in the green, the rest 26 that you're seeing in the red. The overall breadth, if you look at the sectoral heat map, also is the other factor. IT, of course, we've spoken about how well it is holding on to those gains, but it's definitely a slippery slope. We are losing some ground on the Nifty 50. Let's look at the sectoral heat map now if we can, and pull that counter up to give you that perspective. So Nifty IT up 3.2%, Nifty India Defense down 0.95%. Barring that, nothing too much happening. The FMCG also slightly in red. The advance decline ratio then next, very important also, because you were up in terms of higher advances compared to the declines. Look at that, just 16 stocks that are differentiating them. So we had that convergence yet again, and so the last 90 minutes of this week continues to be very important for the markets. Mid cap, small caps too, and then quickly the BSE 500 if we can. You have seen some good moves coming through on a lot of individual stocks today as well. The small cap 250 in the green, mid cap continues to be in red. But what you have seen is Mastech up almost 16%, just there on the back of the management change, up 10%. Tejas is up. Also, if you can pull up TVS Motor Company, there you had a surprise resignation actually come through from Mr. K.N. Radhakrishnan, who's the CEO. Stock fell 5%, has recovered some ground, but a big change that you're seeing in the auto pack as well. But let me welcome in our guest now for the show, Ruchit Jain. He's the Vice President, Equity Technical Research, Wealth Management at Motilal Oswal Financial Services on the technicals. joined in by Avinash Gorakshakkar as well, founder and head research at Avinash Mentor Services as well. Gentlemen, both of you, thanks so much for joining in. Greetings for Raksha Bandhan to both of you as well. Let me start off with the first question as we take question number 86 for the day. This one's coming through on Coforge. Sriram Raghuraman holding shares at 1478. So he's sitting on some good gains. Asking if he should still continue to hold for the long-term perspective. Avinash, stocks up above and cross that 2000 mark after a really long time. What's your view on the stock? Should he continue to hold? Avinash, very good afternoon.
Yeah, Puneet, good afternoon, and Raksha Bandhan greetings to you and the entire team at NDTV Profit. I think you should hold on to Coforge. I think this is one of those tier 2 IT stocks where I think performance has been very solid for the last 2 quarters, and I think the markets are very happy that not only the management commentary but numbers which have come out actually spell a lot of confidence from the management, and hopefully FY27 should be a good year. The company has also been looking at good, profitable kind of acquisitions, and I think the order book continues to be solid. The tailwinds are positive. So I would say that, despite the fact that the investor has made a decent gain, if you can hold on for the next 12 to 15 months, I think some further re-rating can be possible. So I would suggest a hold, stay invested at least for the next 12 to 15 months.
Correct. Ruchit, actually, if you also have a quick view on Coforge, I mentioned it's back above that 2000 marker. We saw that fall all the way down to 1066 and then have seen a revival. Where do you see the charts go for this one now?
Yeah, hi, very good afternoon. Well, if we look at the entire IT pack and see which stocks have shown a good outperformance vis-a-vis the other names, then Coforge definitely stands out. One interesting thing was that the Nifty IT as a whole, if we look at the recent lows, then it got bottomed in the month of June, in the end of June and the start of July. But if you look at the Coforge bottom, which you just mentioned about 1050 range, that was in the month of March. So 3 months before the sector had bottomed out, this stock had already formed a bottom. And post that, we have seen a series of high top, high bottom structures, good volumes. So that clearly indicates a very strong buying interest in the stock. So it still seems that the rally should continue going ahead. If we take retracement of the recent corrections, then it gives a probable targets around 2250, 2300. So that's quite achievable if one has any positional perspective.
Correct. And an important perspective from both our technical and fundamental expert on Coforge stocks, definitely doing well and climbing as we speak. But viewers, you can also call us on the landline number that is flashing on the top of your screen. Speak to our experts for your queries too. Next one though, it's another interesting one from Veluswamy from Bengaluru. He wants to enter into M&M at this point of time and asking if it's a good time to do so. Avinash, let me come back to you. Seen some revival from the stock, touched 3,500, now back again in the middle. Is this still a good time to enter?
I think Puneet, clearly the stock has outperformed, but I think if the investor has a 12 to 15 month time frame, he could use a staggered approach, maybe an SIP approach, and accumulate the stock slowly. Our sense is that, like the first quarter when the company posted a consolidated PAT of 6,000 crores, I think the second quarter is also going to be equally strong. In fact, could be stronger because volumes for both the UV tractors and the electric cars, which the company has launched, are all doing very well, and I think you could see the profitability getting better. So clearly, the fair value could be anywhere between 3650 to 3700 over the next 12 to 15 months. So I think use a staggered approach and add it to your portfolio. I think this definitely has a long way, ahead to continue to go upwards.
We've discussed this stock quite often, but you see that stock also stuck in that range as we've seen for the Nifty 52 here between the 3,000, 3,500 mark, and hence quite a few queries that we are getting on M&M over the last few weeks. The next one though, on rate gain, Murli from Hyderabad is asking us this question. He's wishing us a Raksha Bandhan, wish you the same, Murli. His question being, Ruchit, he's holding shares at 425 for rate gain. Stock's at 930 now. Is it a good time to book out or should he continue to hold, Ruchit?
I would advise to hold with the trailing stop loss method. The overall trend has been positive in last few months. So 900, 880 is a good support zone for the stock. Until that support is intact, you should continue to hold on and ride this trend.
We spoke about the auto pack. TVS Motor, I discussed the stock. We have seen that resignation come through from the CEO. Now, our viewer Prashant actually is holding shares at 3083. So maybe he bought it once the stock fell to the 3,000 mark. But Avinash, how are you looking at TVS Motor now, and how do you look at this surprise resignation that has come through? I mean, the company's strength and what they've achieved over the last few years has been phenomenal. But overall, is this a big negative according to you?
Pulit, I don't think it's a big negative. I think, yes, it's been a surprise decision for this exit. But I think, ultimately, as I understand, the company's products are well established. I think the kind of volume growth the company has posted, it's always outperformed the overall industry growth. And I think the first quarter numbers have also been quite reasonably good. I think months are also going to be equally good, because after a very long time the entire two-wheeler sector is now growing in double digits. Many new product launches expected. So I think this is a temporary setback. Maybe the stock corrected today because of this sudden resignation, but I think things will gradually normalize, and all this will get neutralized when we see the quarter two numbers. So I think the investor should not worry. I think markets always look at earnings disappointment, and I don't think earnings are going to get disappointed by this exit. So it's going to be a strong runway ahead for the company. So I think continue to hold.
Got that view. Good to get that view from you, Vinash. But let's go across to Ratnagiri now. Aniket now dialing in for a stock-related query. Aniket, very good afternoon. Thank you for calling in. What's your query?
Yeah, hi. Thanks for taking my call. So I have a stock query related to which one is good to means I have to enter into Swaraj Engineering, Kirloskar Oil Engines, or Grieve Scott. So as I was advertising, Swaraj engine stock is almost debt free, and it also gives like a good dividend. But it's fallen from 4,000 around price now. It is falling. So I need an expert advice for long term. Out of these, which one is good to buy, and at what price maybe?
Fair point. Got it. Well, Aniket, thank you for calling in. Appreciate your question as well as the research that you put in. But Avinash, between Swaraj engines or Kirloskar engines, do you have a pick for Aniket? How should he look at it?
I think if Aniket is a pure investor, then I think I suggest Swaraj Engines looks better. Of course, Kirloskar Oil also has been doing very well, and the numbers have been very solid. But as far as Swaraj Engines is concerned, I think it's a Mahindra Group company again, and most importantly, I think they supply engines to the Mahindra tractor division. Most importantly, the asset turnover and the return on capital employed is extremely attractive. More importantly, I would say that in terms of the dividend payouts, also they have been rewarding shareholders in a very attractive manner. So I think if the investor has got at least a 12 to 18-month kind of time frame, he should definitely look at a company like Swaraj Engines, because I believe that if the tractor market grows by say 9 to 10%, Mahindra has been one of the large players in the tractor market, has been growing much better than the industry. So here I think it would be a good choice to stay invested here. Maybe you can buy this stock in a staggered manner, maybe in a SIP method, and that would actually help him accumulate the quantity.
Got it. Well, and got that view, Avinash. But the next question coming through from Geeta. She wants a view on Polyplex. She's asked two questions, but Geeta, we can take one at a time. We have a lot of queries today on Polyplex. She wants to know for the next 1 year if she can buy more. Now, Ruchit, we've seen actually a good move in this year for the counter, up 40%. Is this still a good buy at this price?
Yes, the near-term trend still seems to be positive. Now, after a huge corrective phase, the stock has started forming that high top, high bottom structure. Major support is around 1100 to 1150, so you can buy at current levels.
Got it. Also, Ruchit, a very interesting one from Madan, who's from Hyderabad. He's looking at PNG Health. That counter is at a 52-week low, is what he's mentioning, and asking what's the outlook for the counter now if it's good to enter. How do the charts look for this counter, Ruchit?
So overall, it has not been that positive. From a daily liquidity perspective, we see the volumes are not that high. So where the stock has been showing a relative underperformance to the broader markets, it's better to avoid.
Better to avoid. Got it. The next question, though, it's on Tejas Networks. Let's pull up the counter today. Stock is doing well on the bourses. If up almost 8.5%. Our viewer, actually, Ekam Barai, who's from Hyderabad, he's a regular viewer of the show. is holding shares but at elevated levels of 983. So he's in considerable losses right now. I think, Ruchit, we've discussed this stock with you in the past too, but since he's a senior citizen holding Tejas at an elevated level and this counter is also very volatile, if you can give him any advice of what he should do now going forward. He wants to, of course, lower his average cost, but is this the correct time? What should be his strategy? Would you recommend an exit?
I don't think it should look to average at least, although the stock is up on the good news of order flows today. But if you look at the past history, there have been several occasions where the stock just shoots up for 1 or 2 trading sessions, but there is no follow-up move. So overall trend, the mid to long-term trend has not changed yet. So I would advise not to average at current levels, hold your position as it is. Whenever we see a change in the broader trend, then look to average, but not at current levels.
Got it. Avinash, if you can also give a fundamental view, because Ekambara is really stuck in this counter. So just a quick view, if you have on Tejas as well. Do you agree with Ruchit?
Yeah, I think he should not sell out, but at the same time, I think the next 2 to 3 years are going to be very solid for Tejas. This is a 1700 crore order which they've got from TCS, and I think orders are expected to come in. So I think considering the fact that now Tata's hold a fairly large stake here, and I think the growth momentum continues. If he has a 2-year plus kind of view, he should average, because I think his buying price has been elevated, and he still continues to be in a loss. So I think it's better that he averages and stays invested for the next 2 to 3 years. Only then I think you could expect a decent risk reward for the stock going forward.
Fair point. Got it. Let's go across to Bengaluru now. Mallikarjuna dialing in for a stock-related query. Mallikarjuna, very good afternoon. Welcome to the show. What's your query?
Yeah, very good afternoon, team. I'm holding 4 stocks of Force Motors.
Okay.
At average price of 17,602.
Okay.
I just want to know, can I add more? And I'm looking at holding this stock for next 1 year. And I wanted to know, is it good option for the next 1 year to hold this stock?
Got it, Mallikarjuna. Let me go across to Ruchit also on this counter, because Ruchit, we've seen and we've discussed this with you that stock hit 25,000 and then has come back down. But what's your view on Force Motors? Good time to buy?
Yeah, so already we have seen a good price-wise correction from its highs which were formed in the month of February. Although in the short term, the trend is not looking that positive, but can expect some consolidation for maybe 2 to 3 months more. So in case if you're looking to buy for the portfolio, then buy in a staggered manner, where at current levels you add some positions, not 100% of what you want to buy. And in case if you get further declines towards 16,500, 16,400 if it comes, then those would be the levels where you can add most of your positions there.
Got it. Got that view, Ruchit. But let's go across, taking the next question now. And this one's actually on Enviro Infra Engineers. Venkatesh holding shares at 220. He wants a 8-month view on the counter. So Ruchit, I'll come back to you. Stocks just slipped below 200, but any view on this one?
More into a consolidation phase. 170 to 220 has been the trading range, and there are no high volumes along with the price up. So I think the trend, sideways trend, should continue for some more time.
Got it. Well, let's now start the rapid fire round in this edition of the show. Ruchit as well as Avinash, you both know the drill. The first question coming through, it's on between Granules and Gland Pharma, which is a better pick for more than a 12-month horizon. Avinash, what would you recommend?
No, I would suggest Granules India is a better choice, much more stable business model, and I think growth momentum better than Gland Pharma. I think I would prefer Granules.
The next one's between Intellect Design Arena or Latent View Analytics. Jigar from Mumbai wants to know either of those, Ruchit, for the next 9 to 12 months. What's your preference?
So Latent is in a downtrend, no signs of change in trend over there. So being IT being positive for structure, I think Intellect can give some bounce back. But not at current levels. I would wait for a breakout above 700.
Got it. Also, Ruchit, a view on Biocon as well. Mr. Koteshwar Rao wants to know what you think of it.
From a short-term perspective, avoid the stock. Better to prefer Glenmark over Biocon.
Got it. The next one, and this one we've answered. So let me go and take another one on Pine Labs, bought at 160 by Anthony. How are you looking at this counter, Avinash, now?
I think one should definitely continue to hold on. See, I think a lot of POS machines are now being used in commercial malls as well as business places. So I think it has a very good future. So continue to hold.
PS Rao from Bengaluru holding Divi's, but he's bought it at 1,050. So he's bought it at very, very attractive levels. He bought it 6 years ago. So good on you, Mr. Rao. Is it still a good hold for the next 2 years, Avinash?
No, it's a good hold, but I think prudent capital allocation suggests that he should actually take out his capital, and the rest of the stocks he can consider them to be free, and so he can ride the market volatility in a much more comfortable manner.
Fair point. The next one's on All Cargo Logistics, bought at 50 rupees by our viewer Satya Kumar. He's also got an All Cargo Global, but he wants to know, Ruchir, if what he should do with either of those counters. So because he's trading at a loss for All Cargo, what's your view on the counter?
The trend is not much positive, so on any pullback moves towards 13 to 14 range, exit.
Exit, got it. The other ones from Nand Gopal on Tempsense. Now, I don't know, Avinash, if you have a view, an absolutely blistering listing today, but what's your view on the counter? Now, we had a lot of queries. I'm just combining all of them. Any view here?
So I think, today is the first day of the listing. The premium for this stock has been quite significant. The IPO price was 300. So I think, the investor, if he has a medium to long-term view, he should continue to hold. I think at least the first 2 quarters, once the company puts out numbers, that would give a clear indication. It's in a niche area, temperature and sensors, so continue to hold only for the medium to long.
A lot of people, Avinash, unfortunately didn't get the IPO. So is it also a good buy, or would you wait for the quarterly results to come through and then form an opinion?
No, I think it's better to wait because, rather than buying on the very first day, it's better to wait for the stock to settle down. And I think probably after the second quarter numbers, which should be out, once the stock goes public, that would be a better time to look at it.
Got it. Well, that was the last question, and good to end on a happy note of a stock that's up 95%. But with that, viewers, we have crossed that 100 query mark. Thank you so much, Ruchit, as well as Avinash, for those queries today. Really enriching discussion, as always, with both of you. But viewers, out of time on this edition of the show. Thanks so much for watching again. Stay tuned, a lot more action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
लॉर्ड्स मार्क इंडस्ट्रीज, हमेशा आपके साथ.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into the India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster. bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Arunesh Chawla, the DPUM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chawla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably exceed this target?
I would say we are working hard and will achieve the target.
What is the dividend picture looking like for CPSEs?
Dividends, we have a plan, but you will see that plan becoming active in the second half, which is when the dividends come in.
One day, a cooling towel है. ये positioned as a heat protective gear. I can feel the cooling. We have a couple of lakh workmen working at different sites in very harsh conditions, and I'm more than happy to get your product to all of you.
This is such a moment for him. हमने ये बनाया adaptive. Wheelchair bound people के लिए independent mobility है.
इस तरीके से he is going to be the hero for many people.
Don't look at the disability, look at the magic of the ability that they have.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy now.
Sell immediately.
Hold it, boss. Buy now. Sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit. When the headlines move fast, perspective matters.
Hello and welcome to NDTV Profit. You're watching India Market Close from the NDTV Profit Suzlon studio with me, Hiral Nadia. A very interesting day of trade, and again, wishing all the viewers season's greetings in terms of Raksha Bandhan. Clearly, if you see in terms of Nifty 50, we are above that 24,100 mark. So that is one of the positives, and it is first day of the new series, and we had seen what happened
in terms of the monthly expiry yesterday, the kind of gyrations that did come in on the back of cash on Sensex as well as Bankex as well. But right now, 0.1% higher in terms of Nifty 50. Pretty much lackluster is what you would want to say. And likewise, if you see in terms of Bank Nifty as well, you're just seeing marginal cuts of around 0.1% coming in there. Broader markets also very flat if you have to look at mid cap 100 as well as if you talk about the small cap 250 as well. But let's just first pull up the intraday chart of Nifty 50, because from that day's lowest levels, you've seen that mild recovery that has come, and we hit a low of around 24,076. So now the bed in terms of support is coming in at levels of around 24,000. If that is breaking, the question is going to be, what's that low that we are going to stoop to? But you've seen some mild recovery coming in from there from 24,076. So approximately a 30-35 points recovery from the day's lowest levels. Let's pull up the Bank Nifty intraday chart as well, because that correction from the highs is very interesting. Likewise, 57,000 almost 600 is what you touched in terms of intraday trade on Bank Nifty. Came down, and that recovery coming in here as well. The clear winner in terms of today's session is the Nifty IT index, and I'll just quickly pull up the intraday chart there. There you go. 3% is the kind of surge coming in there, and this is an absolutely global tech-driven rally that we are seeing in terms of IT as a sector, because you talk about Nvidia, you talk about Salesforce, all of them, the earnings is what they've reported. And post the earnings, the commentary that has come in from there is giving this kind of a fillip in terms of Nifty IT as well. Let's quickly look at the advanced decline ratio. We'll look at the wicks, and then we'll look at the heat map in terms of Nifty 50 as well. Look at this, you know. I mean, from where we started off, the gap has absolutely converged in terms of the advanced decline ratio. So absolutely, you could say it's pretty much even Stevens on the cards right now. No major surges coming in. It's a lot of stock-specific action that you're seeing on the cards today. Let's look at the heat map in terms of Nifty 50 as well right now and see what's happening in terms of individual counters. I mean, there you go. Exactly 50-50 there, right? If you look at the top 5 gainers, all of them coming in from the IT pack, from a TCS to a HCL Tech, seeing gains in that range of close to 2 to 4% as we speak. Bajaj Auto, and this is on the back of the CLSA note, and they've gone ahead and hiked the target price of Bajaj Auto. That's the reason why that stock is up. HDFC seeing a mild recovery after the kind of sell-off that's come in over the last 2 to 3 trading days as well. Hindalco was one of the top losers in yesterday's session. So again, the little bit of buying at lower levels has come in on a Hindalco trend. Axis Bank, SBI, a few of the other ones that we are watching out for. What's losing out in trade today is your consumption pack, or I could say, you know, the consumer durables side of it as well. ITC, Asian Paints under pressure, Ultratech Cement under pressure. From the heavyweights, again, you have ICICI Bank, which is seeing some bit of a downtick in today's session, and this is actually one of the top gainers in trade yesterday. Tata Steel, as well as, you know, if you talk about Maruti, these are a few of the names that are down in trade. Let's look at the sectoral heat map as well right now and see in terms of individual sectors what's happening there. I mean, we spoke about IT. Healthcare and pharma has continued to outperform, and that's that defensive pack probably that everyone is watching out for. You have defense, which is seeing profit booking today. We spoke about consumption, where consumer durables yesterday was one of the top gaining sectors, is seeing profit booking today as well. Real estate is down in trade. Auto, very interesting moves coming in terms of auto when you talk about TVS, Ola, Ather, Hero as well. So that entire pack is something which is in focus in today's session. So that's what the markets are looking like. But let's also get in our guest. We have Kunal Rambia and Lancelot Dicuna who are joining in. Welcome to the show, gentlemen. Always a pleasure to speak to both of you. Sorry, I would say Kunal Shah, not Kunal Rambia. Kunal, good afternoon. Now, in terms of markets, we saw exactly what happened in the cash session in the last 15 minutes yesterday. Today as well, the moves are absolutely lackluster. Volumes are tepid. What are the key levels that you're watching out for? Because again, I think it seems that the bed is being formed at 24,000 in terms of support.
Yes, good afternoon, Yigal. Good afternoon to everyone. See, I think overall what we have seen in the markets, the rally from 23,600 to that 24,700. So we tested the 61.8% Fibonacci retracement at 24,050. Now that becomes a make or break level for the indices. We have witnessed some recovery from those levels, but again, the hurdle at 24,300, 400 is acting as a strong resistance on the upside. We need to break this decisively to see the short covering move. So I think we are currently trading around 24,117. 24,050 is what one should keep on your mind on next week. If that is breach on the downside, we'll be heading towards 23,800, 23,600 on the downside as well. So if you are holding long, keep a strict stop loss of 24,050 on the downside. For the bank nifty, again, we did witness some recovery towards 58,000, but again, we are not able to sustain above it. So bank nifty has been stuck in this broad range of 57,000 to 58,000, and we have been consolidating in this broad range. So even for bank nifty, there is no particular trend what we are seeing right now. Needs to break on either side, that is 58 on the upside or 57 on the downside. Wherever it breaks, you will start getting trending moves in the bank nifty index as well. So even if somebody is holding long on bank nifty, keep a strict stop loss of 57,000 on the downside.
Kunal, Lancelot, very good afternoon to the both of you, and to everybody tuning in at home. I wish you season's greetings and happy, what is it called?
Greetings for Raksha Bandhan. That's the best way to look at it.
Thank you for rescuing me in that situation. Greetings for Raksha Bandhan, and I hope that all of the women out there, all of the girls out there have gotten fantastic gifts from their brother. Don't let them go without giving you a fantastic gift this time around. All right, but Kunal, what about individual stocks that you're liking today? That's where the action is, isn't it?
Yeah, see, I think, yeah, definitely. The action is somewhere there. So I think first I'll go with the Bajaj Consumer. I think this is looking very good on the chart. We have seen a decent correction into the stock. Now it has taken a support at the 200 SMA, and we have seen a reversal in today's trading session. And I'm expecting a good pullback rally on the upside. So I think a great time to buy the stock at the current levels, 475, 476, where the stock is trading. One can keep a stop loss of 450 on the downside and at least look for targets of 510 to 520 on the upside. So Bajaj Consumer would be my first pick on the buy side. Second stock where I'm seeing the momentum getting built up over here is from the FNO space, and that is Torrent Pharma. So I think Torrent Pharma again looks attractive on the chart, ready to surpass its all-time high as well. We have already seen short covering in yesterday's trading session, and today we are seeing a follow-up move as well. So Torrent Pharma at 5,022 is a buy for me with a stop loss of 4,855, looking for targets of 5,150 to 5,200 on the upside.
All right, okay. Just a quick question on the Nifty IT as well, because that's really where the outperformance is taking place, and then we'll talk about a few auto names. But a quick view, Kunal, is this a space where it could end up being a bit of a trap? Should you be wary?
I think what we were looking at the IT index, the run-up what we saw in the last series, again, we have the last leg of this entire rally, pullback rally, which is left. And I think that is what IT is likely to play. 31,100 is where the index is trading. I'm expecting to at least go towards the mark of the previous swing high, that is 32,000 on the upside. So yes, from a short-term perspective or even for the next week, I think IT looks great as a bet on the long side. TCS being the preferred pick at the current levels. Again, can head towards the mark of at least 2450, 2500 on the upside.
Okay, so that's with regards to Nifty, IT in the technical view coming in there. Lancelot, how would you look at IT as a space? Because very sharp rally, valuations are cheap. And, I've been talking about this to everyone that the way the setup is right now, if you have to leave everything aside in terms of what's happening, only valuations and stock price, it's absolutely mouth-watering. Do you think a good time?
So, I would look at it a little bit more differently because, as we see how the AI business plays out and its impact on the IT segment, it's very clear that this is not going to be the end of IT as was earlier envisaged, and that doomsday scenario seems to have receded. But what is clear is that there is going to be a period of adjustment from these IT companies, and they would have to modify or change their business models, which process for the larger companies will be a lot more difficult. And as while we may see that AI as a share of their business grows, it could also happen that the growth may not be fast enough to compensate for the loss of the other business. So I think we are going to see this period of a little bit of consolidation and compact, and we need to probably look at it more that it's like a dividend pay at this point in time, a dividend play, because they are able to generate sufficient cash which could get distributed as dividends, and valuations being attractive. you may have some downside if there's any further re-rating, but apart from that, it will be a period of maybe 2-3 year adjustment before we start to see it go back to growth again.
So that's with regards to IT as a space. Now, let's pull up Nifty Auto Index as well and see what the index itself is doing, because a couple of stocks that are in focus and trending in trade. You have the Auto Index, which is down nearly 0.4%. TVS, you have the CEO who retires right now. So that's the reason why there has been pressure, because if you see in terms of TVS, what has happened is in terms of the stock, it's up nearly 7 times since October 2018. And I think that's the reason why the street is reacting negatively on that one. You have Hero Moto and Ather. Both the others are also in focus in trade today. And that's because you have Hero Moto, which has gone ahead and increased stake in terms of Ather Energy. And it's close to around 1,700, 1,800 odd crores. Hero is okay, but Ather is the one which is reacting with gains of around 8% coming in there. And very lastly, the third one we're talking about is Ola. If you pull up that one on the screens as well, on the back of the launch, and made in Bharat, coming in there, factor coming in there, that stock actually has receded from the day's highs, but hit seeing gains of nearly 4% as we speak. So a lot buzzing in the two-wheeler space in today's session. In fact, let's head across to my colleague Puneet, who tracks the space pretty closely, to first take us to the stock of the day, which comes in from the Auto Pack. Puneet, over to you.
Well, thank you for that. It's a TVS Motor Company that makes it to our list today. Stock reacted and was down 5% when this news came through as well. And let's start from the top, actually. Let's put out the big news first, that you'll have Payman Kekar, who is the director and the CEO, now appointed from 2027. The other factor, and we'll actually get to this. Let's put up the news first, which we have. The Payman Kekar has been appointed director and the CEO from January 27th. 2027, and he will be effectively taking over from K.N. Radhakrishnan, who will be essentially moving into a non-executive chairman role for the company. Now, of course, K.N. Radhakrishnan, he has been an exemplary performer for the company in this particular time frame, has been a growth driver too as well, but definitely it's a big news coming through.
And if you see in terms of what's happened, in terms of the market share growth under K.N. Radhakrishnan as well, and an interesting data point that Puneet pulled out from FY 2009, it stood at around 15%. It's gone up to almost 20% by 2026. The margins as well have improved from 3.2% to almost a 12.9% is what you're seeing. And the company has meaningfully scaled up the scooter portfolio under his tenure. And they've acquired premium motorcycle brand Norton in April 2020, and which will be launched in the second or the third quarter of FY 27. Let's actually get in Ashwin Patil, Head of Fundamental Research at LKP Securities. Ashwin, welcome to the show. Always a pleasure to speak to you. My question coming to you is, let's break this up. We have news coming in for Hero Ather, TVS Motors and Ola, and all the three of them a different set. Let's start off with the TVS. You have, a new CEO which comes in at TVS Motors because the existing one actually retires. The stock is reacting negatively. What would this actually mean according to you with the kind of scale, that the current CEO has been able to achieve for the company?
Well, I would say that it's an illustrious career that the current CEO has, had over last 3 terms in TVS, and over that period, he has actually, as you had mentioned just now, that he has been able to pull up the margins significantly now in the 12-13% kind of range from where it was in the lower single digit earlier. And the struggles that the company has faced in light of competition from the stalwarts of Hero and Bajaj was really very, very, very high. And in such a scenario, the company has been able to pull up such a great show. I mean, every month, if you look out the numbers, TVS has been the outperformer as compared to all other companies on the first of every month that the numbers come out. And also you look at a few acquisitions like the Norton thing and the fantastic show on the EV two-wheeler side with the iQube launch, and they were the prime movers in that segment, and now they are at about 26-27% kind of market share. Really very commendable job this guy has done in TVS. If you look at overall, I mean everything on, he has ticked all the check boxes, I would say. So there is nothing negative about him. He has done a fantastic job over here. But definitely, I mean, the show must go on. Things the old people do leave, and the new people have to join, and they have to pull up the company in similar fashion, or even do it much better than the previous one. So all the best to the new upcoming CEO, and I mean, obviously the stock would be reacting in that fashion, as we have seen, because the void that he will be creating, that the market is actually wary of. But that void will be filled in by definitely they must have thought of some, this the new guy, Mr. Kagar, is coming. So they definitely must have thought that there is definitely a good chance of him also continuing the great show, or making it still better.
Ashwin, hi, Alex here. So the question beyond TVS, of course, is news on Hero MotoCorp announcing a further acquisition of stake in Ather. And what does this mean strategically for both companies? Because it seems like the intention of Hero MotoCorp is to increase its stake even going forward.
Oh, definitely. I mean, now it's 32.88%. They have increased it 3%. Today with about 1,700 crore kind of investment, and they have been doing it continuously. See, I would say that it's a strategic win-win situation for both, because if you look at from Hero's point of view, then they have this presence in the form of Vida. Vida is also now, they are also scaling up their market share, about 10.5% kind of market share they are having, and Ather is somewhere close to about 18%. And both are operating in different kind of categories within the EV two-wheelers, and they are not competing against each other, but on the other side, the risk is getting hedged from Hero's side. So, and also from Ather, if you see, the investment is increasing. They are getting a big label under them as an investor through Hero, and about their matters, like strategic matters of Ather, are not getting interrupted by Hero, and at the same time Ather's presence is also getting benefited because of Hero. So overall, if you see, it's a win-win situation, as I said earlier, for both of them. And if you look at the new launches that Ather is coming up, the Konark which it launched, that is also expected to increase the market share further. So from Hero's point of view, it will be as the stock price moves up, they'll be getting a better chunk of the profit. So I would say that overall it's a great situation, and we can see it getting reflected in Ather's number particularly.
Ashwin, that's with regards to Ather. Now, how are you looking at Ola? Because if you see, Ola was one of the market leaders when you talk about the EV two-wheeler space, came down significantly in terms of market share, and now it's trying to find its, footing as well. Now, currently, they've launched S1Z, which is with Made in India Bharat Cell LFP technology. Now, because of which you're seeing that stock actually at the day's highest levels today. What is your view on Ola?
Ola will also definitely try to be there, in the EV two-wheeler space, because they were the prime movers, number one company to enter into that, but then they fizzled out, looking at the reporting discrepancies of their numbers, as well as the quality of the product, etc. Many reasons, we all know that. So after that, the market share has crashed, and now they are trying their fair bit of thing to do to get into the EV two-wheeler space once again, to have their foot cemented in the industry, and definitely they'll be trying their level best to take on the competitors. But the competitors have reached far ahead of it now at this point in time. So their efforts will be there definitely, but I don't credit it up to that extent, as as the other three big players have been fantastically and genuinely doing things on their part, and therefore Ola will be like once, and they'll be they'll be putting up, they'll be launching their products. Definitely, they'll be trying a lot from their side. But on other side, I would say that the top three companies will be doing much better than it at any time. Yeah.
Final call, Ashwin, and maybe a quick one here, because you've already described the pros and cons of each of them. What is the pecking order in the two-wheeler space? We haven't spoken about Bajaj or Eicher in this list, but what's the pecking order?
My pecking order, despite the the surge in the stock, I would say that Ather is my top pick within the two-wheeler space. There is also a lot of steam left with the EV penetration at inching very fast now at 11%, and with the new product launches, capacity expansion, etc. I would definitely say that Ather is my top pick within the space, followed by Bajaj Auto, Hero MotoCorp, and TVS, because TVS also we like, but the valuations are slightly stiff at this point in time.
All right. On that note, Ashwin, thanks so much for taking the time, and pleasure having you on the show as always.
Thank you so much. Bye.
All right. While we're on the subject of two-wheelers, and in fact Ather being the top pick as well, it's buzzing in trade today for good reason. It's been in focus on account of the increase in stake by Hero MotoCorp, of course. But we've got Puneet with us to give you the bull versus bear case, because there certainly is a bear case as well. Whether that's stronger than the bull case, I'll leave it to you to take a pick. But Puneet, what are you picking up?
Well, thank you for that, Alexa. We've seen a very sharp up move, as you rightly mentioned, up almost 8.5%. So we've tried to put in the good and the bad of what you have to watch out for the investment. Now, Heroes had another investment of 1,758 crores. They were at 29% of Ather in terms of stake. That has increased to 32.58. So it's a big one for Hero MotoCorp as well as its shareholders, but also for Ather getting the financial backing continuing too. But now the stock is up almost 5x. The IPO price was 315 way back in May of 2025. So there is definitely a lot of that valuation comfort that has vanished through for this EV two-wheeler maker. But you have to look out for what's next. What is next? We'll know on the weekend, because they will be launching the new EL platform that will house the other new set of products for the company. This will also be made with costs in mind, so that margins will be benefited going forward. But the company's market share gain has been key for the company as well. So the further gain now will be something to watch. They are now the number 3 player, but further market share gain would be a tough ask. So maintaining that would be one. But you have competition from Hero MotoCorp itself coming with Vida as their product. So that will be the other factor. And finally, in terms of valuations, stock has now, materially inched up for the company as well. Stock trades at 7 times the EV to sales mark for FY28. So it's not cheap, and you can't trade it on price to earnings because it's not profitable at this point of time. And the other peers like TVS and Bajaj are at 3 to 4 times. But the utilization is over 90%. New capacity will come in H2. So they will be able to have a higher bet at the market share point. But that's the bull and bear case. There are a lot of positives. Most certainly, the new launch over the weekend will be keenly watched. But valuation comfort has definitely gone away with legacy players now having a bigger share of the EV bet too.
Okay, so that's a very interesting take coming in because of the kind of surge that we've seen. Thank you, Puneet, for that. Let me actually take a question with Kunal in terms of the entire auto pack, specifically the two-wheeler space that you're watching out for on the charts. Anything that looks attractive, or versus the OEMs, you're finding something which is probably much more attractive, in terms of the ancillary space?
I think overall, ancillary space looks much more attractive to me at the current levels. I think one stock again which continues to be on my radar over here is Motherson. So I think Motherson again, any declines could be a good buy. It has been testing the 20 EMA on a technical front. Currently trading somewhere around 164, 165. So I think somewhere around 160 would be a good price to enter into the stock. I'm expecting this to go at least towards 174, 175 on the upside.
All right. Gentlemen, on that note, short conversation today, but happy weekend, happy Friday as well. Thanks so much for taking the time. Pleasure speaking with you.
Thank you.
Okay, we have to slip into a very quick break. More on the other side. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
लॉर्ड्स मार्क इंडस्ट्रीज हमेशा आपके साथ.
One day horizon. You know, a cooling towel है. ये positioned as a heat protective gear. I can feel the cooling. We have a couple of lakh workmen working at different sites in very harsh conditions, and I'm more than happy to get your product to all of you. This is such a moment for him. हमने ये बनाया adaptive. Wheelchair bound people के लिए independent mobility है.
इस तरीके से he is going to be the hero for many people.
Don't look at the disability, look at the magic of the ability that they have.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into the India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
Arunish Chavla, the DPUM Secretary, speaking exclusively with us on NDTV Profit. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
This is in line with Prime Minister's vision of sharing the national wealth with ordinary investors, minority stakeholders and citizens of India. Hindustan Copper, has good futuristic investment plans. And if you see the market analysts and the feedback, this is a stock which is forecast to go upward.
80,000 crores, Mr. Chavla, is the target. You've already hit 52,000 crores in FY27. Do you expect to comfortably...
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Let's take a look at the top headlines. Bitcoin reclaims the $81,000 mark on ETF flows. BlackRock slashes minimum Bitcoin to EBIT conversion. Mirai Asset is targeting $109 billion in client digital assets. And lastly, Genius Group plans $827 million of Bitcoin buy. Well, those were the headlines for the day. Time now to get you some insights. What's the correlation of Bitcoin with yields? Why did Bitcoin see a big spike after US announced treasury buyback last week? Listen into what Abhinav Gupta, Strategic Initiatives Head at #Emergent, had to say.
Sure, Sharad. Firstly, I'd say I'm really happy with this jump, of course, as a core Bitcoin believer. But yeah, this time it's a bit different. As you might have seen earlier in early 2022, 2023, the Bitcoin prices or the crypto market prices moved as per people tweeting about things, as per news and so on. So this time around, it's more about the money movement and asset movement, since you know that the US government has announced buybacks for the 10-year, 30-year bonds, and the yield has come down a bit. So this is money moving from one asset which is now giving lower yields to an asset which is people are more confident on, even institutions for that matter. In ETFs, there have been 1.5 to 2 billion extra inflows and so on. So yeah, this move I would say is announcement that Bitcoin is becoming more mature. The yields part is it's more of a money movement that eventually happens in the market already. This time it's happening in Bitcoin as a sign of from just I would say retail speculation. Now the asset Bitcoin is moving more towards institutional asset itself. So yeah.
And Abhinav, what does the current treasury yield setup mean for the crypto investors or the community as a whole?
For the Indian crypto investors, I would say, for any crypto investors, actually, I would say this is a good asset. As I said earlier in 2021, 2022, we used to ask, okay, how much did you invest in crypto? Nowadays, even in my circle, people are asking more about, okay, how much allocation of your portfolio you have towards crypto or towards Bitcoin specifically. It's no longer more about speculation and earning quick money and so on. It's now a long-term investment that a lot of crypto investors, retail investors are seeing it as. And yeah, I would say each and every friend who's new into crypto, I usually recommend that this start small, but keep investing, much like the SIPs you do in mutual fund. Crypto is, or Bitcoin especially, is now an asset class running to be equivalent to that firm. Till now, it was more of a pilot. It was very volatile. It was up and down. Now, since the market has been stable at around 60,000 and now it's growing, this growth itself would be much more sustainable, much more stable. And we'll see hopefully a bit more rise towards the end of the year. So, yeah.
Thanks a lot, Abhinav, for that. An interesting takeaway is that Bitcoin is not a fringe asset class anymore. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Welcome back to India Market Close on NDTV Profit. Now, it's that time of the day. I mean, we've crossed that time, but Samit Sarkar is standing by with all the chatter from the dealing room as well. Samit, good afternoon. You know, what is actually buzzing right now on the cards? Because markets, absolutely, I mean, no major moves coming in there. Advanced decline ratio also even, Steven.
Good afternoon, Hiral. In fact, no major move for the entire week is what we are seeing after a couple of weeks of decline. Completely flat move this week is what we are seeing. So not much of an action, at least on the index level, but a lot of stock specific ideas or stock specific actions that we are seeing. Firstly, when it comes to Hudson Agro and Yatharth Hospital, there's a buzz of a potential fundraise that could happen in both the counters. So keep an eye out for both these names. For Karur Vysya Bank, there are buy flows on the HNI desk and dealers are expecting some positive news flow that could come in. Dealers also expect a potential index inclusion that could lead to some inflows into Karur Vysya Bank. For NTPC, a large DI has been accumulating in trade is what dealers have been indicating. For S-Chan, there's a buzz of a potential buyback announcement that could come in going forward. And when it comes to APL Apollo, there are some buy flows that we are seeing on the large HNI desk. Dealers are expecting a positive report to come in from an MNC broking firm, and that is the reason why the stock is also up more than 3% in trade. And lastly, when it comes to, before that, JG Chemical is one counter. The stock was up as much as 16% at one point of time. There's a buzz of a potential international acquisition that the company could announce very soon. And lastly, when it comes to Sagility, that stock has also been buzzing in trade. It's up around 5%. There's a buzz of some global tie-up that the company might announce very soon. And that is the reason why the stock has been gaining in trade.
All right, so quite a few interesting stocks there. Thanks so much, Samit, for that. We've got on this side of the break, Rudramurthy BV of Avachana Investments, as well as G. Chokalingam, founder and managing director of Economics Research. Gentlemen, thanks so much for taking the time. Pleasure having you as always. Rudra, it's been so quiet that I hesitate to ask whether you're seeing any possibility of a trade right now. But knowing you are sure to have at least a couple of ideas.
Yeah, Alex, good afternoon. Thanks for having me in the show. Definitely at index level, it is completely range bound. If you see the zones on Nifty, yes, support is there at 24,000 and resistance at 24,500. So in this tight range of 500 points, better to avoid trading index. And similar levels, if you see on Bank Nifty, support is at 57,000 and resistance at 58,200. So it's a 1,200 point range on Bank Nifty. I will not do any trades whatsoever till we break out of this range. Until then, I'll be very stock specific. And you have a lot of sectors which are doing good, and similarly in those sectors, few good stocks which have relative strength. I will be very stock specific in this market till we break out of the range. So sectors like metals, platform and new age, and even select PSU banks, select IT, select pharma, they all look very good to me. And I have two names for you as my stock picks for the day. Delivery looks very, very strong to me. It has made a strong bottom at around 450 zone. And now from yesterday and today, it is giving a pullback out of those support zones. Open interest buildup is also on the positive side in futures. One can definitely go long at current market price. Keep a target of 500 rupee initially with a stop loss of 455. And for me, metals also look very strong. So I am going with Jindal Steel. So this stock having given a clear breakout above levels of around 1,140, 150. Now at every dips, I will be a buyer from current market price. Looking at initial targets of 1,230 to 1,250. Keep a stop loss of 1,160 for this long call. So a buy on delivery and Jindal Steel.
Interesting names there. In fact, delivery is seeing some buying interest at the day's highest levels as we speak. Stay with us. The banking space is now in focus as well. If we can just quickly pull up Bank Nifty on the screens, because marginal moves coming in there. There you go, 0.2% lower. Now this is after the ECLGS 5.0 scheme has hit the 2.5 lakh crore sanction target, and it's prompted its closure. Let's bring in Piyush for more details. Piyush, we're talking about the scheme one, that it's closing ahead of time. But I think most important is the underutilization that is coming through.
Yeah, that's absolutely right. The government had launched this scheme in March, where they had said after the war broke out between US and Iran, and there was this assumption that some of the MSMEs could get badly affected, especially those who have linkages towards the export side more. So the government launched this scheme saying that it will continue till April next year, 2027, or till the time that 2.5 lakh crore corpus is full. So ahead of the expectations, actually bankers have seen robust demand coming in for loans under ECLGS 5.0 scheme. Bankers have sanctioned 2.5 lakh crore under the scheme, and like you rightly mentioned, the utilization rates are not 100%. We have reported earlier this month how SBI has sanctioned 32,750 crore rupees of loans under the scheme, but had disbursed only 25,440 crore. Union Bank has sanctioned 12,000 crore, disbursed 11,000 crore. Canara Bank also has sanctioned. Canara Bank and Bank of Baroda each have sanctioned rupees 11,000 crore under the ECLGS scheme. So PSU banks have done fairly well in terms of giving loans under the scheme, and NCG, the National Credit Guarantee Trust, which is run by the government, they provide up to 75% security to banks when they give loans under the scheme to MSMEs. Back to you.
Thanks for that, Piyush. You know, the question over here is, Alex, one, the impact in terms of banks. I mean, one positive what I'm seeing is it will be lower future contingent liability for the banks as well, and the dependence in terms of government-backed lending, right? The question is, what is the impact that comes in terms of corporates? Because your large corporates may not need it because they already have the facilities, but the mid-sized, smaller corporates who were actually adhering to any of this, the problem is they will be left little dry.
So, my understanding, of course, and based on what Piyush has said, is that sanction exists. So, the ability to draw from it exists. It's just that now, beyond this, nothing more can be sanctioned.
Correct.
So, if only 40% has been drawn, the rest can still be drawn, right? So, to the extent that you've applied for a loan under the scheme and it's been sanctioned to you, you can continue
No, but the question is, if someone needs it now, they would have still applied till the deadline, right, which was April 2027.
Oh, you're
now
saying
there
that
is a
if they had
closure,
not applied.
If they had not applied.
Yeah.
So the ones who might, and you know, see, a lot of corporates would not have used the facility thinking that, is this the right time to make that investment? What is happening in terms of demand? Is there demand to actually look at a borrowing like that, you know, in this sense?
Which is why all of the savvy ones have already applied, even though they didn't need it.
Now the ones who've not applied, and if they would struggle to apply, that's going to be the question. In fact, Mr. Chokalingam, any quick view on this and the kind of impact it could have in terms of banks, and if you have to look at the smaller corporates who would be looking to actually avail of the scheme?
My understanding is that this would be more useful for a lot of SMEs and MSMEs and SMEs in the unlisted space, rather than, you know, reasonably sized companies listed on the market. Yes, it will have a positive impact for the corporate, particularly the smaller size, and also for the economy. It's a good scheme. It has come at the time the cash flow problem was there on the event of the war. But I don't think it's going to make a big impact on the listed banking space.
Okay, so that's with regards to where Bank Nifty goes as well. In fact, quick view, Rudra, you know, from the financials, or if you have to look at, I mean, NBFCs also, banks and NBFCs, anything that you like on the charts right now? Because today, in fact, we were having conversations on the fundamental side, mixed view coming in that, yes, there is little excitement in banking. Some are of the opinion there is no excitement in terms of banking. What are charts saying?
Hiral, I'm very clear. Yes, PSU banks look definitely better than private bank. But then off late, even private bank like Kotak Bank and Axis Bank are relatively showing strength. And even for this list, I will add ICICI Bank. Definitely avoid HDFC Bank. So if I have to buy from private banks, my preference will be first Kotak Bank, followed by ICICI Bank, and then with Axis Bank. And yes, when it comes to PSU banks, again, you have to be very stock specific. PNB looks very strong to me among all the stocks in PSU Bank. And yes, stock is available in futures with a strict stop loss of 113. One can buy PNB for a target of 125 to 130. And yes, SBI is also making that bottom formation. Strong support is at 1030 zone. So yes, with that support, one can look at even buying SBI. So in PSU Bank, the preference will be PNB followed by SBI. And in private banks, it will be Kotak Bank, ICICI Bank and Axis Bank. And when it comes to NBFC, yes, LIC Housing Finance for last two sessions are, it is showing definite strength with volume support. And if I have to buy from NBFCs, yes, look at LIC Housing Finance, look very strong to me. And even L&T Finance looks strong to me. So these are two picks from NBFCs, which I like a lot.
Right. By the way, the story of the day, or at least one of them, a contender for story of the day is the newest kid on the block, so to speak. Tempsons has listed at 111% premium to the issue price. It hasn't managed to hold on to that heady level, but it's still close to double the issue price. Let's bring in Varsha to tell you why there's so much interest. Varsha is an interesting company and it's based in Rajasthan with a very niche play, right? And the entry barriers are pretty high. Tell us about it and why is it finding so much interest?
Yeah, absolutely. So, you know, they deal with the import substitute products, number one. And we are talking about a company which has a strong moat, that is switching costs. Steel makers won't change their supplier so easily because that only contributes 1% to the overall cost. So switching costs remains high for steel makers, and hence this is one of the strongest moat that this company has. Now, talking about what this company do, so they are into industrial sensing, heating solution and specialty cable maker. Now, talking about SWOT, let's see what are their strengths. They are also present across India, Middle East, Europe and Asia. Talking about the SWOT analysis, let's talk about strength. Well, they are largest manufacturer of contact and non-contact temperature sensors. They have diversified portfolio across sensors, heating and cables. Nearly 25% of revenue comes from export. Onto the weakness, well, this business is a working capital intensive business and inventory days have increased over the years. Also borrowings have risen significantly. Well, it will come down post listing, and manufacturing concentrated largely in Udaipur. Onto the opportunity side, well, we are seeing a growing demand from metals, petrochem, defense and industrial automation sector. Also, if you see, export penetration can increase further, and the growth is expected through acquisition, subsidiaries and JVs. Onto the threats, well, a slowdown in industrial capex can impact order inflow for this company, and the raw material price volatility may pressurize margin going forward. But overall, an interesting company, no listed players in India apart from this, and also a higher switching cost is what is one of the interesting thing that this company has.
Okay, so that's with regards to where Tempson's goes. I mean, no point taking a question with Rudra, but Mr. Chokalingam, the IPO market, the primary market, absolutely hot right now. You saw Tempson's, and I was just looking at a couple of other names as well, which have had a spectacular listing, in fact, this season in 2026. And there you see on the scenes, Bharat Coking Coal, you have Bihari Lal, Indo MIM, and CMR Green. 40 to 111% is the kind of listing day gains. Majority of them continue the upside, and the market going ahead is also looking pretty strong. Do you like any of these names, at Tempson's or anything which is recently listed?
No, generally they, like today we saw listing at 100% premium listing gain. So generally you don't get valuation comfort on listing because they debut at a huge gain. So it's better to wait, and also better to analyze the fundamentals carefully. Of course, the Tempson seems to be a good stock. Last 5 years, growth in revenue profits are really phenomenal. Even the return ratios are too good, and the company also consistently increased the capex. So, but still, after rally today, it is trading at around 42 PE. So one can hold. But generally, my suggestion to investor is that, if you are lucky making big money, book profit on listing days. If fundamentals are strong, then one can hold. Otherwise, one has to be very careful because a lot of stocks post-listing corrected a lot. So some caution is needed.
Okay. All right. Speaking of... I also want your opinion on the auto ancillary players, Mr. Chokalingam, because a few of them are buzzing in trade today. LG Equipment, for example, is doing well today. I don't think that there's any major trigger on this one. The stock is up as much as 4.7%. Of course, there has been some management commentary in the way of conference calls, etc., and the numbers look pretty solid. But if you were to pick in the space, in the auto ancillary space, what would your pick be?
See, LG is a part of great management, no doubt, excellent track record for decades, but valuation is stretched. I would prefer LG Balakrishna Brothers in auto ancillary.
And why is that? Can you describe the company?
Certainly.
And
Yeah, it's a great balance sheet, net cash company, excellent track record. Reward to shareholder has been phenomenal over the last 2 decades. And valuation-wise also, it is trading only around 16, 17 PE. And it has got, more than around 40 manufacturing units spread across the country. And it caters to two-wheeler industry, which is growing now. And so the user industry is very strong. Some of the major players are even, in fact, investing money to expand the capacity of two-wheeler manufacturing. All that augur well for LG Balakrishnan.
all right. So, by the way, while we were speaking about the auto ancillary space, the cash market has shut for the F&O stocks. It is that time, 3:15 has come and gone. And let's pull up the benchmarks. You have the Nifty 50 that's paused at 24,142.45, up about 0.2%. Remember, this isn't the final value. That will be determined based on the closing auction session, which starts at 3:20. You have 22 constituents of the Nifty 50 that are trading in the, or that were in the green at 3:15 and 27 in the red.
The declines led by Asian Paints, SBI Life Insurance as well as ITC. ICICI Bank, one of the losers in trade today, down about 1.2% and leading to a little bit of pressure on the downside, being a heavyweight. Ultratech Cement as well, another heavyweight, down about 1% or so. IT really is the reason why the benchmark is where it is right now. Tata Consultancy Services up about 4% in trade. Tech Mahindra, Infosys, Wipro, HCL Tech, all five are leading the gainers for the Nifty 50 and all gaining over 2.6%. Wipro gaining close to 3% or thereabouts, so too Infosys. Bajaj Auto also doing well today, and HDFC Bank for once is trading in the green at 719, though it's not really moved past the levels that it has been languishing at. It's trading with gains of 1.2% or thereabouts. Apollo Hospitals and Hindalco as well trading with gains of about 1% each. That's the long and short of it.
Yeah, that's a long. You know what's interesting right now is if you have to even look at the indicative. I was just looking at the NSE BSE website now. BSE on Sensex is giving you an indicative close of around 77,126 versus the current. I'm talking about the BSE rate right now. 77,194 is where the Sensex is at right now. So in fact, it's showing you a slightly lower closing, Alex, which is very interesting to me. And if you have to look at NSE as well, let me see if the Sensex indicative rates are not yet in. But I think the best is to actually talk about what's buzzing, which is the IT sector. And this is because a global AI-led tech rally has come in. Earnings have been very strong when you talk about the US tech firms as well. And the commentary from NVIDIA, Salesforce, and CrowdStrike, that has been really upbeat, which has boosted the sentiment across. Jasmeet is here to tell us more. Jasmeet, what have you picked up? Because look at the IT index at the day's highs, 3.5% up move coming in there. Let's just quickly pull up a 1 week chart because NVIDIA was the one which reported earnings this week as well. If you can just quickly have a 1 week chart of, Nifty IT index. There you go. I mean, 2.5% move. So the major spike has come in actually today. Jasmeet, what are you picking up?
Well, Hero, thank you for that. It has been a good week for tech. It's not just Indian tech, but also the global tech. We did see the overall global tech earnings coming this week. Nvidia was a beat and the commentary remains quite bullish. And here are a few of the reasons why could be the reason why the Indian IT is rallying in today's trade. Well, the first one is the overall jump which we saw in the global tech names like Nvidia, nearly up 9%, while Salesforce being a software company, even that jumped of about 12%, while the CrowdStrike being the cybersec company, even that jumped. So we are seeing all the companies with a cloud native business have been seeing up move in the trade, and that's why we're also seeing Nifty IT rallying as well. If you look at the commentary, when that has been quite bullish in terms of the overall AI, and the management has also stated that the AI has moved from a pilot mode to the actual analysis mode, and that's what the key positive for the Indian IT as well. Now, here are the few commentaries of the management has given in terms of the AI views going ahead. The first one is the overall Salesforce. It says that they're seeing incredible demand when it comes to the overall AI, and Salesforce being a software company, so to apply the software in the enterprise, we do require IT companies. So if Salesforce is growing, that would provide direct signal that even the IT has a good move to catch up, given a lot of IT companies have partnered with Salesforce. While we also have something like CrowdStrike, where they have commented that every enterprise will require AI. Well, that's a short commentary. What they actually mean is, for the requirement of AI, they'll also require a lot of cyber sec work, and that's why the company saw a good result as well. Well, we also have NVIDIA, the large one. While it calls that AI is at the current inflection point, from here on, it's something to watch out how that pans out going ahead. While if you look at the AI revenue check, a quick check of what we saw in the Q1 for the IT companies, we do note that the LTM is currently leading with the AI revenue. It roughly contributes nearly 12% to the overall revenue for the company. While second in the list is TCS as well. TCS was a major gainer in today's trade, and TCS overall AI revenue has been seeing a double-digit growth over the last few quarters as well. What important and what positive thing I've noticed here, if we quickly pull out the overall PE valuations and the return potential from here on, we have seen that the return potential for the large cap ITs have bottled out. If you look at the overall upside from here on, for TCS is hardly 6%, while compared to Wipro it's negative 2.3%, and HCL Tech is a negative 2.7%. So there could be a re-rating from here on. That becomes a key question for the markets as well. While if you look at the overall buy call, we have the highest for TCS. We also have the mid caps. Mid caps are not behind. Most of the mid caps have a negative one-side return potential from here on because of the recent rally, being the Coforge at a negative 3.6% from here on, and the analysts also believing that Persistent can see a downtick of 6% from here on. So as of now, it's a wait and watch of how does it pans out going ahead, if there will be a re-rating. But so far, IT has done really well and up nearly 3% today's trade.
That's interesting. Thank you so much, Jasmeet, for that. Mr. Chokalingam, any optimism in terms of IT?
I mean, I've been saying last 3 years that wealth creation story is over for large IT stocks. Yes, they have corrected a lot. Tactically, 15-20% upside is possible, as your colleague has put out. The valuation already contracted a lot. There can be some, re-rating, and therefore stock like Infosys can give around a 15% return from here. And second, there could be opportunities in the mid-sized IT companies. I expect a lot more, the consolidation and merger and acquisition happening in this space. So I like company like Cyient Limited. Cyient has 100% subsidiary in semiconductor. A couple of days back, they have come out with a very good, optimistic outlook on their semiconductor business. And in terms of enterprise value to IT revenue also, it is least. It's around 1.5 times. In the past, we have seen about 3 times EV to annual IT sales. That was a valuation given for acquisition. So I'm not saying Cyient will be acquired, but these kind of companies which have got a very small promoter holding can get re-rating when the consolidation process starts in the IT sector.
Okay, so that's with regards to where IT, as a space goes. And now, we are just celebrating a festival of siblings. What is it called, Alex?
Okay, I'll tell you what it's called if you tell me what comes before Good Friday.
Easter? See, it's okay.
There you go. So I can be forgiven for forgetting. Nah.
That's okay.
You can remind me.
What comes before
Maundy
Good Friday?
Thursday.
Maundy Thursday.
Now you know.
Yes, now I know. But actually, Easter is after Good Friday.
That's
sorry,
right.
exactly. Sorry. So that's one. So, but this is Rakhi Se Return Tak. And a very interesting piece that actually Jasmeet has put together in terms of if you had gifted your sibling whatever amount it could be. I mean, he's picked up $1 lakh, so I'm sure his sister's really getting rich. But Jasmeet, tell us what's actually happened.
Well, Hiral, thank you for that. Just to set a context for this particular link, so we have taken various asset class for both Indian and global market and then seen if you would have invested 1 lakh back in the last Rakhi in during August 9th, how much return would have been yield from that particular return over last 1 year. So we have taken Indian asset class like Nifty. If you would have invested 1 lakh, which you obviously got from your brother for the Rakhi, it would have given you a negative return of 0.8%. In terms of the best investment so far from last Rakhi to this Rakhi stands at silver, nearly 108%. Your 1 lakh would have turned nearly over 2 lakh rupees, and the most negative being the Nifty IT, the underperforming at 0.8%. Followed by silver, we also have gold rallying nearly 55%, while we also have silver, we also have the sugar stocks. Given the sugar stocks have rallied quite a lot recently, if 1 lakh invested in sugar stock a year ago would have been roughly up 37%. While moving to the global markets as well, so we also have dollar index, Nasdaq and S&P 500, and we have seen how those have returned over last 1 year. When you look at Nasdaq is roughly up about 20% so as S&P 500. In terms of the best investment for global securities, we have Brent. While due to the overall war going on, the Brent has rallied about 33%. So over $1,000 invested in Brent a year ago would have roughly arrived to $1,300. In terms of the worst performing asset, we have Bitcoin index. It's down about 31% so far, but Bitcoin has rallied quite a bit in the recent times, and that's something to watch out how that pans out going ahead. So here's the quick analysis. Whatever you would have invested a year ago, received as a Rakhi gift, how that would have turned over the last 1 year.
Okay, all right. The question is, what did you get your sister 1 year back?
I got her a perfume.
And there you go.
Now he's going
I promise you, I wasn't expecting that answer. But
he still gave you an honest one.
It was. It's very sweet. I'll ask you later today what you got her this time. But anyway, let's talk about where things are closing out, and we're just about 5 minutes away. Mr. Chokalingam, let me ask you this: are you enthused by the 3.5% up move in IT? And we've spoken about the technical levels earlier on in the show, but on the fundamentals and on the valuations, are you convinced at these levels?
Certainly for large cap stocks, I am convinced because I have seen evolution of these stocks from early 90s. They used to command even 150 PE. Now they have come down to as low as 14. Of course, I am also convinced that the AI threat is real. It's not going to destroy, but definitely it's going to make the year-on-year dollar revenue growth somewhere anywhere from -2 to +2%. So we have to accept that. So therefore, the re-rating of valuation multiple also will have to accept. But still, they are sitting on a lot of cash. Some companies are implementing AI, rather integrating AI tools in their services. I think this 13, 14 P is, is too much of punishment. So they can get re-rated anywhere from 15 to 18. So therefore, I feel from here, another 10 to 15% very much possible from these stocks. And also, let us not forget the fact that the rupee constantly under pressure. So that also can act as a little defensive for these stocks.
Okay, so that's with regards to where the overall view comes in there. But let's just, we have to look at the cash market right now is what, indicating 24,142. Rudra, if you have to look at markets from, the kind of levels that we're trading at, anything that comes to your radar, which is looking interesting in today's session, but we wouldn't have spoken about?
So my recommendation delivery looks very strong. Yesterday the move started and it continues today. So
apart from a delivery or a JSPL, which were your top picks, anything else that you like?
Yeah, so for me, PSU banks looks very strong. So I will be a buyer, might be in PNB, and that current market price looks a very good risk reward to enter. And from cash stock, there is a buy call which I really like, a stock called Reddington. So this stock has made a consolidation at around 340, 350, and it is now giving a big breakout. So I will definitely have this in my portfolio, looking at big targets of 500 on Reddington, and one can go along with a strict stop loss of 340. So this market is very stock specific and sector specific. So you have to be with them, avoid index trading because it is grinding. And if you want to play this CAS system, better to go for either a casino in Goa or for Las Vegas and not to do it here.
Rudra, what about a Genius Power? I'm seeing an interesting spike in today's session, 5.5% up move. Are you expecting this momentum to continue if you have to look at Monday as well?
Yeah, so on charts, if you see after a 5-6 day kind of a consolidation, this stock is now breaking out. The close is also very good, above 350. So yes, you can expect a follow-up move on this, Hiral. And GNS Power can be bought at current market price. Look at targets of 385, 400 to come. And one can keep a strict stop loss of around 345.
We're close to that a time when the rates settle, but a few stocks from the broader markets are doing incredibly well. By the way, I think the Sensex has settled. Can you pull up the chart for the Sensex? It's 77,264. Can you pull up the chart for the Sensex, please? And yeah, it has. The final rates for the Sensex are in. It has settled at 77,264, and that's up about 0.4%. And so too the Nifty 50. I think the Nifty 50 is also closed, 24,176, or there was just sub 176. Up move of about 32 points, not too much to speak of. The Nifty Bank closing just about flat at 57,433 or thereabouts. Let's look at the internals and figure out what stocks have moved, and let's go to Sharad for that. Sharad?
Well, it seems like a reversal is at play. What we saw yesterday in Sensex expiry, especially the up move coming in Sensex, not a bigger move coming in for Nifty and Nifty Bank, but yes, there was a recovery after a sudden sell-off at around 12:30. But stock-specific moves is important. Let's see what has happened here. Which stocks were actually aiding the momentum, especially the IT stocks are doing well, but L&T also picked up slightly. Asian Paints also there. What's there dragging the Nifty, especially on the timings front? Let's have a look at that also. The Nifty 50 losers, and largely we have some certain auto names, but still you could say a range bound move happening. But I would like to just point out that 24,200 important levels of both call and put, that's where the action is. Open interest, look at that, that's going on the higher side, and that's the number to actually look at. Also, I would like to get 100 point lower call and put options also to show you how things are moving at around 1.27 crore. The put positions are. So this is the entire setup happening, but yes, there is a positive close coming in for the indices.
Yeah, absolutely. Thanks so much, Sharad, for that.
You're not seeing the kind of moves that we saw yesterday, which is heartening. And I think the question over here is when it comes to CAS, I think we will have to give it some more time for the settlement to actually happen and not see these kind of gyrations that are coming in through, at least in terms of expiry, because your liquidity is absolutely low. Your prop trading books have come down as well.
Yeah, absolutely. But on that note, I'd like to thank both Rudra as well as Mr. Chokalingam for joining us today. Absolute pleasure. While we're at it, see, you've closed with gains of about 1/3% for the benchmark Nifty 50, but it's been narrow gains. It's been narrow ranges all through the week. Can we get the weekly chart for the Nifty 50 as we close out this Friday? 24,175. And take a look at that, right? For the week as a whole, we've closed with cuts of about 0.5% for the Nifty 50. Pull up the mid cap and the small cap index.
But again, only a
250
point range on Nifty 50,
very small,
right, over the
very
week.
Small. So the mid cap index about 1/3% higher. Again, here too, very small ranges. 0.2% higher for the small cap index.
Let's look at Bank Nifty as well very quickly in terms of the weekly chart. I mean, again, a very similar move is what you've seen.
But it's been plodding, it's been chop and churn. It's practically like you're treading water in this kind of a market. And really, it's going to need a trigger. Now that the earnings season is far behind us, there's going to be Jackson Hole this evening, of course, and any mention of a direction or something that could give direction to expectations of monetary policy in the US will likely have a bearing on risk assets there and incrementally for the rest of the world as well.
And in terms of the domestic markets next week, you should be watching out for auto sales numbers that will trickle in as well from Tuesday onwards. You have FCNRB that will be ending as well.
Monday.
So these are two events that you should be actually looking at pretty closely. But apart from that, nothing major. I think everything is with regards to where primary markets are concerned, because that's where the liquidity is flowing.
Absolutely, and that's where the action is. We're ending this leg of India market close, but up next is the editor's cut, and we've got a few very interesting things to discuss. So stay tuned for that. From Hiral and myself and the team that put the show together, thank you so much for watching. Stay tuned. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
One day, you know, a cooling towel है, ये positioned as a heat protective gear. I can feel the cooling. We have a couple of lakh workmen working at different sites in very harsh conditions, and I'm more than happy to get your product to all of them. This is such a moment for him. हमने ये बनाया adaptive, wheelchair bound people के लिए independent mobility है.
इस तरीके से he is going to be the hero for many people.
Don't look at the disability, look at the magic of the ability that they have.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K, the works. Where's the hook?
There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
They say morning shows the day. Markets often have
Welcome, you're watching Editor's Cut, and we have a very interesting and I would say eventful week to unpack. So much has happened. The biggest one is, I would say, the closing auction system. Hiral, Alex, was Friday closing at least
Yeah, it was quiet.
uneventful,
Yeah, it was
relatively
quiet.
uneventful?
Absolutely uneventful, because what we saw yesterday, I think somewhere the street had expected that probably something might just come through, but no one expected this kind of a move in terms of what happened on Sensex and BankX as well, because the kind of gyrations that you saw in terms of indicative close, it went up to almost 2.5% kind of a difference, and that's what scared everybody. And if you have to look at data as well, I'll get to that, but let's get an Alex's view as well in terms of what he thought of CAS.
So yesterday was a little crazy and chaotic, right? And it was expected to be, you just wanted to navigate past the first expiry without too many hiccups. And in fact, yesterday you had a hiccup fit at the end of
I think that was a chokehold.
Yeah, it was a chokehold.
You're
at the end
going
of it.
2,000 points
Yeah.
in each direction on the Sensex in a matter of minutes.
And luckily we closed off. In fact, Hiral and I were sitting at the table and we were trying to figure it out, and Hiral was like, the indicative is showing 2,000 points down, and I'm like, are you serious? Are you seeing the right data?
Let me refresh. Is
Please.
there something wrong?
Yeah, and so it ended up being cuts of about 500 points at the end of it, so it closed off those lows. But the fact is, because the volumes are so thin, there is the possibility of that kind of a gyration at the index level, which is not ideal. And so I think at this point it's a chicken and egg situation, right? You have a situation where it's not lucrative or conducive for a writer of options to be present in that session. And so prop traders are not going to participate. As long as you have that feeling that I don't know what I'm getting into, you won't have the volumes. If you don't have the volumes, you're going to continue to see these gyrations.
Yeah, but to add to this, I just pulled up 2 data points, wherein if you had to look at the Sensex 77,200 put option, that jumped from 54 rupees yesterday to 499.
In how much time?
In the CAS, because of the CAS window.
Because of the CAS window.
And if you have to talk about the 76,900 put option, that actually moved from 4.7 to 200 rupees. So because the liquidity is low, the question is what happens to someone who's taking large positions. These kind of moves can really take you, and that's the reason why I don't think so you're seeing retail investors participate.
So for me, the question of CAS is, was there such a big problem that you needed to bring in CAS to solve it? It's always good to be on par with international markets. Agreed 100%. And you have the New York Stock Exchange and other top markets which have this closing auction system. You also want a better way to get your closing prices. Remember, at the end of the day, that was the purpose of this, right? The VWAP was not really the best price, and this the closing price accounts for so much.
It opened itself.
NAVs, etc.
For manipulation.
But you've had one case of manipulation, alleged manipulation in the first 20 days. You've closed off 3 weeks with so much confusion, and everyone who's been coming on this channel has been telling retail investors, stay away after 315. So you're going to have volumes shrinking in further, and you have a regulator which is saying, nothing doing, this is going to continue. In fact, I'm just going to play out for you, and these are some of the important things that have happened this week, what the SEBI chief said to a question on CAS.
नहीं, अभी हम कोई चेंजेस नहीं देख रहे हैं और सिस्टम ऐसे ही चल रहा है. पार्टिसिपेशन इस पे बढ़ेगी और सब लोग ब्रोकर्स और वो अपनी एप्स में एनेबल करेंगे और लोग सीखेंगे और इस मार्केट में आएंगे.
So, लोग सीखेंगे इस मार्केट में आएंगे. I think we should give it a little more time. I just wonder, can the regulator stay a silent observer if this continues? And at any other time, if the markets were euphoric or you were in, that part of optimism, it would have worked. Right now, when there is such a dampening of spirit, is this adding to worsen the mood? Yeah.
The thing is, a lot of people initially thought this is something probably might work, might not work. But I was talking to a couple of traders, and what they are of the opinion is that in terms of global markets, what's happening is they are using these rates which get discovered to actually ascertain the next day's opening rates and where the market is probably going to move.
You're saying global traders are?
Yes. And because of which
they would have anyway for any closing rate you would get?
Correct. No, but they're going to use this mechanism for a better price discovery for the next day. And that's what probably they want to achieve out of this as well, for which they will need that kind of time. Because in the last 15 minutes as well, what's happening is it's still taking your VWAP of the last 15 minutes. It's not taking a VWAP of the full day. That's the differential over here.
Oh, is it?
Yeah, in the last, from your 315, once your orders are put in, buy and sells, it still takes the VWAP of the 15 minutes.
No, I know it takes 15 minutes, but in global, you're saying that it takes the VWAP for the full day?
No. Ours was full day versus 15 minutes,
okay,
right?
fine.
But
So now it's only 15.
Yes, now it's only 15 minutes, and global markets were looking at this for a better price discovery for the next day.
Yeah.
Okay.
So that is
But
what is going to be the outcome from here.
global investors are anyway not going to decide to come in on India. That's something that Samir Arora told us that today, that global investors are not coming into India because you've done gas. So do you want to really have that kind of an impact?
If you look at the kind of turnovers during the cash window as well, right? They're 1,000 crore, 1,100 crore. You're talking about extremely shallow volumes for that window, where you're talking about some of the stocks with a market capitalization that's tremendous, right?
Yeah.
So what is actually being traded?
That is one, and I think when we're talking about liquidity, when we're talking about volumes and cash, I think it's going to be important to talk about MSCI next week as well, because what happens when your inflows and outflows happen on your inclusions and exclusions, and what happens in terms of those trading days, because it's interesting names that you're talking about on the back of MSCI. So that, along with cash, again becomes an important week to talk about as well next week, Alex and Tamanna.
Yeah, no, so I want to actually pull that up. Monday becomes important, and I don't know if we have that Jeffrey's note on MSCI rebalancing and Monday and what it means. You're going to have massive outflows coming in, and of course inflows as well on Monday. So watch out for the cash segment, the last 15 minutes trade on Monday too. The other thing I think that was interesting this week is that it's been 6 months since the US-Iran war.
I mean, it's unfortunate, and you've had a situation where I think the jury at the start was out as to whether this would be a prolonged conflict or not, and a lot of people at that time had said, don't think that this is going to get over too quickly. They were saying this based on how Russia-Ukraine panned out, and this has actually lasted for 6 months. At this juncture, I think the positives that you can take from this, Hiral, Tamanna, are that it's been a month and you haven't had major kinetic warfare. Of course, there are barbs that have been going on either side, but at least you can say that there are no missiles flying at this moment.
Yes, I mean, it's become more of a military to economic warfare right now that you can think of, or the pressures that are coming in as well. But you know what is interesting that I found in the last 6 months is usually in history, if you've seen during times of war, what has happened is you've seen gold, silver, your precious metals that actually move, right? And those are the ones which have given you returns versus your equity markets. So times of war, people move to precious metals. This time, in the last 6 months, you have silver and gold in dollar terms. It's not actually giving you returns.
Yeah, true. But Tamanna, what do you think? In that, is this something that you can now put behind you? It's 6 months gone. Apart from the vociferous arguments on either side, the fact that kinetic warfare is now seemingly in the rear view mirror.
So we have that plate up and Brent is still about 24% down, 24% more expensive than it was 6 months ago. So that's bad news for us as an oil importing nation in any case, even though it's better than what it was a few months ago. But in terms of whether this is in the rear view mirror, I think it's a waiting game right now, Alex, between the midterm elections for the US president and whether he still has the political heft to spend on this war. Clearly the signs are no, because they've quickly come down to economic sanctions versus kinetic warfare. So it's a waiting game between Trump's political capital and Iran's economic survival capabilities. I would say those are the two ways of looking at it, and it's about who lasts longer. Iran so far has been putting up a brave front. The way that economy and that government works is no one really knows what's happening in there. So we don't know what Iran is going through except for claims from Trump, which there have been about 1,000 claims to date that the military has been destroyed. And yes, the military is still, a problem from the Trump perspective. So which one is true? But one of the two will happen. And the third aspect is, meanwhile, the reason why Brent prices have gone down is because the US has been shoring up its own energy needs. And major partners have been looking at alternative routes. But the fact is, Strait of Hormuz is still blocked. So many months later. I was speaking coincidentally to someone who I know is in the shipping industry and understands how seafarers work. The worrying thing out of this is more and more seafarers now are opting to go at very high cost, of course, in dark fleets.
Yeah, they switch off all transponders,
The
everything
problem
else.
is something goes wrong there. There is nobody to take accountability and no one to look out for you. Then, you're a free agent over there. So that's a scary one.
We're talking about that from a perspective of what's happening on ground, and when we connected it with the markets as well. Just one thing, your Dow Jones is still up, 15%?
No, so Dow is up 14%. We'll pull up the chart. Dow is up 4%. NASDAQ is up 24%. It's only Nifty is down 4% and gold is down.
It seems like a collateral damage for us, right?
Yeah.
To that extent.
No, and 4% is actually better than what it was. Gold is now beginning to climb again.
The other aspect, I think what's happening in terms of Indian markets is because your secondary markets are not really giving you returns, I think a major shift happening to primary markets, right?
Is it because it's not happening?
Yeah, because to some extent, think about it, talk about the IPOs and see the kind of listing gains that are coming in.
Sure.
Right? Maybe that money is not being invested from a longer term perspective in these IPOs. It's just about getting there. If you get allotment, you get listing gains and you move out.
So my argument to that is that the IPO, you can't call it a frenzy, but the number of IPOs that are coming through and the paper that is coming through is partially the reason why there has been such listlessness in the secondary market. You have a sucking out of liquidity that is being locked in these IPOs. Ultimately, you're talking about 5, 10, 15 times of subscription in these IPOs.
Yeah, but I'm going to talk about, I'm looking at it differently, that because there is no action in the secondary market, that's why people are resorting to public markets. It's a chicken and egg situation,
but,
correct?
Okay, so, but in this mini debate, I think the side is got a better case because if you turn back to a few months ago when IPOs weren't doing so well, secondary markets were still not doing well.
Yeah.
It's not as if there was a dip in secondary market action at the same time IPOs started doing well.
Yeah.
So it's it's in spite, it's not despite. So IPOs are anyway beginning to do well and secondary markets were doing poorly much before.
But to add a few points in my favor, let me call it that, or to support my argument, you've had the Q1 earnings pan out. And has been described, I think Samir spoke about it this morning when we asked him, earnings have actually been significantly better than expected. You remove OMCs from the list and large cap earnings are at 80-20%, mid cap earnings better than that, small cap earnings at 30%. Things are actually moving in your favor despite the fact that oil is at 88.
What Samir is saying about large caps in any case, Alex.
Okay, no, I'm saying that the case is made for more investments to go into the secondary market.
But no one's buying that case.
That is the point.
No, but the point is,
case.
see, even in terms of IPOs, it's not that people are blindly looking at all of them. The ones which are sector specific, look at jewelry companies, the numbers that have come in. People are looking at jewelry IPOs. People are looking at engineering.
High precision, yeah.
Exactly.
Tempsons today.
Correct. So look at what happened to a Horizon, for example.
Yeah.
So it's not that people are saying, okay, I'm going to get into
Buy
the
everything.
IPOs, buy everything. No, it's not that. It's about where are they finding value even within the IPO space, where there is interest even from a business perspective. There is interest where they're sure that, okay, these are the earnings. This is the kind of growth that they're going to look at going ahead. So they're looking at opportunities and weighing in the threats as well in terms of IPOs. In fact, a few of the names that we should look at. I mean, Tamanna just mentioned about Tempsons right now. Look at a Bihari Lal.
Yeah.
I mean, 64% returns. You have Bharat Coking Coal, 96%, close to double. Indo MIM, 45%. CMR Green Tech, 40%. These are the ones which have seen upwards of 40% in terms of listing day gains.
Also the kind of company. So if you see next week's list, there's a company which essentially runs under the brand Purnia Pop-Up. That's Purple Style.
Purple
I
Style
don't know how
Labs,
many of you know this brand, but this is a very high-end couture brand.
Luxury products.
Uber looks.
Uber luxury.
And bridal, etc. I mean, a starting outfit would run into a couple of lakhs. The fact that companies like those are coming in, there's Deepa Jewellers, there's such a wide variety of the economy opening up. So even if you have right now a rough patch, I think that's interesting as well. People are hunting for ideas.
I mean, I think Purple Star is quite interesting, right? Because I was speaking to Nimit, who has been tracking this as well, and what he was saying is that now they're thinking of removing the 30,000 catalog, which is at the lower end of their
the
offerings.
Is 30,000.
It's 30,000. They're actually going to focus on the 80,000 or thereabouts, right? Because they think that that's where the juice is for them, and people are going out and buying.
I think that's the trend in the real estate sector as well right now, right? The luxury selling. But
what is the trend in the real estate?
People ultra luxury, luxury is selling. Your mid and your low income, that's not selling.
You need to
right?
have something proper to wear in those luxurious apartments.
Exactly. So,
I suppose.
That's a good point.
But again, in terms of listings, you have Augment, which is again a gold jewelry company which is listing. High Tech Engineers, again, very good subscription. I think what 281 times is what you've seen, right? So that's listing.
247.
247. So Skyway, Symbiotic, Pharma Lab. Very interesting names that list next week as well and which open as well.
Yeah, so a lot of things happening next week and you should watch out for. We'll spend a couple of minutes talking about that. That Jackson Hole symposium conversation this evening. So we'll be live on it at 7:30 p.m. So watch out for that on NDTV Profit. So what Kevin Walsh says in his first outing there becomes important. You have the MSCI rebalancing and you have FCNRB closing in on Monday. Why are you tracking that?
So it's been very interesting, right? Because initially there was no sign, and we talked about this, the fact that the monetary policy happened, the presentation happened, the RBI governor was asked point blank, is there a conversation at this point to close the FCNRB ahead of time? And he said, at this moment, there is no proposal. At this moment, there is, and I think in retrospect, he chose his words so carefully.
Always. The governor will always.
There you go, right? So therefore, a few days later, when it was shut, there was this analysis to say how much has actually come through. We'll know soon enough. But upwards of $80 billion is what you're expected to see.
So I think 80,000 crores was the initial figure, wasn't it?
Yeah, I mean, we've crossed what, 56?
73. No.
70, yeah, the second one was 73.
75 to 80 billion dollars. Some estimates that go up to
100 in the last rush. Yeah?
But I think because Monday is the last day, we will know the final figures
on Tuesday.
Monday or Tuesday probably. We don't know.
So I think the what you need to take from this is that a few things, right? One, when it was initially launched, the scheme was expected to garner, according to optimistic estimates, close to 70, 75. And so this is going to overshoot that comfortably.
Correct.
Now, why is the RBI thinking of doing this and shutting it off early, shutting that tap off? Because while it might fix your problems in the short term and it stabilizes the currency, this is something that will lead to outflows 3 years down the line. And it's a cost that they have to bear with regard to hedging off this, right?
The principle that will go out after 3 years is
quite
going to be a
So I would
strong
look at
number.
it as a dosage of antibiotics or a booster shot or vitamins that you take. You never take vitamins in perpetuity.
Yes.
You're prescribed, say, even a vitamin D course for 6 weeks or 8 weeks, and then you have to stop.
Yes.
So think about it.
I like that analogy.
In that way,
yeah.
It's kind of I suppose, like a booster shot. Watch out for your PSUs and especially your SBI and the likes. They've been doing very well on FCNRB. So I think those become important.
But it's still going to, I mean, I think in a sense, the base case assumption by the people who had optimistic estimates of how much was garnered in FCNRB, it is still going to be relatively low cost, and it's going to bolster that deposit growth for them, which provides the opportunity to continue to lend.
You know, an interesting data point that I came across is NRI remittances have actually gone down in the period when the FCNRB deposit scheme has been on. So it's very possible one is happening at the cost of others. You know, some of those conversations were also about how NRIs are wanting to unwind some of their investments everywhere else they have globally, etc.,
so that they can
and divert it here. So net, we have to see how much actually comes in. But one of the interesting debates, at least for me on the channel this week, was Shankar Sharma and Sameera Arora on one side, and our very own Parag Thakkar on the other. And the debate was about large caps versus new age. I'm just actually going to play out some of those bites for you, and then we'll contextualize it.
My view, I'm just sharing my personal view. From next 2 years perspective, Indian large caps are the space to be in. Because large caps are so hated and so much sold by FIIs, they from valuation, if you are a hardcore value investor, there is value in large caps. People have just got bored of looking at things in large caps. And I think when everybody throws in the towel, that is the time to look at that asset class. And so I was saying, one is gold, if the duty is really cut for Indian buyer, and second is Indian large caps, where earning growth is 15-20%.
Actually, the thing is that the large caps look at the consumer sector or look at the IT sector, or actually, even though we own some of these banks, look at the bank sector. There is no life, there is no excitement, there is no new story. And if it's a small story that earnings will go up 1% more than before, then people already own the stock. By elimination also, you land up outside the largest companies. I am not saying that go to small companies, but I am saying don't go by the history that the old large will remain the new large. I actually tweeted saying either you can invest in history or you can invest in the future. I think the world wants to invest in the future, and there's a certain minimum, it may not happen, but there's a certain minimum return that you expect.
Last I checked, at least a couple of them are trading at the 52-week lows, if I'm not mistaken, or at least close to them, right? So, hey, I mean, that's the way markets are. I mean, I actually tweeted a couple of days back when I just asked my analyst at JQ that, hey, tell me the churn in the Nifty and the low and the smaller indexes of the Nifty, and the data that I posted on my Twitter account was very illuminating that in the last 2 years, if I remember it correctly, only 6% of the constituents, or maybe 8% of the constituents of the Nifty have changed. Okay, while for the Nifty 150 or the 500, the change is something like 45 or 50%. The large caps in India do not represent what is in demand across the world, which is the tech plays, the data center plays, the AI plays. They do not. They are not at all represented, and Eternal doesn't somehow make that cut anyway. That part of the market is finding place in the smaller cap indexes.
Okay, so I think this large cap versus small cap debate will be as old as the hills.
Yeah.
But it becomes very, very pertinent right now because just how lackluster the interest in large caps has been, and for no apparent fault of theirs. Yeah. It's not as if you started doing business badly or you had some governance issues or you had huge drops in profitability. It's just that the world switched gears and you're still on your earlier gear.
So my theory here is that the tendency is to look at the benchmark Nifty 50 or the Sensex and to look at that to determine what the universe is doing, and that's never been the case. But more so, when we're talking about large caps, we shouldn't make the mistake of saying the Nifty 50 is what it is, because the Nifty 50 ultimately, if you look at 30% or 40% of the benchmark, it is ultimately 5 stocks. And so therefore, even large cap is not the Nifty 50. The Nifty 50, I think, needs to be reconstituted.
You know, we've been having this argument since quite some time.
Loosely, when in this context of this debate, when we're talking about large caps, we're talking about Nifty constituents.
You're talking about Nifty constituents, but the question over here is, you know, okay, so very true what, you know, Shankar Sharma said in terms of valuations, right? So from a valuation perspective, if the mid caps and the small caps are at a high PE, there is growth coming in there. And that's the reason why people are looking at that faster growth. Whereas your large caps are coming in like a safe haven right now.
Yeah.
Growth is slow, but probably somewhere there is some protection, because you still talk about anything that happens in the broader markets, your investors will still flock to your banking names. I'm not saying IT this time, but still to the banking space.
Yeah, because
Look
there's
at
growth.
IT today, but I'm
Today,
saying
yeah.
IT can be, for those who've kept the faith, either a superb idea of a lifetime or the worst mistake right now.
But then there's no growth. That's the thing. The thesis needs to be growth, because your earnings growth ultimately will determine whether a valuation catch-up happens or not. You buy a stock if you are a value investor, if there is margin of safety, but the second lever of that has to be growth.
Yeah. No, so growth is not that anemic. It's okay.
Yeah, I mean,
it is.
It's single digit ultimately. It's not.
On high basis, in a bad global environment.
So
maybe
therefore,
that gets fixed and
it's
other
all
things get
relative,
fixed.
Tamanna. If that's the case, then I would buy a mid cap or a large small cap, even if I'm not as willing to take the risk to go into the deep end, right?
So no broad brushes here. You do your own homework, of course, for anything that you want to do. I just want to close off with a thought. We had a week full of festivals and got holidays for none of them. While many in our families and including children going to school could take holidays.
But no, in fact, school is also open, majority of them.
Really?
So, yeah.
Okay, so that just a word to the wise that are you going to really see great volumes? We're all dressed up because of Raksha Bandhan this Friday, so wish you all a very happy festivities. And from everyone here, thank you so much for watching and joining us on Editor's Cut. We'll see you back same time, same place next week.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into the India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
One day, below a cooling towel है, ये positioned as a heat protective gear. I can feel the cooling. We have a couple of lakh workmen working at different sites in very harsh conditions, and I'm more than happy to get your product to all of you. This is such a moment for him. हमने ये बनाया adaptive. Wheelchair bound people के लिए independent mobility है.
इस तरीके से he is going to be the hero for many people.
Don't look at the disability, look at the magic of the ability that they have.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform. Digital first. Virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be rich.
Hello and welcome to Profit 360 on NDTV Profit, and I'm your host Nimit Dikshit, back on a Friday. Before we get into the news today, the breaking is that the IIP data is now out. The industrial production data has been released for July, and I'm going to take you through the figures a little bit. Now, industrial production rises 6.7%. This is higher than the estimate of 6%. Industrial output is at 6.7%. Versus an estimate of 6%, and industrial output is at 6.7% versus 7.3% in June. Now, to make more sense of this data, we have with us the chief economist at IDFC Bank, First Bank, Gaura Sen Gupta. Gaura, welcome to our show, and can you first take us through this data a little bit and tell us what you make of it?
So it's slightly better than expected. So we were also at a 6%, so it's slightly better than expected. Some moderation on the year-on-year number was expected because the base was a little less supportive. I think the June numbers have got revised up, but you'll have to check the press release and confirm it for me. But still, overall, quite good numbers. There's a little bit of negative base, which has pushed down the year-on-year growth rate. Manufacturing production growth still on the stronger side. Even if you look at the consumption side, consumer production data still on the stronger side. There's a little bit of negative base which has slowed it down. But I wouldn't read too much into that. There's because of the base effect.
I'll take that. Let's talk about manufacturing, which is generally, surprisingly also, according to some, has been a strong segment this year, especially despite, volatility, tariff-related concerns. Manufacturing has remained strong. What do you make of the strength and resilience that the manufacturing segment has seen? Is this something we can see continue in the year to come?
Yes, so we were all quite pessimistic with the West Asia crisis. There was expectation that manufacturing will get hit because generally manufacturing production and export growth tends to be closely related. And what we have actually seen that if you look at the export side of the Indian economy, non-fuel export growth has been in double digits, despite the fact that you've seen a surge in fuel prices, despite the fact that the GCC market for India, which is around 15-16% of our total export basket, has got impacted because of the geopolitical risk. But what we've seen that exports, even non-fuel export growth in nominal terms, has been very strong. In Q1 FY27, and as a result, manufacturing production growth has also held up. The other reason why manufacturing has been better than expected is because that fear that everybody had that because of the geopolitical risk, you could have some shortages in, let's say, fuel, certain raw materials. That has not played out. We have not heard any, significant limitation when it comes to availability of inputs. Yes, it could be available at slightly higher price, but the input was available. Moreover, the demand side of the economy is protected because only 7% increase in retail petrol, diesel prices. Majority of the shock has been absorbed by the government of India and the OMCs. So the demand side of the economy is well protected. So hence the manufacturing, both the exports as well as the domestic demand has held up, and hence manufacturing activity has been stronger than expected.
Take that, and a good point there on the absorption by the government, the OMC is a large part of that. Let's also talk about electricity. Electricity is generally mixed, but it's doing okay, like you said. I wanted to understand electricity consumption, electricity numbers. Are there good demand today to understand where the Indian market is and what the level, the health of the Indian market in the economy generally?
Some part of that is weather related. So, for example, we came off from a very, very strong heat wave that we saw from the month of April to into June, because the monsoon also was very weak in the month of June. So you would see some moderation. If you could pull up the electricity numbers. So it is more a reflection of the temperature fluctuations, because a large part of electricity electricity consumption is also consumer driven. So it'll also reflect in terms of the trend. I would not completely read, the trend. I wouldn't link the electricity consumption pattern to industrial activity. A large part is also consumer or individual household activity, which gets impacted by weather patterns, monsoon performance, etc. But if you look at other indicators, for example, freight, if you look at GST e-way bills, you look at railway numbers, you look at port shipping, all those numbers are indicating that production activity in the economy has held up. And even the Q1 GDP, which is to be released, our expectation is that it's going to be significantly stronger. We are at 7.4 for GDP for Q1. I won't be surprised if it's above that, because listed company performance in Q1 has been much stronger than expected, despite the fact that input costs had actually picked up.
Thanks. Yes. Thank you, Gaurav, for that, taking that, and thank you for taking the time to take us through those numbers. We have to cut in quickly to an Ministry of External Affairs briefing on the Nepal situation, on the floods in Nepal. Spokesperson Randhir Jaiswal is now speaking, and here's what he's saying.
वहाँ पर जो भी हो सकता है, नेपाल को भी हम लोग जो सहायता प्रदान कर सकते हैं उनके अनुरोध के हिसाब से वो भी हम कर रहे हैं. तो ये था नेपाल के ऊपर. बाकी अब सवाल साहिल.
So good afternoon, I'm Sahil Pandey from ENI News Agency. So we are seeing considerable assistance being rendered to Nepal. However, large number of Indians are still missing or feared dead. What is Government of India doing about their situation, sir? If you can brief us on that. Thank you.
So there are reports that the Nepalese government has actually refused the offers of assistance from many countries. What is the position vis-a-vis India? Do we have a free hand in sort of rendering the relief efforts? And secondly, I just wanted to check this. Would you have, you have mentioned the number of people who are non-contactable or missing, but is there any sort of evidence of death toll of the Indians? Have any bodies been recovered or anything like that? Thanks.
Keshav.
Thank you, spokesperson. Keshav Padmanabhan from the print. Yesterday, the Sri Lankan government announced, I think, $1 million in aid to Nepal. So I just wanted to check whether the Indian government is considering any such figure, or has any such figure been requested by Nepal so far? And the second question is on the special representative stock. You've had the 8-point consensus, and you find the mention of this early harvest deal again, which comes from last year, but there seems to be momentum on that. The 2005 agreement called for a packaged deal across the entire border, whereas now you're talking about an early harvest deal. So what really is the situation? If you can give us some understanding on that, I'd be grateful.
Uma?
Sir, I have two questions. Would India also be considering sending field hospitals to Nepal? And my second question is, do you have the number of the Indians who have been deported from the US and UK? And there have been reports that Saudi Arabia has made some changes in its employment policy and they are sending back Indians from there. So if you can give some details.
Sachin?
सर मैं सचिन बुधोलिया हिंदुस्तान समाचार से. सर काठमांडू से कुछ ऐसी रिपोर्ट्स आई हैं कि भारत ने NDRF की टीम को वहां पर रेस्क्यू ऑपरेशन में सहायता के लिए भेजने का ऑफर किया था, लेकिन
rescued by the Nepali army. And then our embassy arranged for them to come back. So I just came to meet them and of course shared our great relief that they were safe and sound, and learned from them about their experiences. They were taken to Kathmandu, then our embassy has arranged for them to come back to India by the flight which has just come in. So I want to say right now, we are still very much focused on contacting all the Indians who are dead. We believe little more than 300, exact number keeps going up and down. About 315 Indians are still not been contacted. Roughly about 85 Indians have been rescued from various places, including this group of 21 people who have just arrived, and they told me about exactly what happened to them, how the floods came, and they were very thankful, particularly to the Nepal army, which made this great effort to get them out of that very difficult place where they were. So right now our effort is on supporting Nepal in the relief, in the rescue of people. So even today I spoke in the morning to the Nepal foreign minister. So we have given them, a range of support offers. They are evaluating it. Whatever they feel is appropriate, they will pick up for their needs. I think right now the main thing is that in one place where there is a hydroelectric project, there could be possibility of people who may be in a tunnel. So we are sending a team to help with the who are experts in tunneling. Also, they need some Bailey bridges. So we are sending bridges. These are bridges which can be quickly put together along with a team. There may be some medical teams also going out there, and on other things from our side, if they require NDRF people to go, we will send them. We have given them that option. 2 planes of relief supplies have already gone out there. Third plane will be taking off today. So as you can see, this is for us right now, it's our number 1 priority, how to respond to this situation, how to support the relief efforts in Nepal, how to to help in the rescue and the return of our people, and also other nationals, Nepalis, for other foreigners who are out there. So I'm particularly glad that this group of people who really came through in a very extraordinary manner. They were talking to me about it, that they have come back safe and sound. So really it is something very moving experience. Thank you.
Back to you on this, as also specific question about Saudi Arabia that you asked. I don't have any detail, but let me come back to you. सचिन, जैसा कि मैंने बताया कि एनडीआरएफ की सहायता, एनडीआरएफ टीम की सहायता हम लोगों ने प्रदान करने की ये बात कही है नेपाल सरकार से, और अब उनके पक्ष में है कि क्या उसका जवाब आता है, तो उनकी तरफ से जब जवाब आएगा तो उस पर हम लोग कार्य करेंगे. Oh, sorry. Yeah. Okay. So, Keshav, coming to your question, this is regarding the 8-point consensus, the early harvest part. So, the recent round of HISA talks were held. We have come out with a press release. We gave you all the discussions that happened in these talks. A detailed consensus outcome which was negotiated between the 2 sides.
Well, there you have it. Both the MEA spokesperson as well as Mr. Jaishankar himself talking about the aid that India is doing and the work that India is doing to help the situation out in Nepal. Of course, they've gotten a group of people, 85 people. Mr. Jaishankar said that they've rescued and they've brought back to India. He says another 315 are being found now. They also said that they've offered NDRF troops and support, and now it's on Nepal whether they want to take it. A hydroelectric project that needs tunneling. They're sending experts and quick bridges as well. The death toll, of course, from Nepal's devastating floods has crossed 460, with nearly 1,500 people still missing across Nepal and Tibet. Nepal has reported the bulk of the casualties, while deaths have also been reported in Tibet. Among those still unaccounted for are 320 Indians as rescue teams race against time to reach cut-off areas. With the fresh threat of fresh flooding adding to this crisis, China has now suspended rescue operations along the Nepal border, warning of a fresh disaster risk. Authorities say a lake formed by debris is overflowing, raising fears of a possible lake burst and another surge of water downstream. Rescuers in the Trishuli area have been asked to move back by 1 kilometer, while people in vulnerable areas are being urged to move to safety. Our editor-in-chief at NDTV, Rahul Kaval, spoke to rescued pilgrims who described their terrifying escape from the floods. Let's listen to what they had to say to Rahul Kaval.
Let's try and get a word in from some of the women who were part of the group of 21 pilgrims from Tamil Nadu who were on their way to the Mansarovar for a darshan. Ma'am, I'll start with you. Could you tell our viewers on NDTV what happened at that moment when the water came down? What did you see?
We are a team of 60 persons. We came in by 3 buses. In front, one bus was going, and we are in the middle bus, and back at our backside, the bus was coming. Suddenly, we saw some huge smoke on the river side. We thought it was some bomb blast or crackers. Then only we realized it was a serious thing. It came with mud, sand and mud, and with water it came huge mud, and it broke all our glasses. Then only it was very serious. We thought it was very serious, and we escaped. We rushed to escape through the driver's seat. We climbed a little fountain, little steps over there, and there it was. Luckily, it was one camp, rescue camp. So we went there and we asked for rescue there.
And what did you see? Describe what you saw.
Actually, see, what it is the same, but how we have escaped, God is grace that all the 3 sides locked by the vehicles. Our vehicle locked by the right. The other side, right side, we have a unit. So we climbed one by one. Luckily door can open. So we have the lot down and we climbed the tree. Then only we got down. APJ camp was there. So we he gave us.
And that was our editor-in-chief Rahul Kaval, who's on the ground as well. As you can see at NDTV, we're all hands on deck trying to get you the latest from all perspectives, those that have been rescued, those that are stuck, and of course what actions the government is taking. We'll keep on that for a bit, but right now let's quickly move to another piece of breaking news that's coming in. The SEBI has approved Jio Platform's long look forward to IPO plan, clearing a key regulatory hurdle for what is expected to be one of India's biggest ever public issues. Jio Platforms had filed its draft papers for the IPO with SEBI in June, and now SEBI has finally given their approval to that. It's come through today, and that's something to look forward to. Now we'll see how and when Jio will come through and what its plans are on its IPO, and we keep tracking to that. And that's all the time we had today on this show today. We had to cut through because of the news on Nepal and with the MEA, but we'll keep you focused on that, and that's all we can give you on Profit 360 today. Our hearts go out to everybody in Nepal and of course in India, wishing everybody a happy Raksha Bandhan to everyone who celebrates. Stay tuned to NDTV Profit for more news and updates.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
One day Bharat. You know, a cooling towel है. ये positioned as a heat protective gear. I can feel the cooling. We have a couple of lakh workmen working at different sites in very harsh conditions, and I'm more than happy to get your product to all of you.
This is such a moment for him.
हमने ये बनाया adaptive. Wheelchair bound people के लिए independent mobility है.
इस तरीके से he is going to be the hero for many people.
Don't look at the disability, look at the magic of the ability that they have.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy now.
Sell immediately.
Hold it, boss. Buy now. Sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Hello and welcome to KYC. You're watching NDTV Profit with me, Sharad Dubey. This is the show where we get you interesting companies, recently listed companies, and also companies with the story and also a chance to make alpha for you and for your portfolio. But today there's a very interesting company I've got for you. It's of course recently listed company. Try to guess it. It's one of the largest private IPP players in India. Also, I'd like to give you one interesting hint. It's backed by Abu Dhabi Investment Authority. Stock was recently listed actually in this month itself, August 6th, and the stock has done fairly well. It's up 13% from its IPO price as well. Of course, it's an energy related stock I'm talking about, and the company in focus is Juniper Green Energy. This is the company which we are talking about, but the question remains is, why are we calling this company? Of course, the company has come out with its numbers. We'll try to understand that, and the moat and industry positioning, how actually things work out, or is it just like any other player? Also, another key query we'll be understanding is what led to a strong Q1, and will this actually sustain, because the numbers are very strong here. Also, the third queries would be the details of that 25-year power purchase agreement with SGVN and the margin guidance, at least on a consolidated basis. How does it look for the company? How does the company mitigate the risks for the industry? Because there's always a risk element attached to it. The BSS, Battery Energy Storage System, that is where we are seeing the outlook and the tendering projects as well. It's small, but Street is looking at that as well. Debt reduction plans and the target debt equity ratios. What is it? Because of these companies or this industry, the balance sheets are heavy. Lot of queries, the management will be answering all of them. But let's understand what the company actually does. Where is the alpha lying here, and the details about the company. It's NCR based IPP renewable energy power producer. Let's get into the details about it. They're focused on utility scale solar, wind and hybrid projects. I'll give you the detailed breakup about it also, but let's understand what this company is and where in the industry is the company fitting. FDRE, as we call it, firm renewable energy segment. So this is the dispatchable segment to talk about it, and this full form will come. The integrated capabilities come in, especially the entire project life cycle. So we'll try to understand the business model. First question from the management: long-term PPA with central and state government entities. So yes, there is stability in the revenue. Weighted average tariff is roughly 3 rupees 70 per unit, just keeping it very simple for you. And the total outstanding debt, this is a very important number, 13,000 plus crores coming in. Remember, the company has come out with its IPO, and maybe some proceeds were used to reduce the debt as well. Major revenue comes from 3 states, Maharashtra, Gujarat and Rajasthan. So that is what we are talking about. 23% of the project's portfolio is operational right now. That means the remaining portion work needs to be done. But before you start your analysis and watch the KYC on Juniper Green Energy, understand the full forms, and it's nothing to panic. It's very easy. Gigawatt peak, that's a power unit. Also, we have these important power units which you always keep hearing when you judge or analyze a power company. This is very simple: power purchase agreement. Also, 2 important things: WSH will be coming in the investor presentation if you're analyzing. It's very simple. It's nothing but wind, solar, hybrid. That's the short form. And FDRE, firm and dispatchable renewable energy. There is an angle to BESS as well, but this is something you should be knowing when we talk about this company and with the management as well. But what's the capacity? The operational capacity is approximately 2.5 gigawatt peak and 500 megawatt for BESS. Going ahead, the total portfolio is of course on the higher side as well. But from the capacities, the new order wins is something which caught my eye. This is the most important one: 25-year-old PPA with SGVN. The rate is at 4.25 rupees per unit. Next order win is SECI. This is a wind order of 870 megawatt and also a BSS order coming in. So orders wins is something which the company has been announcing post June 30th as well. And GUVNL wind tender also award has come in at roughly 3.5 rupees per unit. So this has been the recent order wins coming in from the company. But how does the portfolio mix actually stack up? And I have taken the technology part. Solar is largely, you could say, coming in at around 13%. Wind is on the lower side. Hybrid and your FDRE segment, that is where we are seeing much bigger action happening. So these are the two segments you should be tracking when it comes to the larger portfolio. Also, there are some industry triggers which you should be talking about. India's peak demand is expected to cross 340 gigawatt by FY31. So you can imagine so much of power sector and power ancillary segment is supposed to go up. The expected solar capacity addition would be roughly 52 gigawatts by FY31. So important industry triggers are definitely there. But I've done some detailed analysis on this newly listed company. Strong Q1 operational numbers, especially on the capacity addition, and that's where I'm going to give you the operational parameters, but you need to stay with me. It's going to come in some time. Second important reason what may work is the receivable outstanding days are reducing. This is really important for a company in this industry. 98% of their portfolio is secured via long-term PPS. Typically, this is around 20 to 25 years. That means the revenue visibility is there, so is the stability. Strong competitive bidding win rate, and that is where the conversions are good, and this is a very important operational feature for the company. Another good reason is the strategic diversification in both hybrid BSS solutions as well, and currently right now this is what giving the premium to most of the listings, IPOs and even listed players as well. But what may not work? Higher valuations versus peers. A little bit of analysis we have done. It's quite early. IPO pricing might have been a bit expensive, and when a new company comes, there's of course lack of analyst coverage, and that is why we feature these companies very early in KYC only for you. Execution risk is definitely there. This is the entire industry specific risk. Higher working capital requirement would be there, and at times payment delays also happen because the exposure is, in a concentrated manner, especially on the off-takers and the supplier base as well. So that is where the concern lies for the counter. But let's understand what the company is all about, and because of that we are going to get the KYC ratings for you. Remember, the company has been recently listed this month itself, so a lot of data would be coming post the Q1 numbers, and we have taken from the RHP as well. We have income statement, balance sheet, cash flow, but today we are taking operational parameters. And remember, whenever an IPO comes, the return ratios also get in stress because the capital base expands. So it's not fair to judge a company a lot of times on a case-to-case basis, at least on the return ratios. Coming back, shareholding street cred, take it with a pinch of salt. It's just 1 month for the IPO. Valuations we'll compare and get you all the peers. Which are the peers for this company and the outlook as well. What are the key numbers you should be watching out for? Remember, these type of companies have long-term vision, but short-term issues on the execution risk and payment always remains in this industry. But let's start income statement, how things have happened. Q1 numbers, we'll come to it, but the CAGR numbers are very strong. PAT numbers, it has been a little bit mixed, but the top line and the operational numbers have been very strong, and largely you should be looking at the EBITDA numbers when you judge a company of this sort. There are a lot of adjustments also. I'll simplify it for you. The margins is pretty good, and they have maintained that 95% margin mark also. So that shows a good momentum, in this counter. It's a stable company, to be honest, but is there any growth? That's the question to be asked. Q1 numbers have been really strong. Of course, the company has reported its highest EBITDA and revenue numbers as well. But let's talk about balance sheet. Balance sheet, a little bit of concern is there. Let's look at that amount. The expand company ज़्यादा करेगी, debt भी ज़्यादा लिया, roughly around 13,000 crore, and currently it's plus that. Now, what will be the debt reduction plan? And for a business like this, what is the debt equity ratio? What should be the optimal one? That's what we'll try to understand. But as of now, for this industry itself, I give a very neutral rating here because there's always going to be a need of large capital and even debt would be there. So it's a neutral rating for the balance sheet. But let's understand the cash flow. Companies expanding capacities. I mentioned to you earlier in a positive point that the working capital ratios are increasing, and when that happens, the cash flow goes up, and this is the number I'm talking about that has happened if you compare that with FY25 or even FY24. Interesting, right? For a company like this, the question is, when the cash flows will come, and the company has delivered it very strong. So I'm going to give this a strong thumbs up as well. But let's move on from the financials and talk about the operational parameters, how different it is. This is a capacity utilization factor. It's called CUF, and this is generation in terms of million units as well. These are the numbers. Largely they have improved and done well, and so largely I'm going to give this a strong thumbs up as well. The Q1 numbers, remember, good capacity addition was there, and that's what captured in a company like this. Shareholding, take it with a pinch of salt. There is of course Abu Dhabi Investment Authority invested in the company. 86% promoters are holding. That means they are going to be reducing their stake as per SEBI norms over the next 3 years by at least 11% here. But as of now, it's a neutral rating, nothing much to talk about here. Let's talk about street cred. It's just 1 month data. It hasn't been a very strong, massive IPO listing as other companies compared. A minor 8% listing gains. From IPO price, stock is up 13%, and since listing it's 4%. The company hasn't done much here. After Q1 numbers, slight sell-off pressure was definitely there, but it's very even Stevens as of now as well. Market is slowly trying to absorb. A lot of institutions and viewers in the retail are watching the show. Maybe you'll get an idea where does the company stand. So right now let's keep a neutral rating here. Valuations, well, I would say it's a neutral but slightly towards the expensive side for Juniper Green Energy. Acme Solar, NTPC is there. These are the FY26 EV EBITDA multiple which I have taken. So it looks like fairly valued to its peer, but on the higher side. Also compare that with Adani Green as well as API Green. It is slightly on the expensive side for both of them. So that's the concern coming in for the valuations, but take it with a pinch of salt. Let the earnings comes and let other peers also perform. These are long gestation business models. We should not take decisions on just 1 month basis. Let's talk about the outlook, and outlook is also neutral. I'm going to keep it. The numbers are important. You can note it down or take a screenshot of this conversation. BSS installation is roughly 4,500 megawatt by June 2027 and 10,000 by March 2028. Also, a couple of numbers to track would be 14,000 acres are available for the under construction areas and the awarded projects. So there is a significant way already the company needs to do, and already the utilization factors are slightly lower. More than 200 locations are available for wind turbine installation, and I still say it's a very nascent industry right now. So you take things with a pinch of salt. It's a long gestation business model. For a long-term investor, it'll be much more interesting to understand or track this sector. But as of now, I'm going to give this a neutral rating, especially because of execution risk as well, which is involved, and we have seen that. But let's do a revision. The company has done really well in income statement, cash flow, and the operational numbers. The inherent nature is such that the balance sheet will always have debt in this kind of a model. Also, short-term period when it comes to the shareholding and street credits, I've kept a kind of a neutral rating here. Valuations also neutral as of now, but slightly on the higher side. Outlook, long term is definitely the big story, the India growth story, the India's energy story, but short term execution questioning. So I'm going to keep a very neutral view for this company, around 5.5 out of 8 when it comes to Juniper Green Energy. Take things with a pinch of salt. It's just been 1 month the company has come for the IPO. Let it develop more, and maybe we get more perspective in the next KYC session as well. But our conversation continues, and we'll have Ankush Malik, the whole-time director and CEO at Juniper Green Energy, where he'll talk about his journey, the company's journey, and what lies ahead for the future as well. We are joined in by Ankush Malik, the whole-time director and CEO of Juniper Green Energy, recently listed company, and good Q1 numbers coming in. Mr. Malik, it's always a pleasure to have you with us. What's the actual moat for the company and the industry positioning? You're coming first time in KYC. Take it away.
So the business is, we are a renewable IPP, right? So we build projects, we then own them for life, right? And sell power to utilities under long-term PPAs. I think how we have differentiated ourselves is, so today in terms of overall capacity, we have more than 11 gigawatts of capacity in our pipeline, of which the operational capacity is around 2.5 gigawatts. There's another 3.6 gigawatts which is under construction where the PPAs have been signed. And there is another 5 gigawatts where we have won the tenders and we are awaiting PPAs, right? Now, along with this, we are also building, we also require 9 gigawatt hours of battery, right? Now, so the real differentiator for us, I think, has been in terms of our capabilities around having all three sources, which is wind, solar, and batteries, right? So what we have been able to do, we started off with solar. We then moved into wind around 2021, and we have earlier in our earlier avatar as Orange, we had done a lot of wind. We started that in 2022, and then in 2024 we moved into batteries as well, right? So having all three capabilities has allowed us to do these new age tenders, which are called FDREs, which is firm dispatch RE, and that plus hybrids form around 84% of our portfolio. So primarily, I think what happens is you get better returns on these projects because this is technology which is newer. So you can move because we have been able to move faster on these. We have been able to make returns which are better than the market. In terms of our moat, I think on a qualitative basis, it's about being able to move very fast, right, on ground.
And Ankush, what led to a strong Q1, and going ahead, what will be the guidance?
So yeah, I think the numbers are strong, but I think this will keep on happening primarily because if you look at the capacity addition, right? So the capacity addition that has happened. So last year FY25 we were 1170 megawatts of capacity. That capacity today sits at 2575, of which around 700 megawatts has come in the last 4-5 months, right? So what then happens is in the coming quarter, you will see the entire revenue EBITDA for this capacity also coming through. What happens is, in terms of guidance, right, what we are looking at is by end of FY, so by FY March 27, we are looking at a capacity of around 4 gigawatts. The battery capacity would be around, by March 27, should be around 2.5 gigawatt hour, goes up to 4.5 gigawatt hours by June 27. And then FY28, we are looking at a number of around 6 gigawatts plus 10 gigawatt hours of battery, right? So primarily because of this, you will see numbers as also growing very fast, right, on the revenue and the EBITDAs. The capacity that we're talking about, which is the 4 gigawatt capacity by March 27, the run rate EBITDA is around 2,700 crores.
And Ankush recently announced a 25-year PPA with SGVN. What are the key details and our order outlook here?
Right. So this PPA that we signed yesterday is a 50 megawatt PPA, which is a 25-year PPA. But our business model, all our projects actually have, or 98% of our capacity is tied up under similar PPAs, right? So these are all 25-year PPAs. So the good part is once you see our EBITDAs coming through, right? So whatever EBITDA has come through, that will essentially remain throughout for the next 25 years, right? Because the PPAs are already signed, our product is already sold. What happens is we have these stable cash flows which remain, and the growth comes in from new capacity, right? So that's the benefit of having a 25-year PPA, right? It's a very stable cash flow, so you'll not see EBITDAs going suddenly going down, right? So there is some variation due to weather, but that variation remains between plus minus 5%, right? But whatever you see today in that has come from commissioned capacity, that will stay not forever, but that will stay for the next 25 years.
And Ankush, what would be the margin guidance for FY25? Any sustainable rates going ahead?
See, in terms of our EBITDA margins, you would have seen that this year or this quarter, this number is around 90% or 90 to 91%. We believe in our business, this is where our EBITDA margins will stay. So 90 to 91% is the EBITDA margin that we are looking at over a longer term period. It has improved previously from 86%, and that is again primarily because the size was much lower, right? So we are 1100 megawatts. Now we are a 2.5 gigawatt company. We largely see the EBITDA margins being stabilized around these numbers going forward.
See, there are a lot of risks also, concentration risks, execution risk in the industry also. How does your company mitigate that?
In terms of execution, I think execution risk, especially on renewables, is around two things majorly. It is land and grid connections, right? So once the land acquisition is done and you have a grid connection, the project completion or the project construction is pretty standard, right? maybe a little more tedious on wind, but on solar it's pretty not a major risk, right? So what we have been able to do is we have been able to move early on grid connections and land, right? So today we have grid connections for our entire capacity that is there in our pipeline, right? So for the entire 11 gigawatts, we have grid connections. We have another 4.5 gigawatt of grid connections further. And same is the case for land, right? So land, we have already acquired 14,000 acres of land, which is available for our under construction and pipeline projects. So I think, yeah, so primarily the way to mitigate these risks is to move early, right? Have sites which are developed by the time, so that by the time you get into construction, these are all those issues are sorted. And that's what we try to do.
All right, and Ankush, speaking of BESS, that is Battery Energy Storage Systems, how is that growth looking like for your company?
So on the BESS space, right, I think BESS has primarily come in over the last 2.5 years. I think where we sit on BESS is providing it as a full solution along with our renewables, because then it allows us to provide solutions which cannot be provided by a lot of entities, right? Allows us to then have higher margins with respect to competition. There are now standalone BESS tenders that have come about over the last 1.5 years. But there we have still not participated because the returns are not significant, right? What has happened is getting bid as a transmission element where the risks are pretty low. A lot of new people have entered. So we're not looking at a standalone BESS to that extent, given the returns that are available. We're looking at it as a part of our overall renewable solution, which has allowed us to add returns to our renewable portfolio. So that's how we are looking at BESS.
All right, thanks a lot, Ankush, for your views on the company recently listed, coming first time for the KYC and giving interesting industry views as well. It's always a pleasure to talk to you. So there was an interesting company debuting for the first time in KYC, Juniper Green Energy. But is there some execution risk at play, or India's growth story, the long term for the renewable energy remains strong? For interesting companies like this and much more, including the newly listed ones, stay tuned to NDTV Profit, and yes, keep watching KYC.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Vande Bharat. You know, a cooling towel है. ये positioned as a heat protective gear. I can feel the cooling. We have a couple of lakh workmen working at different sites in very harsh conditions, and I'm more than happy to get your product to all of you. This is such a moment for him. हमने ये बनाया adaptive. Wheelchair bound people के लिए independent mobility है.
इस तरीके से he is going to be the hero for many people.
Don't look at the disability, look at the magic of the ability that they have.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
Buy now.
Sell immediately.
Hold it, boss.
Buy now.
Sell. Hold.
Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Your first move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
I decode the global pulse, shaping the market mood.
I bring insights that help you make decisions that matter.
Insight by insight, call by call. That's how we give you a head start to the day's trade.
So get ready with us every morning before the opening bell on India Market Open.
At NDTV Profit, every day is a new day, buzzing with news, information, analysis. A lot of it. That is why we separate the news that is urgent and important for you from what is not. News that influences outcomes across markets, policy, and the corridors of power. At 6 p.m., we turn our attention to the critical conversations that matter. I'm Vikram Oza, bringing you the big question, Monday to Thursday at 6 p.m.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300
You've all checked your credit scores. We've had conversations about them. They're aimed at telling a potential lender how creditworthy you are. It is something that determines whether you should be given a loan and what interest you will be charged with. Now, it isn't a good thing if your score is too low. That's pretty obvious. But how do you prevent it from getting there? Is there a score that you can use to take preventive steps? And what do you do if you find that you're stuck in a debt trap? Is there a possibility of a debt resolution? How does that work? To talk about this very important topic, I'm joined today on MoneyWise by Ritesh Srivastav, who's the founder of Freed. Ritesh, thanks so much for taking the time.
Thank you, Alex. Thanks for having me.
So,
pleasure.
It's a fascinating concept, and from an academic standpoint, it is, right? But for somebody going through a painful situation where they're stuck in a debt trap, it's the worst possible situation to be with, because you feel like you're stuck in that typical rock in a hard place kind of a situation. You feel like there is no way out.
Absolutely, and I always believe that it's a very emotional journey for a borrower. I mean, you are overwhelmed with thoughts of desperation, stress, frustration, anger, anxiety. It's a pretty tough spot to be in for a borrower with a stress debt.
Yeah. And the thing is, I've heard these stories and of course the Reserve Bank has come out with rules about how collection agents should behave, and it's not always been a pretty picture, Ritesh, because in the past you've had people that have blamed lenders. Why did you give me the loan in the first place? I wouldn't have defaulted on my loan if you hadn't given me the loan. So there is a tendency to blame the system as it were.
I would not, just say it's a blame on a lender's part. I mean, if we look at it, and you started the show with the introduction where I don't think on the borrower's side there is any indicator whether I should be getting that loan or I should be taking on that loan or not, right? That's really the problem, right? I mean, while since time immemorial we've been looking at credit score,
yes,
and we have been invariably linking our loan eligibility with the credit score. And we're not here to, I'm not challenging the credit score thesis, right? I mean, it serves a different purpose. It serves the need of the lenders, whether you are a lendable entity or not, right? I think it's time where, irresponsible credit can be prevented, and it's best prevented by the borrowers themselves. Once you know whether this EMI is affordable for you or not, whether this loan is survivable. So I think there is a need for a metric like that or a tool like that for borrowers to know. So why walk in a trap with eyes wide open, right?
Which is something that you launched just last weekend, and this is an EMI score, as you're calling it. But I want to get into the details of what you measure, because maybe it's something that somebody can put together if they're sitting over this weekend and they're deciding to put all of these points together. And of course, they can use the service that you offer. But if I were to sit with a notepad and a pen on an Excel sheet, how do I put down all the metrics that would go into this score?
Absolutely. So I think the first and the foremost is look at your income, look at your expenses, right? Look at anything that you're planning to add on. And then also work on what I call a income shock. What if the income that you are relying on, right, to pay your obligations, right, if that doesn't exist, or that suddenly disappears for a month or two, right? Do you have that resilience layer or that safety net to be able to afford those EMIs, right? And we have different ways to look at this, right? One, you look at your take-home income, right? Look at the existing EMI obligations that you have, and very importantly, subtract your living expenses from there, and then see what's the cushion you're left with, right? That's your monthly income that you're getting, right? Look at what's the savings that you have built, right? So before you take on any new EMI obligation, as attractive, as lucrative it may sound, no EMI and discount EMI and all, right? Just do that math, right? I would say that, your income to your EMI obligations, right? If you're below 40%, right, you're in a safe zone. The moment you go 40 to 60, and just for the context of your viewers, if you're earning 50,000 rupees a month, and if your EMI obligations are 20,000 and below, you're fine, right? The moment you go 20 to 30, you start to enter or tread into that amber zone, right? And 30 and beyond, obviously you're in a very difficult spot, right? So I think before taking on any new EMI or any new loan, just doing that math would make a lot of sense.
So you deal with a lot of borrowers that are across the spectrum, of course, but you help people that have crossed into the red territory and they've essentially defaulted. How does a default take place? And is it behavioral in nature, in that are certain people more likely, do they have the proclivity to default on loans?
So I personally look at being a liability management or a loan relief platform. We do not judge a borrower with his propensity to pay or default, because principally I believe nobody intends to default, right? And based on, as to address your behavior point, right? I think while, yes, there may be certain set of borrowers who are over borrowing because they're riding high on their aspirational curve, and they may end up in impulsive purchases. We have seen iPhones, 70% of iPhones being sold on EMIs and whatnot, right? 40% of the personal loans taken are for vacations, right? So that is a little behavior issue that one could say that you are, you are borrowing from your future, right? And to live in the past. And we are unfortunately seeing that happen quite a bit. But the other critical point, Alex, I would like to bring about is, there is life that happens to people. We all know about job losses that are happening. We all know about a medical emergency that could happen to an individual, a new family addition, a job loss, a pay cut. And these are the factors as well that go into your ability to service a loan that you have taken, right? So if it is affordable, survivable, you can continue. But what if you don't have that safety net? What if you don't have that income shock absorption built in, right? That's what, you slip into, right? And what we have seen typically is a stress shows up much earlier before actually a default happens, right? A stress could show up 6 months ago. So why a default happening 6 months later? That will answer your question in terms of the proclivity of, a person defaulting.
People do their best to try and repay.
Exactly.
Right? Because, and look, it's been said in the past, I've read about this, people have talked about it, bankers have talked about the fact that Indian borrowers stand out. And of course, as you pointed out, nobody really sets out to default.
Right.
But even in that cohort, Indian borrowers are said to be more creditworthy or more desirous of repaying their loans than others. They
Absolutely.
will do what it takes to make the ends meet and then pay back their loans.
Absolutely. And perfect. I completely agree with you, concur with you here, because see, as a society, Alex, I feel we have destigmatized debt. Okay. But we still are not openly talking about debt stress. We're not talking about the sleepless nights. We're not talking about an individual, a breadwinner in the family, trying his best to, come up with the goods in terms of,
or her best, yeah.
Exactly, or her best, right? And therefore, there is a social stigma attached to being in delinquency or default as well, right? So that adds to the point that, you will do your best before you actually you slip into a delinquency, right?
Okay.
Yeah.
Okay. So let's talk about the cycle. And usually this ends up with being a debt trap, because it's not necessarily one loan that is defaulted. The tendency is when that takes place, you'll scramble for funds. You probably take a personal loan. If there's a consumer durable loan that goes, or there's an auto loan that goes, then there is a personal loan that is taken. There is a gold loan that is taken. There are certain other liabilities that are taken on. It's usually a person who has multiple liabilities and not just one. Is that the case?
Absolutely. And what we're seeing on our platform is an average borrower coming in with the delinquency is coming with 6 lines of credit, right?
6 lines
Six
of
lines
credit.
on an average. And a typical journey, a psychology of a user in debt is you start out with a creme de la creme personal loan or a credit card, right? And once you're, once there is a squeeze in your finances, you end up taking another personal loan. And you keep going down the pyramid, right? And down the pyramid is typically in terms of the interest rates being offered to a borrower, and obviously the collection pressure that one goes through, right? And also the tenure of the loans keep reducing as you keep going down the pyramid, right? And a typical borrower who's coming to us in delinquency has tried all avenues before, a default actually shows up.
And usually, in your experience, and this might just be indicative of what people experience, if anything, it might actually be worse. So what happens is when you default on a loan, the interest keeps accruing.
Absolutely.
And so therefore, if you're saying 6 months is the time frame that they tried to do whatever they can, they defaulted 6 months back, and then they've come to you after 6 months and they've already got a problem that is too big for them to solve, what is the kind of damages that is done in that time frame?
A lot of damage. I mean, emotional, financial.
I'm just talking about the interest cost.
I mean, it's disproportionate. I mean, a credit card compounds at a 48% APR with penalties and late charges added. Some of the personal loans, some of these MFI loans, small ticket size personal loans could, you could be seeing almost your obligations doubling by the time, the borrowers are approaching us, right? So it is pretty predatory down the pyramid. And for a borrower to even explain
that. Why do you say that? Because see, everybody on this who watches this program at least knows about the way that credit card debt is priced, and the interests that are charged. Right, you're talking about 3.5% per month, effectively, right? If I'm not mistaken.
It's a 48% APR, so you can do the maths. It's almost 4%.
It's 4%. It's 4% per month, and that's practically what a loan shark will charge you. A loan shark might go upwards of 5, 7, 10% per month. I've seen this, right? So it's actually pretty bad. But you're talking about a situation where this is it needs to be avoided at all costs. But you're talking about people that use this and they do this when they have no choice.
Yeah, because I mean, what really drives them to do this is loan stacking, what we call, right? So you're left with no money to pay the EMIs or pay beyond minimum payments on a credit card. So you're revolving your card already, right? And that's a good decent amount, 4.5% of the outstanding, right? So by the time you are already in that zone, you're just worrying about how do I take care of my 6 due dates that I have of these loans that I've taken. And that's where you're taking a loan to repay another one. Typically, robbing from Peter to pay Paul, right? Until you're absolutely non-lendable, right? That's when the stress and the delinquency and the collection calls and the music starts, right? On the point of, how bad these APR can be bottom of the pyramid, right? So Alex, I have seen 900%.
I'm sorry, what? 900%?
I've seen 900% APR as well.
In a loan that is sanctioned.
In a loan that is sanctioned.
Not something that is under the table.
In a loan that's sanctioned.
900%?
Yes, by approved lenders as well. Now,
how is that even legal?
So there's no policy as such right now, right, which caps the interest rate or the APR. So typically how these loans are offered is you're talking about a 75% APR monthly, correct? I mean, if you do the math, right? Now, if you're offered a loan of 10,000 rupees, you will have to repay in 30 days 17,500. And that's very common. That's very common. And that's a MFI typical loan, right?
Wow.
With a short tenure, because APR is annual, right? But if you saturize this loan in 30 days, right? And there are weekly loans as well.
When you say this is very common, is it common in urban India, or is this something that you would see more?
Well, you'll be surprised with the penetration of fintechs and these loans in India, right? Tier 2, Tier 3, you name it. It's all digitally acquired customers, right? So, and once it's digital,
and these are unsecured loans.
These are all unsecured. Yeah.
And by the way, when I say unsecured, there is no collateral. When you buy a house and you take a loan on the house, it's called a mortgage because you essentially get a loan that is a percentage of the value of the house, right? And so therefore, if you default on the loan, the bank can come and say, hey, you know what? Your house has been placed as collateral against this loan, so you're going to have to surrender the house. When you say unsecured, there is no security. And so therefore, that is when collection agents come to your doorstep and say, hey, give me my money back.
Yes.
Which is scary.
Yes, it can get pretty scary.
Okay, so how do you resolve this? This is why I want to spend a bulk of this conversation talking about how a resolution takes place.
Sure.
And knowing about this is important because you shouldn't wait for the 6th month. You should try and get a resolution done in the 1st month or the 2nd month at the most. And so it's important to talk about this. How does a resolution take place?
So a resolution process is basically where a lender agrees to take a partial payment of the loan and, just and close the loan, right? That's basically a process for you viewers. It's called a settlement. It's a one-time settlement that
How
a lender
do you
offers.
undertake this?
So, it's typically a lender who has to agree to a settlement, right? For a lakh rupees of loan, a lender would typically agree to a 45,000 or a 50,000 and say, all right.
A lakh of rupees, you're talking about interest plus principal that is due, right?
Exactly. It's the amount that the borrower owes as of today, because there's no differentiation of, this is my principal, this is my interest. Typically, see, the journey of the collections is never with the lender. Okay, the whole process of collection is outsourced, right? And it's just one amount that the collection agency has to collect, which is inclusive of principal, interest, late fee charges, all included, right? So typically at Freed, if a loan is enrolled for a 100,000 or 1 lakh, right? And we are settling with the lenders on behalf of thousands of borrowers, right, who enroll with us. What we typically see is a 45%, resolution or settlement, where a lender is willing to take a 55% haircut. And why is the lender willing to take a haircut? Is, Alex, simple math. Beyond an NPA, 90 days of consecutive default, right? The collection efficiency drastically drops. You're looking at a 15-20%.
And beyond that,
there's a write-off at 6 months period.
Yeah.
And then there is an asset reconstruction company that will buy your bad debt, which goes for pennies to a dollar, right? So mathematically, it makes a lot of sense for a lender to, offer a 45% resolution and get almost a 3x outcome that he would typically get from a collection agency, and not to pay Freed at all, because we don't charge the lenders. We work with the borrowers.
But you take a portion from
we take a portion of our commercial outcomes are linked to successful settlements for the borrowers.
But hypothetically, if it's me, I have an outstanding of 1 lakh rupees. You're helping me out. You're saying 45% is what the
goes to the lender, right?
So
and typically Freed would charge 10 to 15%.
10 to 15% roughly. So that's 10 to 15,000 rupees.
So a borrower comes out net 55 to 60